Stocks in the Asia Pacific are trading higher following a strong handover from Wall Street. The GIFT Nifty is also indicating a gap up opening for the Indian markets. Crude prices rebound after 2 days of losses. Brent crude is back above $80 a barrel as recession fears ease. Addressing the nation on Independence Day, Prime Minister Narendra Modi makes a fresh pitch for one nation, one election, says India is in its golden era and can realize its dream of being Viksit Bharat by 2047 if 140 crore Indians work together. The Prime Minister also calls for speedy probes in cases of crime against women. And Ola Electric at its flagship Sankalp 2024 event announces its foray into electric motorcycles with 3 models under the Roadster range. The company also releases Bharat, an indigenous battery cell, to further fuel its EV aspirations. It's the final trading day of the week, at least for those who have not already embarked on the long weekend. You're watching Power Breakfast here on CNBC TV18 in the Mumbai News Center. I'm Hormuz Patakia. Let's first take a look at how the Asian markets are faring, and it's a very positive start across the Asian screen. The Taiwanese index, as you can see, is up over 2%. The Hang Seng, which has been an underperformer this week, is also trading with gains of 1.5%, but the actual gains are coming from Japan, and that is where the indices are leading the gains across the Asia Pacific. The Nikkei is up over 3% as we speak early this morning. The South Korean indices, the Kospi, is also trading with gains of over 2%. So it's green across the screen in Asia, led by Japan, and the other indices are also pitching in with their handy contributions. Pull up the GIFT Nifty as well, and that too is indicating a gap up start. Now 176 points higher is what the implied open is suggesting for our own markets. But then again, the question is the same. The Nifty is set to open around that 24,350 mark, which has been a resistance all through the week. The question is, will this gap up sustain as the trading session goes by? Now, all of these positive gains are coming in on the back of a very strong handover from Wall Street, and Thursday's trading session was also a green across the screen for the benchmark indices there. The Dow Jones added over 550 points back above the mark of 40,000, while the S&P 500 also gained 1.6%. The tech-heavy Nasdaq finished with gains of nearly 2.5%. Now, both the S&P 500 and the Nasdaq ended higher for the 6th day in a row. Now, the market's rally was aided by encouraging labor and consumer data that eased recession worries. Now, the July CPI data came in line with expectations. The consumer prices increased 2.9% year on year, which is down from 3% in June, and it saw the lowest reading since March of 2021. Now, staying with the US CPI data, let's listen into some reactions that are coming in from some important market voices. From former Federal Reserve Vice Chairman Aaron Blinder said that the CPI data signals that an emergency cut is not warranted anymore from the US Federal Reserve.
So I think an emergency cut at this, first of all, it's not warranted. It's not like the economy is in a nosedive or anything. It's still in quite good shape. Secondly, it would suggest panic at the Federal Reserve. They're not panicky. I don't know why they would want to give a false signal that we're panicky. I do think they're a little bit late, but I would emphasize a little bit late. You know, if I had my druthers, which of course I don't, they'd have cut 25 basis points in the July meeting. They didn't do that. So they owe us that, and they're going to deliver it pretty soon, I think.
Now, the former Federal Reserve Board Governor, Frederick Mishkin, also believes that the Federal Reserve should have cut rates in July, but emphasizes that inflation is coming down as per the central bank's expectations. Listen in.
The glide path is actually pretty good in terms of what they want. Inflation is sort of coming down along the lines they want to for it to go down to 2% within a reasonable period of time. You know, not immediately, but certainly a year or so. And so that's all good news. There's been a slight softening in the labor markets, and actually I think that's fine. The key issue for them might have been the following: that when you make a mistake in terms of being too late to tighten, you want to make sure you show credibility. So it might bias you towards not cutting as soon as you might otherwise would have. But I think there was actually a pretty strong case for cutting at this last meeting, but not a big deal that they didn't. And I think that they're going to be surely cutting at the next meeting because that's really called for.
Let us now get you the final update on our global market wrap this morning. The European markets also ended Thursday's session higher, maintaining the week's positive momentum as investors digested a cooler than expected inflation readings in the US and the UK. Now, the British FTSE ended with gains of around 0.8% as investors digested the UK inflation data that rose 2.2% for the month of July, which was slightly below expectations. Now, meanwhile, the French CAC also closed with gains of over 1%, and the German DAX ended nearly 300 points in the green. So positive global cues coming in from everywhere, be it the US, Europe, as well as the Asia Pacific. And that's all the global market action that we have. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and how the stocks that are likely to be in the news this morning. First up, Vamakshi is joining in to get us all the market cues that we need to watch out for. Vamakshi, good morning. How's the setup looking like?
Well, good morning, Hormaz. When we look at Wednesday, markets started slightly on a positive note. Nifty traded within a narrow band of 24,200 to 24,100 and ultimately closed flat at 24,144 levels. But the selling pressure was prominent in the broader indices. They continue to underperform Nifty. Nifty mid-cap slipped by almost, Nifty mid-cap as well as small-cap slipped by around 0.6%. IT index, on the other hand, bucked this trend. It was up nearly 1.5%, and this large gains was largely led by TCS as well as HCL Tech. US markets on Wednesday also climbed higher after US CPI came in at 2.9%, the lowest level seen since 2021. It was, of course, a holiday yesterday, but most of the global markets were operational yesterday. Asia Pacific markets largely rose after Japan's GDP growth beat expectations. China also reported mixed economic data. Europe, like you rightly mentioned, closed higher, maintained the week's positive momentum. We had stocks, DAX as well as CAC soaring in trade over 1%. The US indices also advanced as strong retail sales and labor market data soothed recession fears, and as a result, all of the US indices were up in trade. So overall, it's a positive handover coming in from the global markets. But what to watch out for today? We will be watching out for Ola Electric, Glenmark Pharma. They will be reacting to their numbers. Vedanta and Hinsic will be some other counters that will be on our radar, and that is because Vedanta has increased the size of its OFS and fixed the floor price for Hinsic shares at 486 per share. And given this positive handover coming in from the global markets, we're seeing a positive start for the Indian markets.
Positive start indeed is what the Gift Nifty is suggesting. Vamakshi, thanks a lot for that update. Now let me take you through some of the stocks that you need to keep an eye out for other than those that Vamakshi mentioned, and she was highlighting Vedanta and Hindustan Zinc. Both of them will be in focus because Vedanta has now increased the OFS size of Hindustan Zinc. They earlier planned to sell around 11 crore shares or 2.6% of the total equity. They have now increased that. Now they plan on selling around 13.3 crore shares, and that amounts to around 3.17% of the total equity. The floor price, they have fixed it at 486 rupees a share, which is a 15% discount to Wednesday's closing price. The offer for sale will be open for non-retail investors today and for retail investors on Monday. So we'll keep an eye out on both these stocks. Ola Electric reported numbers. Now these were the first numbers that the company reported after listing. The net loss widened to 347 crore compared to last year. The revenues were up 32%. The EBITDA loss also almost at similar levels, 205 crores compared to a loss of 218 crore last year. But they made some new launches yesterday on the Independence Day holiday, and also they have received some positive brokerage commentary this morning. We'll talk about that in just a bit. SpiceJet also reported numbers. The balance sheet shows a net profit, but that is all courtesy because of an other income component, because if you exclude the other income, the airline would have reported a net loss of 222 crore. But more than the numbers, it is the concerns that the airline's auditors have flagged off, and that they've said that the airline is in non-compliance with various laws and regulations, and the losses that they have accumulated has completely eroded the airline's net worth. What they also say is that their current liabilities are now exceeding their assets by well over 6,000 crores, and all of this has cast a significant doubt over the company's ability to continue as a going concern. So some serious observations made by the auditors of SpiceJet. Glenmark was the other one that reported results. The US sales were in line with expectations. The India business, the European business also saw double-digit growth, but the margins were the key positive here. 18.1% is 6-quarter high margins for Glenmark Pharma. We'll keep an eye out on that as well. Earnings reactions will also come in from stocks like Madras Fertilizers, which returned to profitability, Polyplex Corporation, which also returned to profitability compared to last year, and KNR Constructions as well, that will be reacting to results. And a lot of X dates today for Glenmark Gland Pharma for their dividend, Page Industries for their dividend as well, and 3 record dates for their share buybacks of Cera Sanitaryware, Dhanuka Agritech and Savita Oil Technology. So we'll keep an eye out on all of these names as we go into the final trading day of the week. And over to Nigel now, who's joining in with cues from the F&O space. Nigel, good to have you back on the show. What's the setup looking like on the F&O side?
Well, morning, Hormuz. You're saying that the overnight handover is good, so let's hope for a good Friday, because otherwise the markets have been a little bit brittle, a little bit flattish. Even the overnight cues, when we get a positive one, we see some bit of a sell-off from the top. And even Wednesday's trading session, well, it was as flat as can be. So given the kind of global backdrop, I'm hoping that today actually could be a rather good session. The GIFT Nifty is suggesting a 170-point gap up. I think at some point of time you get an intraday dip, maybe in the first hour itself. So participating on the upside and looking to buy the dips should continue. What about the FI positioning? Well, they moved net short again. The net short positions at around 30,000 contracts or thereabouts. As I always say, I like a net short market, and with the FI's net short, that gives you reason to believe there could be some kind of short covering. The clients, they have swung things around. Just maybe 10 sessions or so ago, they were net short with close to around 50,000 contracts. Now the net long positioning has moved to around 90,000 contracts. So big swing is what we've seen on that front. Moving to the options data, now the PCR has moved back up to around 1.1. The number of calls, though, getting written are quite aggressive. 24,200 call. I'll keep an eye on that one, because there was call writing going, into this holiday. So that's going to be important, because you see some unwinding out there. That's telling you that the bears are getting a little bit nervous. So there has been writing at 24,200, 24,400. But on the downside, the 24,000 put has seen a fair bit of addition. The Nifty is now trading in the middle of the 20 as well as the 50 DMA. We're closer to the lower end of the range. So in case you see a bit of a bounce, you'll want it to get closer to around the 20 DMA, which is going to be important. For the day, going by the options data, 24,350, 24,400. That's going to be the crucial resistance mark, and the bulls will want to end closer around there. Support, though, as at around the 24,000 mark for numerous factors. That's the number where the 50 DMA is also around. The Nifty Bank, well, that ended closer to around the 100 DMA. You'll want it to defend from here and show some kind of strength. So we'll keep an eye on that. Given that the global backdrop is good, and maybe in fact those fears of recession have been pushed back a little bit, 2 sectors I'm going to track. One is the IT space. Nasdaq has had a blowout rally in the last few sessions, and the metal index, which has been an underperformer. If recession fears are a little bit subduing, then maybe in fact the metal index could participate. So keep an eye on that.
IT and metals, the 2 sectors to watch out for today. Nigel, thanks a lot for that update. Time for a short break. Up next, we get you all the key takeaways from Prime Minister Narendra Modi's Independence Day speech. Stay tuned. Back on the other side with the highlights.
के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these 3 put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
बांग्लादेश में जो कुछ भी हुआ है उसको लेकर पड़ोसी देश के नाम
Back with us here on Power Breakfast. Now, ease of living for all and a Viksit Bharat by 2047. Now, these were the big focuses from Prime Minister Narendra Modi's first independence speech in his third term. He urged all levels of government from Panchayat to the central government to work on improving on the ease of living at a mission mode. Here are some key highlights of his speech.
140 करोड़ मेरे परिवारजन अगर संकल्प लेकर के चल पड़ते हैं, एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं, तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं। हमारा जो मध्यम वर्गीय परिवार है, मध्यम वर्गीय परिवार को क्वालिटी ऑफ लाइफ वो स्वाभाविक उसकी अपेक्षा रहती है। वो देश के लिए बहुत देता है, तो देश का भी दायित्व है कि उसकी जो क्वालिटी ऑफ लाइफ में जो उसकी अपेक्षाएं हैं, सरकार की कठिनाइयों से मुक्ति की उसकी जो अपेक्षाएं हैं, उसको पूर्ण करने के लिए हम निरंतर प्रयास करते हैं। और मैंने तो सपना देखा है कि 2047 जब विकसित भारत का सपना होगा तो उसकी एक इकाई ये भी होगी कि सामान्य मानव के जीवन में सरकार की दखलें कम हो, जहां सरकार की जरूरत हो वहां अभाव न हो, और जहां सरकार की बेकारण प्रभाव भी न हो, इस प्रकार की व्यवस्था पर हम प्रतिबद्ध हैं।
Moving on then, global investor and author Ruchir Sharma feels that India is the last bull market of the world that is still raging. Speaking at the CNBC TV18 town hall, he lauded the strength of this market. Listen to what he had to say.
There really has been no bull market in the world this decade like India. This is a unique bull market unto itself because also of the breadth of it.
Yeah.
Like in the US, you've had a bull market
largely driven by tech.
Concentrated by tech and a few companies at the top. In India's case, it's been extremely broad, like in terms of what's happened. You know, there are various sectors that have, virtually every sector has participated in this bull market. So it's a very unique bull market that we have seen in India. It's the like only bull market in the world, I would say today, literally, the true bull market.
Now on to some launches then. Ola announced the company's foray into the electric motorcycle segment with the launch of the Roadster series of motorcycles. Ola Electric's bike portfolio under this range comprises of 3 models with prices starting from 75,000 rupees. Now at the company's annual flagship event Sankalp 2024, Ola founder Bhavesh Agarwal also unveiled the Bharat battery cell, an indigenous 4,680 cell created by an Ola Electric in an effort to further boost India's have EV aspirations. We'll slip into a short break now. Up next, we get you the latest updates on the Kolkata rape and murder case. Stay tuned. Back on the other side.
चिंता होना, मैं इसको समझ सकता हूं। मैं आशा करता हूं कि वहां पर हालात जल्द ही सामान्य होंगे। खास करके 140 करोड़ देशवासियों की चिंता कि वहां हिंदू, वहां के अल्पसंख्यक, उस समुदाय की सुरक्षा सुनिश्चित हो। भारत हमेशा चाहता है कि हमारे पड़ोसी देश सुख और शांति के मार्ग पर चले। शांति के प्रति हमारा कमिटमेंट है, हमारे संस्कार है। हम आने वाले दिनों में बांग्लादेश की विकास यात्रा में हमेशा हमारा शुभचिंतन ही रहेगा, क्योंकि हम मानव जाति की भलाई सोचने वाले लोग हैं। भारत के लिए गोल्डन एरा है। वैश्विक परिस्थितियों की तुलना में भी देखें, ये गोल्डन एरा है। ये हमारा स्वर्णिम कालखंड है। मेरे प्यारे देशवासियों, ये अवसर हमें जाने नहीं देना है। ये मौका हमें जाने नहीं देना चाहिए, और इसी मौके को पकड़ करके अपने सपने और संकल्पों को लेकर के चल पड़ेंगे तो हम देश की स्वर्णिम भारत की जो अपेक्षा और हमें विकसित भारत का 2047 का लक्ष्य हम पूरा करके रहेंगे।
Welcome back. Now, the CBI questioned 5 officials of the R.G. Kar Medical College and Hospital yesterday in connection with the gruesome rape and murder of a trainee doctor. The team also met the family of the victim and recorded their statements. Although the police had arrested the key suspect within hours of the crime, the CBI is looking into the possibility of involvement of more than one person. Meanwhile, the Indian Medical Association has called for a nationwide strike across all hospitals for 24 hours starting 6 a.m. on Saturday. While the emergency services will remain functional, the association has urged all the members to keep OPD services and elective procedures shut. And that's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Today is the third day and the Resident Doctors Association protest is continuing. Remember, on the first day, FODA had in fact called for a strike in several hospitals in the national capital. Around 11 such government hospitals in the national capital were undergoing strike. Now, last night, after FODA representatives met the Union Health Minister JP Nadda, an assurance was given to him, given to them that the entire security system for the healthcare staff will be in fact boosted up and they will in fact be stepped up. Now what we are seeing is that the strike was called off by FODA, but today Pharma has decided that they will continue with their protest. So behind me are the representatives from Resident Doctor Association and also from Pharma that are continuing with their protest. And remember, the demand right now is, of course, yesterday the demand was that there should be CBI investigation after the Kolkata High Court has ordered that the matter should in fact be taken by the CBI. That demand has in fact been fulfilled, but right now the focus of these resident doctors who are standing here in solidarity and in protest is that there needs to be a Central Protection Act that needs to be implemented. So that is why this protest is in fact happening at RML, and this is not just the scene at RML Hospital but in AIMS and several such government hospitals in the national capital are going through the similar sort of strike, and under this strike the elective services have been affected, whereas the emergency services is running smoothly.
हमारा जो मध्यम वर्गीय परिवार है, मध्यम वर्गीय परिवार को क्वालिटी ऑफ लाइफ वो स्वाभाविक उसकी अपेक्षा रहती है, वो देश के लिए बहुत देता है, तो देश का भी दायित्व है कि उसकी जो क्वालिटी ऑफ लाइफ पे जो उसकी अपेक्षाएं हैं, सरकार की कठिनाइयों से मुक्ति की उसकी जो अपेक्षाएं हैं, उसको पूर्ण करने के लिए हम निरंतर प्रयास करते हैं। और मैंने तो सपना देखा है कि 2047 जब विकसित भारत का सपना होगा तो उसकी एक इकाई ये भी होगी कि सामान्य मानव के जीवन में सरकार की दखलें कम हो, जहां सरकार की जरूरत हो वहां अभाव न हो, और जहां सरकार की बेकारण प्रभाव भी न हो, इस प्रकार की व्यवस्था पर हम प्रतिबद्ध हैं।
So how can a patient distinguish between a migraine or any other type of headache? And there are many types.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's the last trading session for the week coming out of a market holiday, and it is looking good. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surubi and Nigel. Guys, hi, good morning.
Hi, morning, guys. So I'm in a string of positive global cues, data, markets looking good, green. So I'm wondering if it's going to be a happy Friday indeed.
Well, it's always good, to have a holiday preceding as well as post a Friday. So we're coming in there, bat for a few overs, and get back into the weekend. So
nice.
That's pretty good. And the global setup's looking much better as well.
Yeah, no, absolutely. And, what a turn of things, right? In a fortnight,
Yeah.
We went from crisis mode.
The world is ending to wow, we're happy again.
I'm using the word Goldilocks again. So you can imagine how...
You're saying Goldilocks ran away, now she's back.
She's back. She's back in the house. Well, let's just quickly tell you where we are at, right? Because you've got a lot of ground to cover, but in a good way. So US markets gained for the 6th straight session. 6 days on a trot now. Both the S&P and the Nasdaq have been higher and higher. It's been making newer highs. Last 2 days, I mean, actually, you could just look at the yesterday's session, because the day before, because you got to get to 2 days worth of action, because yesterday was a market holiday here. But I mean, you know, the big session was last night. 2% approximately across the board on the S&P, on the Nasdaq, and the Russell 2000, which is the small cap index. The CBOE Wix is back to the pre-jobs data level. I mean, it's back to where it was around on the 1st of August. 2nd of August was that, you know, the non-farm payrolls data, the jobs data, which triggered a crisis. And after that, on the 5th of August, the CBOE Wix went up to 65. So from 65, in the last 8 or 9 trading sessions, it's back to 15.23. I mean, these are humongous moves we are seeing. And you look at the S&P 500 itself, I mean, the largest 500 companies in the US, they've added nearly $4 trillion in market capitalization since the 5th of August bottom. This is a complete 180-degree about face, if there was one. Now, the nature of the rally, of course, is supported by the Goldilocks nature of data. And what is that data? You had basically the CPI numbers day before yesterday, and last night you had retail sales data which came through. So what it's essentially showing is that inflation is slowing down, but labor market is healthy enough to justify rate cuts. I mean, it's like this is where the market was at a few weeks ago, before that job scare. The labor market data really, you know, scared the living daylights out of markets for a few days. So you're basically back to that same narrative, which is, you know, the immaculate kind of disinflation, which allows the Fed to gently lower interest rates. So the data itself, core CPI rose about 0.165%. This is in line with consensus, which was 0.2. Retail sales, which beat on all measures. You also had initial jobless claims, which have dropped now to 227,000 as compared to 235,000, which was the poll, which was the consensus expectation. Now, this is really good news. Basically, recession fears have been pushed back, and how? You know, from market talking about how you need emergency Fed rate cuts, 50, 75. 75 was a done deal 10 days back after that jobs data. I mean, you're basically looking at a more benign environment. A rate cut, absolutely, in September, but a smaller one at that. Last 2 days, what have bond markets done? The 10-year yield is up 8 basis points. We are back at about 3.92. Largely, yes, I mean, sort of this growth scare has been pushed back. Yields have moved up. And you also have dollar index, which is now back above the 103 level in a good way once again. Oil trades just under $81 a barrel. Actually, I mean, the moves last 2 days cancelled themselves out. So we are, from where we left off, not very much change. Sentiment here in India, I mean, it may not seem like that because it's been buy the dips, and I mean, the mood has been, the trajectory is up, etc. But sentiment has turned a little too bearish, especially when you contrast this against the global rebound that we've had. So, you know, keep that in mind, and we can talk about how the number of stocks on a MACD basis which are giving a buy signal. I mean, I think there are less than 10% of stocks which are doing that now. You could look at things like the RSI, weekly ones, and other indicators. So sentiment is a little too bearish, especially in the short run, and you got this global rebound. Now, the levels, Nifty needs to hold the low of 24,079. That's the first number. And then, of course, the swing low, which is 23,893. These are the two levels the market needs to hold. The swing high of 24,472 is the first one, which I think will sort of propel the market and give the market some momentum. We need to take it out. And of course, the 20-day moving average as of day before yesterday's close is 24,490 now. It's come off a little bit as compared to where we were on Wednesday. Now, Bank Nifty is the clear laggard. It tested the recent low. By the way, it's once again tested the recent low of 49,659. And then, of course, there was a bit of a bounce. We left off at 49,727. Here, the big support is only at 48,860 now, which is, I mean, of course, it'll be great if this 49,659 holds. It has so far over the last 6-7 trading sessions. But if that goes in a convincing way, then you're looking at the 61.8% retracement of the entire move from the lows, the 4th of June election low to the all-time high recently, and that is 48,860. And on the upside, the immediate resistance, which the Bank Nifty needs to take out, is 50,800. 1,830. Will the global market help us achieve some of that? I think that remains the question. But I think, to my mind, sentiment is has turned a little too bearish in the short term, and that sometimes provides that fillip. 180 points higher is what the GIF Nifty is indicating at this point in time. Surabhi.
And Prashant, I was just taking a look at the level. Wall Street has recovered after the Manic Monday fall. All those indices are above that Monday's levels, but we haven't. I just checked the Nifty low of that day. The Monday when the world was selling off and it seemed like between the yen carry trade and the US jobs report, everything was crashing and ending. That day, the Nifty low was 24,686. So we're still some distance from, those kind of levels. So let's see if that recovery can really kick in, because the data has been very, very positive, as Prashant also pointed out. So just, to go over those numbers again, you've got the US inflation number, the headline inflation number at 2.9%. This is a year-on-year comparison versus 3%, which is what the market had in mind. That retail sales number, again, to just put the number on the screen, 1% versus estimates of just about a 0.3% sort of an increase in July. So retail sales, the engine of the US economy, really firing through consumer. Not just that, we had great data out of Japan as well during the holiday yesterday. The GDP number out of Japan was looking very strong. 0.8% higher year-on-year versus estimates of 0.2, 0.3%. So Japanese growth is firing, and it's a different matter how the central bank responds to it because of other issues. But anyway, the numbers are looking good. So the first question is that will our underperformance, this rank underperformance in the last fortnight, will this start ending now? Let's see. Fund flows, nothing much has changed. It's the same picture. FIs are still selling. DIs are still buying. The selling from FIs was close to 2,600 crores on Wednesday, offset partially by the FII buy number. Now let's get down to corporate action. There's plenty of it to look at. I'll watch for PSU banks for two reasons. One, because some of them are actually hiking lending rates, which is quite interesting. Both IOB as well as SBI announced a hike in lending rates between 5 to 10 basis points across different tenures. So let's see how these stocks react and what the interpretation is. On a side note, the Karnataka government said that it has decided to stop doing all business with SBI and PNB, which is a little strange. You don't hear that. There's some talk of wrongdoing and perhaps some wrongful allegations and some illegal fund transfers with those state government finances. So that's been the back and forth. Let's see if there's any sort of a sentimental rub-off impact, because anyway, PSU banks have been underperforming. Lots of corporate action. There's the Vedanta OFS that's going to kickstart today, so need to watch out for that. Then, of course, we'll have Ola Electric in focus as well. So the good news on Ola is that the top line continues to grow, but the losses are still there. Losses have expanded at the bottom line level. But the management is saying, we'll tell you more about this in a bit, management is saying that at least in the auto business, they're very close to a EBITDA break even. And then, of course, there was a bike launch. So we'll look at Ola and how the market reads that. Last but not the least, not such great news on the aviation front. It's looking very turbulent for SpiceJet. None of the commentary is good. Numbers we'll get to, and numbers are not that great. I mean, it's top line onwards. Basically, everything is falling. There is a profit, but the auditor report says that the profit is because of higher other income. And if it wasn't for this big other income, the losses are pretty huge for Ola. Beg your pardon, for SpiceJet. Not just that. The auditor's report is saying that the accumulated losses are about 7,660 crores, completely wiping out the airline's net worth. And there are issues about the ability of this company to continue as a going concern. The auditors are noting that they have also defaulted on a lot of regulatory operations. We know what happened with the Mumbai airport just a couple of days back. So, I mean, the stock apart, this is not good news. Another airline running into turbulence, not good news for us as, flyers and passengers as well. So let's watch out for this. But I think plenty of corporate action as well to keep us busy. But let's hope that the start is positive with the global cues.
Well, that's right. The global setup actually is looking quite good. The S&P 500 as well as the Nasdaq, they're on a 6-session winning streak. And now the US markets, all three of them are trading above the August 2nd low. So, that's encouraging. The global setup is good. The stage is set up. The Nifty could have a good session. Keep in mind that the Nifty on August 2nd was at around 24,700. So we're still a distance away from that level, and global cues have recovered. So let's see whether or not we can participate. What about the FI positioning? They're net short yet again, close to around 30,000 contracts on the short side. So we have some shorts in the system, which is something we normally like. The clients, they continue to remain net long. Just 10 sessions or so ago, they were net short with close to 50,000 contracts. Now they're net long with close to 90,000 contracts. So they are the ones that have been getting the market direction right. Let's see how that goes on that front as well. Pulling up the options data. The PCR, well, it had moved to around 0.75 just around 2 sessions ago. That's recovered to around 1.1 odd. So now it's pat in the middle of that range. Two strikes that were active on the call side, 24,200 call, 24,400 call. Both of them were seeing fair bit of writing. And the 24,000 put as well did see some bit of writing. Now, since the 24,200 call did see some addition, I'll keep an eye out on that strike, whether there is some unwinding, given that we see a bit of a gap up in today's trade. So that's going to be a crucial mark. The Nifty, if you're looking at levels, well, the Nifty is pat in the middle of the 20 as well as the 50 DMA. So you'll want it to gradually move back to around the 20 DMA, and that's what will give bulls further confidence on the technical side. Because even when we're getting a positive global handover, during the day you're seeing some kind of selling. The resistance zone, though, going by the options data, is around 24,350, 24,400. If we can close somewhere around this level, the bulls will feel very, very good because those bounces are being sold into, which is a little bit uncomfortable from a bullish perspective. What about the Nifty Bank? Well, that's moved down now. It's moved to around the 100 DMA, very, very close out there. You don't want this level to break. Otherwise, we could be bracing for a sharper correction. And resistance, last week we went numerous times around 50,700 to around 50,800. But since recession fear seemed to have subsided, at least in the last few sessions, two sectors I'll track. The tech index did well even in Wednesday's trading session, so we'll keep an eye out on that, given the rally that we've seen in the Nasdaq, more than 5% up in this week itself. And the metal index that's been underperforming, maybe that Supreme Court verdict isn't as bad. And in fact, the Qs overnight as well quite good. So both these two indices we're looking at. And F&O stocks, we've been highlighting this. Now you have close to around 19 stocks that are in the F&O band. That sometimes doesn't make you feel very, very good. But that's the texture of the market as of now. So a lot of stocks, I've not seen this in quite a while.
Absolutely. Well, so lots to talk about in terms of individual names as well. Ed Yardini is President Yardini Research. He's with us now to take some questions. Ed, good morning. Great to have you with us here. As we were joking, Goldilocks is back in the house. And after a 1 week scare. So what do you make of it, Ed? Do we sort of simply just sort of go back to the market we were in, which is this, the mega cap, the sort of AI-led NVIDIA, for example, I was just looking, has added some $700 billion, added back $700 billion in market cap since the August 5th lows. The S&P itself has added some $4 trillion. So we're back there once again?
Yeah, happy days are here again. And I think rightly so. I think when we talked about the payroll employment number that came out for July at the beginning of the month, I was skeptical that the labor market was that weak. I really thought a lot of it was weather related. And I was looking for initial unemployment claims to come down, which they did on Thursday morning here in the United States. And that certainly helped to revive sentiment, as did the retail sales numbers. And we've also been thinking that inflation will be moderating. So we've been talking about what we call immaculate disinflation, the idea that inflation can come down without a recession. And so far, so good.
Right. No, absolutely. And you think we will get that, right? I mean, some have said in the real world it doesn't happen. Sometimes it does.
Sometimes it does. And I think it's happening because I think the Fed last year averted a credit crunch, which is what in the past has caused recessions. I think we have to really focus on what I call the credit crisis cycle. That is something that economists have generally ignored. The fact of the matter is that in the past, when the Fed raised interest rates, something broke that led to a credit crunch and a recession. This time around, what's different is the Fed was very effective last year in providing a liquidity facility to avoid a bank run. We had some bank crisis back in March, and the economy is underlying it all resilient, and it's, I think, less interest rate sensitive than it's been in the past.
Ed, good morning. Great to have you on. So now that we're starting to see a string of positive data, very different from the big scare that we had about a fortnight back, would the Fed be expected to keep cutting gently, gradual cuts, and then, are we back to assuming that we get a soft landing and everybody's happy again, and then equity markets start rallying again? Is that the way you see it right now? Of course, maybe it changes with the next jobs report. We don't know, but what's the prognosis right now?
Well, I think the next jobs report is going to be on the strong side, because I think, as I said, a lot of the weakness in July was weather related. So we should see some reversal in August. I think the other development here is we had that carry trade unwind scare, and I think that was the main reason that things really came unglued, and that seems to have stabilized, partly because the Bank of Japan has said that they're not going to tighten as aggressively as they threatened to. But here, with regards to the Fed, yeah, I think all this talk about an emergency rate cut, I think that was nonsense. And I think what we're going to get is 25 basis points, because that's what Fed officials have promised many times. I don't think we're going to get 50 basis points. And as I said last time, I think it's going to be one and done, I think, for the year. I think they'll cut in September, and I don't think it will be a cut in November and December.
Interesting. Hi, Ed. Morning and good to see you in. What about the yen carry trade? Has that played out? I mean, various estimates from 50, 60, 70% to not sure what's going on there. What is your estimate? Has that yen carry trade played out mostly?
It seems as though it has played out. The problem was that when the yen started to strengthen and the BOJ talking about raising interest rates, that created a real problem for all these speculators and traders that had borrowed in Japanese yen at zero interest rates and put the money in the Magnificent Seven. Maybe they put it in Mexico, Brazil. So all these things unwound very, very quickly, and it created a panic. And the Bank of Japan came in and stabilized things by saying that they weren't going to rush to raise interest rates. So that did calm things down.
All right, Ed, we'll leave it there. Great speaking with you, and good conversation and good perspective. So we're back to where we were in a good way. A one rate cut, no panicky rate reactions, and the market seems to be looking good. So I think that conversation, and of course the global backdrop, provides a little bit of confidence for the market here as well, because things got a little worse here, especially in the small cap space. You may not realize it, but especially mid and small caps in many cases are down 15, 20, 25%, even though the indices will only show you about 5% odd cut from the top. We'll take a break here. Actually, we will just get you some more perspective from a few more gentlemen. This is Christopher Wood of Jefferies, who weighs in, who says the latest US CPI number has done nothing to damage greed and fears. Current base case is the Fed will be cutting rates by 25 basis points in September. He says headline CPI rose by 0.2% month on month and 2.9% year on year in July, down from 3% year on year in June, compared with consensus expectations of 0.2 month on month and 3% year on year. He adds the money markets are now discounting 95 basis points worth of rate cuts by the Fed by the end of this year.
All right, let's move to some money market views as well. Lakshman V of Federal Bank says the dollar index recovered from lows with cooling U.S. inflation, strong retail sales and jobless data. He says G7 currencies, after gaining significantly, paired gains with the dollar recovery. He adds that there are growing expectations of a rate cut by the U.S. Federal Reserve in September. He adds that the rupee is trading near all-time lows versus the dollar, with the dollar demand from importers and foreign banks. For the coming sessions, he expects the USD-INR pair to trade in a range of 83.80 to 84.15, so more weakness expected on the rupee. On bonds, Lakshmanan says Indian government bonds traded positive in the last few sessions, supported by a 5-year low inflation print. He says market would be looking for global cues like rising crude oil prices, yen volatility, and U.S. yield move after the jobless data. He's expecting the 10-year benchmark bond yield to consolidate in a range of 6.85 to 6.95%. Okay, all right. On that note, let's take a very quick break. But there are lots of individual stocks to track today, so we'll be back with our list of top 10 stocks to watch.
Such as tension headaches or cluster headaches, or brought on by other conditions as well?
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult. And the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
Global funds category, international funds, which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly in...
Welcome back. As promised, our research team is standing by to help you out with CNBC TV18's top stocks of the day. Well, Surbi, you go first. Tell us about Ola Electric, the numbers, and the new launch as well.
Yes, the new launch is making all the headlines. I mean, they're here with the e-bike, so I'll kind of start with that because that's what everyone's talking about. The launch happened on the 15th of August. It's the Roadster series, and the prices start at about 75,000 rupees. I think X, Nigel, if you're interested. But you have to wait till next Diwali for the delivery. So not this Diwali, next Diwali, 2025. So that was a big corporate launch event. But now coming to the numbers, and here the picture is slightly mixed because while the top line growth is coming in for Ola, the losses are still expanding. So the top line growth was about 32%, nothing wrong with that. But the loss at the net level moved up from 267 crores to 347 crores. And the loss at the EBITDA level is also continuing, 218 crores. But what I picked up from the commentary was Mr. Bhavish Agarwal promising that in the automotive segment, now the company is reporting numbers in two different segments, the cell part of it, the battery part of it, and the automotive part of it. So he's saying in the automotive segment, they're very close to an EBITDA break even. So my sense is that the market will want to really latch on to that. Just to quickly talk about some of the brokerage notes coming in. HSBC is already talking about it. Their target price is 140. The stock is at 110 right now, so 30 rupees of an upside. They're saying that it's worth investing in given the sustained regulatory support, government regulation for electric vehicles, and the company's ability to reduce costs. And they see a positive risk reward in Ola's battery venture. So my sense is stock may start off on the positive side. But staying with more news from the automotive space, M&M in focus as well. More launches. We've got a new Thar, Rima.
Yes, indeed. We've got a 5-door Thar Rocks, which was unveiled yesterday on Independence Day, which and M&M wants to strengthen its position in sports SUV. So the pricing of the new Thar Rocks is 12.99, so 13 lakh for the petrol version and nearly 14 lakh for the diesel version. The company, yesterday when they were unveiling this launch, said that they're targeting to be the market leader in this 12.5 plus category SUV, which accounts for 45% of the overall volumes of Indian SUV, and M&M itself has a 27% market share in this segment. Goldman Sachs says that they believe this Thar Rocks has the potential to add another 5 to 6% to M&M's SUV volumes. This model enhances M&M's guidance of mid to high teens SUV volume growth in this year, which will be higher than the industry volume growth. Back to you.
Okay, all right, Rima. So you have that new one coming out of Mahindra & Mahindra. Ola Electric has announced something. And yesterday you had the BSE 650, the Gold Star that was relaunched as well. So looking forward to ride that one. But enough of autos. Let's get to the pharma space. Ekta joins us to tell us about Glenmark. Ekta?
Thanks for that. Well, not as exciting as the auto space for sure. The revenue was up around 7% for Glenmark, and margins came in at around 18.1%. The profit also came in at around 340 odd crores. It was largely in line with what the street was anticipating. The street was anticipating 8% growth, margins of 18.7%, and a profit of around 325 crores. Geography-wise, India did well, double-digit growth, up around 12 odd percent year-on-year. North America was up around 2.2% on a Q-on-Q basis in rupee terms, but the US sales came in at $93.6 million versus estimates of around $91 million. So that was also a positive. And based on that, I'd go with a green, but the call is at 8:30 a.m. So the proof will really lie in the commentary from the management as well.
Okay, all right, Ekta, thank you very much for that. Let's move on. SpiceJet is also going to be in focus. Vamakshi's got details here. Vamakshi, morning.
Well, good morning, Prashant. SpiceJet in focus on the back of its numbers. Revenue declines by almost 15% and the net profit was down almost 20%. The profit in the first quarter was mainly on account of other income arising out of settlement with Export Development Canada as well as certain aircraft lessors. Without this other income of nearly 371 crores, in fact, SpiceJet would have made a loss of 222 crores in the first quarter. The independent auditor's report also indicated that the company was in non-compliance with various laws as well as regulations applicable to the company. They had accumulated losses amounting to 7,662 crores, which has resulted in complete erosion of its net worth. Current liabilities have exceeded the current assets by 6,308 crores as of 30th June 2024, and this in turn casts significant doubt about the company's ability to continue as a going concern, is what the independent auditor's report has said. Additionally, the company has announced a fundraise via QIP of almost 3,000 crores, but the independent auditor's report also indicates that the company's future business projections is dependent on successful raising of additional funds. So overall, going with a red for SpiceJet on account of this.
Yeah, they've announced that 3,000 crores of a QIP. Would really hope, for the sake of all of us passengers and flyers, that they get investors on board. Thank you, Vamakshi, so much for that. So not great news coming in from aviation on SpiceJet, but more positive news on that OFS, Nigel, Hinzink?
Well, that's right. It's not too often in the last 13 years that I've been tracking the group that I would say that Mr. Anil Agarwal is making shareholder-friendly moves, but that is the case, because they have gone ahead and they announced an OFS and they said they'll sell close to 11 crore shares. It seems the feedback seems to be positive because they have upsized that to around 13.3 crore shares, which means that at the floor price that they've set of around 486 rupees, which is a 15% discount to the CMP, well, they'll, raise a large amount of money. So it starts today, and then it's even on 19th is when we'll see this play out. The discount, well, that's on expected lines because at current prices, well, the valuations were out of whack because of the limited free float. Now, for Vedanta, it's positive because they'll be getting at the base price itself 6,500 crores, which can be used for debt repayment, pay out dividend, used for the capex as well. So good news for Vedanta, and there could be another bonanza that's waiting for them, because Hindustan Zinc will be considering dividend on 20th. So from that dividend, every 100 rupees that comes out of Hindustan Zinc, Vedanta gets 65 rupees. So green on Vedanta and, red on Hindustan Zinc. So thumbs up out there.
Okay, all right. Let's see how both of those stocks react. Let's go across to Sonal. She's tracking a bunch of names, including, I think, Polyplex, KNR Constructions as well. Sonal, tell us more.
Well, yes, let me start with Polyplex. We're seeing this across packaging companies. The numbers have improved in Q1, and that is exactly what has happened with Polyplex as well. It's a revenue growth of 8%, EBITDA is up 170%, margins have improved to levels of 9.6%, and this time around it's a profit versus a loss last year. And companies have been talking about the demand-supply situation improving in the packaging industry as well. For KNR Constructions, the revenues declined by 5% on a YY basis. However, the EBITDA increased by 11%, margins improved by 300 basis points, and profits were up 21% as well. So going with green on these two.
Okay, all right, got it. Sonal, thanks very much. Back to Nigel. Nigel, RHI Magnesita, how's the numbers?
Well, the numbers look good, and it's a very, very long while since we have said that, because they've done some inorganic growth, and from there, you know, the stock price as well has faltered. But these numbers look good. Top line, there's a degrowth, yes, but they said demand was rather subdued out there. Weakness in exports, poor demand domestically as well, that's what's hurt them. But the impressive part is when you have the top line declining by 5%, the operating profit was up close to 16%. We're looking at the consolidated numbers, and that's because they delivered record EBITDA margins post that inorganic growth, the Dalmia asset as well as high-tech. Now the margins are at around 17.6% odd, which is looking very, very good. The profitability as well got a leg up because of better operational performance, and that finance cost has come down drastically because the net debt that was at around 300 crores in the previous quarter, that's come down to around 170 crores. So after a while, we'll say that RHI Magnesita has made a comeback. The blended margins look good. Profitability as well has come back. Next week, we'll try to get the management to talk to us and give us a detailed outlook on that front. But let's go across to Abhishek and focus on a couple of banks. Morning, Abhishek. Tell us about SBI.
Well, morning, Nigel. So, Karnataka government has cut ties with SBI as well as PNB over the financial frauds that have been, discovered by them. So, Karnataka government has ordered withdrawal of all deposits and investment from SBI and PNB as well. The decision stems from the incidents that were involving Karnataka Industrial Area Development Board and Karnataka State Pollution Control Board. So, the funds amounting to 12 crore and 10 crore respectively were alleged as misappropriation by the bank employees. However, both the banks, SBI and PNB, are in talks with the state government to solve the matter amicably. We could see a negative reaction on the stocks today. Back to you.
All right, Abhishek, good to have you back and hope you're feeling better. Thanks for that. Well, let's just quickly recap the entire list of stocks that we put out with our research team. So stocks with positive news flow are Ola Electric, Mahindra & Mahindra, Glenmark Pharma, Vedanta, Polyplex, KNR Constructions and RHI Magnesita, while stocks with negative news flow are SpiceJet, Hindustan Zinc and State Bank of India. So that's the list of stocks. We're going to take a quick commercial break here. Siddharth Khemka is going to be with us of Motilal Oswal Financial Services. He joins in and we talk about specific individual names. Stay tuned.
Stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last year when the taxation was changed, and now it's come back into reckoning with full power and full force. And I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
भारत को किसी कोई भी हॉस्पिटैलिटी का सामर्थ्य भारत में सबसे ज्यादा है। अगर ये सिद्ध हो चुका है तो साथियों, हिंदुस्तान का सपना है कि 2036 में जो ओलंपिक होगा वो मेरे हिंदुस्तान की धरती पर हो। इसके लिए हम तैयारी कर रहे हैं, उसके लिए हम आगे बढ़ेंगे।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
मुझे गर्व इस बात का भी है कि हमारे सीईओ आज दुनिया भर के अंदर अपनी धाक जमा रहे हैं। भारत के हमारे सीईओ विश्व भर में अपनी धाक जमा रहे हैं। हमारे लिए खुशी की बात।
Welcome back. Before we kickstart all the corporate conversations and the market chat, let's get you some, very, very interesting perspective. Global investor and author Ruchi Sharma feels that India is the last bull market of the world that is still raging. Speaking at the CNBC TV18 town hall, he lauded the strength of the Indian market and also said that the US is already seeing early signs of debt stress. Take a look.
There really has been no bull market in the world this decade like India. This is a unique bull market unto itself because also of the breadth of it. Like in the US, you've had a bull market taking place,
by tech.
concentrated by tech and a few companies at the top. In India's case, it's been extremely broad, like in terms of what's happened. There are various sectors that have, virtually every sector has participated in this bull market. So it's a very unique bull market that we have seen in India. It's the like only bull market in the world, I would say today, literally, the true bull market. I think that this has been one of those incredible financialization stories that's taken place. In fact, it's very, very telling. I can observe it because even I don't know what's the framework to use here as to where to call an end to this, right? Because it's already the most expensive market in the world. In terms of, there's the returns over the last 5 years of this market in dollar terms have even exceeded the US in terms of what it's done. There really has been no bull market in the world this decade like India. I see the next couple of years, in fact, to be very critical because I feel that, in fact, whichever new government comes to power because I think that they're going to face a debt reckoning much quicker than we imagine. And we're seeing the first signs of that in the treasury markets already in the US. That the funding is getting slightly more difficult. When new auctions take place, it's getting slightly more difficult in terms of, like how to raise. So I see a debt kind of blow up crisis happening much more quickly.
Ouch. That's not something that global bulls are going to like at all. But that is a futuristic sort of perspective. And you can hear Ruchir in more detail as we play out sort of more chunks in the entire interview once again as well, because he is cautious in the medium term on the US debt situation where he is expecting a blowout to really happen. So let's see. But for now, like Prashant has been saying, at least for here and now, for today, Goldilocks is back on the global screen. So global bulls, at least in the short term, are rejoicing. Siddharth Khemka is our first guest on the show. Siddharth, good to have you on and happy Friday to you as well. While we wait for US debt to blow up or do whatever it has to do, let's talk about Friday trade because we have a lot of stocks to sort of go over as well. I want to start off with Ola Electric because the losses have expanded. But, there's a new bike launch. The management is saying that EBITDA break-even is around the corner. And I guess a lot of participants on the street are willing to give Ola the benefit of the doubt that they'll start cutting those losses. Are you in that camp?
Good morning, Surbi. Yes, good to be on the show Friday morning. So I think there is definitely a path to profitability, but we are not too sure when that will come by. On a Y&Y basis, losses have blown up, but if you see on a sequential basis, things have improved, especially on the EBITDA front. If you look at margins have improved a lot, and that is something that I think will definitely cheer up the street with margins at a negative 12.5% compared to 19.5% on the previous quarter, not on a Y&Y basis. So I think there are definitely a lot of people on the street who would look that positively, given that it's a pure play on the EV side that is not there in the market. For us, we still on the sidelines. We don't have an official view on Ola yet. Even on the IPO, we did not recommend that to the customers. So we will still wait for some of the new launches which we believe could increase the losses, given that some of these launches could be in the price sensitive segments much below what the current offerings is. So I think definitely 1 or 2 more quarters of wait and watch will give more clarity on that path to profitability.
Okay, there was the bike visuals were there. Let me ask the bike enthusiast. I know he's a purist, this one over here. But I don't know. Let's get the Ola bike again on the screen if we can. It's very futuristic. It is an electric bike. I don't know. We have the expert right here. Are you in for electric?
No, I'll have to take a closer look at that for now, but it really looks good. I have to give it to them. They've come out with something good. I was just looking at the specifications. On a single charge, it can do, I think, between 100 to 500 kilometers is what I was reading. And also the top speed is 190. Wow. We'll have to see whether, that plays out or so. But I'm more into an easy rider, Surbhi. So for me, all eyes on the Ola Electric, and I wish them well. But the BSA, as I mentioned earlier as well, that got launched yesterday, the 650. In my time, I really haven't seen a new one. So it's a relaunch, basically. I'll be looking forward to that one.
A purist.
All right, Sid, so let's focus on a couple of other sectors. Then metal stocks, they pull back, on Wednesday's trading session because the street believed that almost the worst case outcome played out, with taxes can be implied retrospectively. The good news, though, it's not going to be a one-shot hit. Even these dues can be paid over the next 12 years, which makes this, this hit far more digestible. What's your view on them? Because, going ahead as well, most brokerages, they don't see a very, very large impact. For non-ferrous, extremely small. And for ferrous as well, anything between 1 to around 3%. That's maximum on the cost of production.
Yeah, Nigel, I think that's the case with us as well. While the Supreme Court ruling gives a lot of clarity to the past issues, they have removed any levies or penalty for the past dues. That is a big positive, and especially for some of these retrospective effect. For the prospective effect, we believe that there could be a minuscule increase in the cost of production from about 1 to 3% based on what states levy, especially on the ferrous side, as you rightly highlighted. Jharkhand is the first state which has already levied taxes after the July 24 order, and it has proposed a cess of rupees 100 per ton for coal and iron ore, 70 rupees for bauxite and 50 rupees for manganese and other minerals. So we believe other states could follow suit. However, what is good is that these are state levies and most of the contracts will have a pass-through mechanism, and we believe that these hikes could be recovered through higher pricing and will not have much financial impact. The biggest issue, yes, retrospective levy of cess, but again, a relief that this could be paid over a period of 12 years starting FY26. So that is again giving some kind of relief to the cash flows. Some of the companies have already made provisions. For example, Tata Steel, they say that they have made a contingent provision for this to the tune of about 17,400 crores. Coal India too has come up with some number of about 3,000 crores of dues that they expect from the past. So net, we believe that this will not be much of a negative for the metal companies as of now.
Got it, Sid. Appreciate you joining in. Short but sweet conversation this morning. Wishing you a good Friday ahead, and thanks a lot for joining in. Well, let's focus on the next company. Then we're looking at Astro Microwave Products. The numbers look quite good in the first quarter. What's the way ahead? Mr. Atim Kabra, the director of the company, joins us on the show. Hi, Mr. Kabra. Good morning, and thanks a lot for joining in. Good start to the year. So fill us in with 3 basic numbers. One is, what kind of top-line growth are you looking at for the year? So what do you end the year with? I think last year you did around 900 crores odd. Point number 1. Point number 2 is margin performance from year on. What's it likely to look like? And order inflow. 3 quick numbers.
Sure. Good morning to you. The results have been as expected on the lines. Our opinion is that we will be doing somewhere between 18 to 22% on an organic basis. This is in conjunction with our LEAP strategy, which we had discussed the last time, which has the potential for further upside. as and when it comes in. Our order book, we are looking at adding between 1,200 to 1,300 crores this year also. And in the quarter which has just ended, we had an incremental order book of about 303 crores, which leads us to an order book of about 2,090 odd crores on a carry forward basis, on a non-consolidated basis. We also have the order book from our joint venture with Rafael of Israel, which adds to the order book further. And we own 50% over there.
All right. And you want to give us the margin picture as well?
Well, we have been consistent in guiding for a margin between 17 to 18% approximately on a PBT basis. So we like to maintain that. Yeah, sorry.
So at the EBITDA basis as well, at the gross level as well as the EBITDA level, because the expansion is very sharp in this quarter. You're at 15.5% at EBITDA. So can that be sustained?
The EBITDA margin is a function of our product mix, which varies from quarter to quarter. If you ask me what exactly is the order book which will be implemented at the end of next quarter or the quarter after that, it's very difficult to say. But on an annualized basis, yes, we are looking at a nice enhancement in our EBITDA margins also.
So a range maybe? I mean, I know you can't give quarter by quarter guidance, but at an annual level, EBITDA level, what would you like to maintain? Is 15% sustainable over there?
I think we should be able to sustain it.
Okay.
All right, Mr. Kabra, we'll leave it there. Thank you very much for joining us and taking us through, all of those numbers. Appreciate you being with us here on the program. We'll take a quick commercial break here. We're going to come back. We'll have Mitesh and Shrikant join in to run us through the technical trading ideas. We'll also, of course, have the Ola Electric management joining us a little later after that. So it's a big story, the big stock to watch out for. Stay tuned. All of that coming up.
एक तरफ मेरे सीईओ दुनिया भर में नाम कमा रहे हैं, भारत का नाम बढ़ा रहे हैं, तो दूसरी तरफ विमेन सेल्फ हेल्प ग्रुप से 1 करोड़ मेरी सामान्य परिवार की माताएं बहनें लखपति दीदी बनती है।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across 3 different groups. One is the physiological within the body triggers. 2 is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle-related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times, you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens. They induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter.
Okay, welcome back. There's 10 minutes to go for the pre-open session. We have Mitesh and Sudarshan joining in with what they are, Shrikant joining in. It's a Friday morning. So we have Shrikant. Gentlemen, good morning. Good to have both of you here. Thank you very much. Mitesh, so you get that global boost, and it's a big boost which you get. And I was sort of looking at some of the indicators which does show that sentiment maybe has turned a little too pessimistic in the very near term. Could that support things on the upside a little bit today? Sustain gains that we start with?
Morning, Prashant. In fact, that is something which I highlighted in the late part of Wednesday's session, that the volatility indicators are ebbing. Because, time and again, we tried to break below this 24,000 zone and we didn't sustain an hourly close below that. And with that, I think, the negative effects of the volatility rising has gone down, which means that while we may not fall much, it does not indicate any kind of strength. So my sense is that the most likely outcome could be a consolidation, probably between 24,500, which is the 50% retracement area, 24,485, to about 24,000 for the next few days. And in the good case or the better case scenario, we might see a break about 24,500, head towards 24,650, 700 zones. Only beyond that will I be comfortable going aggressively long. But till then, it's a market which to me is sideways and chopping around in a range.
Got that. Shrikant, what about you? You get that gap up. What do you do then? Stay long, build longs?
Good morning, Prashant. Yeah, I think the way there is overall outperformance or the way there is a strength in global equities after this specific major event of US inflation, I'm of the view that in case if we see any correction during the day, then certainly we should look for taking some long positions with a stop loss close to 24,100, because even though there was a lot of pressure in the market Nifty was holding comfortably above the levels of 24,100. So that should be the final stop loss for creating or for holding any long positions. But yes, as Mitesh said, 24,500 is the level. Above that only we can expect buying momentum in this market, or let's say specific momentum in the market. In that case, the chances of hitting 25,000 would turn bright. So in the near term, 24,500 and 24,100 is the range. Intraday correction will be an opportunity for creating any long position.
Okay. All right, gentlemen, let's get down to individual stock calls as well. Mitesh, morning. What are the stocks you're working with today?
Morning, Surbhi. I have 3 buys and 1 sell. On the buying side is Jubilant Foods with a stop at 625 for a target of around 670. Havells was a recommendation earlier as well. Now can be bought with a fresh stop at 1830 for targets of 1885, and a buy on CDSL with a stop at 2525 for targets of 2650. 1 sell, that's over a reality conditional sell. So if it starts breaking below Wednesday's low of 1710, 1708, take a short position with a stop at 1736 for a target in the range of around 1650, 55.
Okay, all right, got that. Shrikant, what about you?
Good morning, Nigel. I think, see, like in this market, we need to focus on those companies which are very close to their important breakout levels, like Zomato. It is consolidating since last 10-12 days, and now it is very close to its important apex level. So from here, again, the stock can move to the levels of 270-75. That's the overall view for Zomato. So I think at this level, it's a very decent risk-reward ratio for creating any long positions with a stop loss close to 254. The other stock which I like is Vedanta, and currently it is around some 420-22 levels. It is very close to 100-day simple moving average. It is forming some reversal formation on a daily basis. So from here, the stock can move back to the levels of at least 455 or 460 in next few days. So it's a little bit a positional call, but it's a buy at current levels with a stop loss close to 405.
All right. Gentlemen, thank you very much, both of you, for that. We'll keep coming back to you for more. 9-10, of course, we'll get more trades. But flashes at the bottom of the screen, this is important. State election, state elections in 3 states, Maharashtra, Haryana, Jharkhand, due this year, mostly in October. I mean, around October, could be earlier as well. And the Election Commission is going to announce the dates, the schedule for these elections at 3 p.m. today. I mean, so you're again going to go into a bit of a sort of political phase. You know, after the mini shock that we got in the general elections, these are going to be important, especially the big state of Maharashtra, where, I mean, you know, it's a multi-party kind of a fight, and it's a big state with important implications. So I think something to take note of, which markets I think will pay very close attention, especially what happens here in the state of Maharashtra. We'll take a break. We're back. We'll come back and we'll have the pre-open with us. We'll also have the management of Ola Electric with us to talk about the new launch, the results, etc.
The triggers, and then you have foods which are different from the rest of the world. It is well publicized, well published all over, that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone. And one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in whom triggers may not be easy to identify.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Welcome back. It's all eyes on Ola. The company's net loss has widened to 347 crores in Q1, but that's if you're comparing it year on year. Those losses at the PAT level as well as the EBITDA level, they've actually narrowed sequentially quarter on quarter. Revenue in terms of the year on year growth is looking pretty good at about 32%. Our colleague Ritu Singh caught up with Bhavish Agrawal, Chairman and Managing Director of Ola, to talk about the road ahead and the new launches.
The key highlight of this earnings was that our automotive segment, and this is the first time we were publishing earnings, and we actually split our earnings into two segments, the auto segment and the cell segment, given the nature of the businesses and the stage of the businesses. So the key highlight is that the automotive segment is actually almost EBITDA break-even. You know, we have come from last quarter of almost negative 8% EBITDA to negative 2% EBITDA, about a 30-odd crore EBITDA. And there was a one-time reversal of PLI. If that was not there, you can assume it was an EBITDA neutral quarter for us on the automotive segment. So actually, that's a very important highlight that I want to share with all your viewers, that there were a lot of people in the industry who used to believe, can EVs make profits? Right? And we have shown that actually we're already there. Despite a reducing FAME subsidy curve, despite what you mentioned, our tactical discounts here and there, which we keep doing and we'll always do. But EVs are a very solid business model. EVs are the future, not just from the consumer lens, but also from the balance sheet, as our financials this quarter tell.
You know, when we talk about operational cash flows, you're still in the negative.
Yes.
The loss has widened sequentially. It has widened over the last year. So what can you guide the street about, you know, achieving this break-even? When will you get to that stage?
See, the reason, that's a very fair question, Ritu, and that's why we have shown two different segments. Because on one side, automotive for us is growing well. And we are seeing increasingly good operating leverage. Because we've already invested into the factories. We're sitting in the factory. So we've already invested, and as we are increasing volumes, the fixed costs are not going up with it. So, and that's why our EBITDA is almost break-even in this quarter in the automotive segment. For automotive, you saw us announce today the new motorbikes.
Yes, we'll get to that.
We'll get to that. But from a financial perspective, the motorbikes are built on the same platform, same factory, all fungible capital expense. So it's not going to increase the cost structure in any meaningful way. But volumes will go up further. Scooters are continuing to grow, and motorbikes will add on top of the scooters. So this increasing volume over the course of this year with new products, as well as with penetration growth, is going to get more and more operating leverage for the automotive segment. So that's the key highlight on the automotive segment, growth and profitability. On cell, so if you look at the console loss that you were mentioning, the cell segment is in investment phase. We are the largest recipient of the government PLI for lithium cell manufacturing. And the first phase, which is 1.5 gigawatt hour, is already commissioned. Next year we'll complete 5 and then go to 20 in steps. So there will be a period of improving profitability over there, but right now we're in investment phase.
So should we assume that, you know, given that it's only in the first quarter of FY26 that you start integrating these cells into your own scooters and then maybe motorbikes, that at least until then, given that that is the core strategy for your cost reduction, that profitability, you know, may not happen until then?
See, on a directional basis, we are focused on delivering growth with profitability. So we want to improve profitability while continuing to focus on penetration and growth. And Ritu, the way we are doing that is actually by building the manufacturing ecosystem around this industry. And again, today you saw us announce the cell. Q1 FY26 is when the cell will come into our product. We already have a lot of vertically integrated manufacturing. We announced our Gen 3 platform, and you saw how the cost of making not just the cell, but the other things around the scooter or the two-wheeler, the electronics into one board, the battery as a structure itself, all these things reduce the cost. and hence all these things will continue over the course of this year. So we expect improvements in gross margin incrementally over the next few quarters till the sell comes in. That's when a major shift will happen on our gross margins and our EBITDA.
You did show a EBITDA margin improvement of 600, 680 basis points or so. But I'm just wondering if this is going to significantly improve from here on, because you announced a whole bunch of things that you're going to be investing in across your businesses. Do you have costs peaked, even though you say the technology is sort of fungible? You've already made the heavy investments, but have costs peaked, and will margins significantly improve from here?
No, we have a lot of juice looking ahead in gross margins. A lot of the Gen 3 technologies that we showed you will come through over the course of the next few quarters, culminating in the sell as the next big cost reduction on the gross margin. So we will continue to see incremental improvements on both gross margin and EBITDA. Gross margin is driven by cost reduction on the vehicle materials and technology advancements. EBITDA is driven by operating leverage. And both these themes remain true for the next few quarters.
Well, let's talk about the bike that you've just launched. Everybody seems most excited about that. Starting at $79.99 all the way up to 2.5 lakhs, as your introductory prices. Just give us a brief sense of when deliveries are starting in the first year of manufacturing. What kind of units are you looking to produce? What are the aspirations there?
Ritu, India runs on bikes. 2/3 of the Indian two-wheeler market is bikes. I grew up wanting a bike. Right? That's in the Indian rides a bike. Making bikes electric is a very important part of the electrification of India. The next frontier of electrification is bikes. And what we've announced today are 3 bikes, not just one, across a price band, like you mentioned, from 2.5 lakh rupees to 75,000 rupees. So the Roadster Pro, the Roadster and the Roadster X. Now, the important point to note for your viewers is that all these bikes will actually start from where the scooter supply chain and cost structures are already. Right, because the entire platform is common, and the suppliers are common, the supply chain is common. So we'll have a good gross margin from the starting point, and then we already have capacity in our factory. We have an installed capacity of about 1 million units a year. Our scooter volumes are roughly 500K a year right now, growing. And we have headroom to grow, and the factory capacity is all fungible across scooters or bikes because the platform is the same. So we are going to grow in the existing capacity, and then when we cross 1 million combined capacity, we'll install more in the factory.
Because you'd announced these last year and now you're officially launching them, you must have a sense of the demand. I'm just trying to understand, given that you say it's 2/3 of the overall two-wheeler business, will it be the same when it comes to revenue for you?
See, again, we will have to see how the revenue and the scale happens, but I feel very confident that there is going to be a stronger rate of growth in motorbikes because of a few things. Firstly, the market is already educated on EVs now. 3 years ago, nobody knew EVs. We had to educate the scooter customer about what an EV is. We had to set up the charging network. We had to set up the retail distribution network. We had to set up a brand. We had to do a service network, all of these things. All of that is already there for the motorbike. Consumers are aware. Cost structures are there. And motorbike, especially in the sub 1 lakh rupee segment, is all about cost of ownership, which is the basic value prop of EVs over ICE. And that's why I actually feel very confident that motorbike adoption will be very fast. If you see today, scooters are about 20% electric penetration. Motorbikes are less than 1%, exactly where scooters were 3 years ago. So maybe motorbikes will get there at 20%, not in 3 years, maybe 2 years, maybe 2.5 years. Who knows?
All right, well, let's move on to another launch then. Mahindra & Mahindra launched its much awaited Thar ROXX, the 5-door version of the iconic off-road SUV in India. The price starts at around 12,99,000 for the petrol and around 13.99 lakh for the diesel ex-showroom prices. My colleague Danish caught up with Mr. Rajesh Jujurikar, the ED and CEO of Mahindra & Mahindra's auto and farm business. Let's listen in to what he had to say.
Of course, there will be some customers who are buying the Thar 3-door today who may want to buy and would want to buy this, and we are totally open to that as long as they stay within our portfolio. We don't mind if they buy Thar ROXX versus the 3-door. Customers to choose, but there are different products. So that is for the more compact off-roader. This becomes more mainstream for going out with friends, families, even on a normal adventure trip, not necessarily off-roading. But there will be some cannibalization, and we totally are okay with that. We've set up a total capacity of 9,500, which has some reasonable amount of fungibility between how much we can make out of the 3-door and 5-door.
And sir, as far as the rest of the remaining financial year is concerned, how many more new products are there in the pipeline? And are things going as smooth as you planned they would?
We are looking at, the Born Electric portfolio in the early part of 2025. So that's the one new thing that we are going to do. Apart from that, I don't think we're going to have new launches. We already have 2 this year, the 3XO and the Thar Rocks.
So very lastly, when can we expect an electric version of Thar, and what is your wider EV plan?
At some time in the future, we will have all our products in electric. But right now we have 3 or 4 products which have been lined up, which we will do through 2025.
Okay, well, Mitesh is with us, so that's a lot of auto news and, sort of busy weekend and busy last 2 or 3 days really coming through. Mitesh is with us for his 9-10 calls. Mitesh, what do you have?
Yeah, I suggest Jubilant Foods for a target of 665 to begin. Eventually, we can see higher levels as well.
Jubilant Food and higher levels eventually as well. Got that. How is the entire Mitesh Pharma pack looking? Biocon, Divi's Laboratories, and actually, that entire pack, Sun, Lupin, Cipla, etc.
So I think, Prashant, Lupin is an exception, but I think there was some corrective signals on the part of Divi's, Dr. Reddy's to begin with. And my sense is that today's opening gap up could be very important. If the pharma stocks start to weaken after that, we might actually explore some shorting opportunities. But my preferred choice would be a Divi's or a Dr. Reddy's. Lupin still looks a buy to me in any minor declines.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's fill you in with a couple of stocks then that we're tracking. Vedanta, that's a stock that we should be tracking. Remember, the news flow that's come in the last few days has been positive, but the global piece has been a little bit jittery. And then you had the Supreme Court verdict, which the management said doesn't impact that to a large extent. The news flow first. They had announced the OFS. They said they'll sell close to 11 crore shares in Hindustan Zinc. Now, it seems demand is fairly good because they've upsized that to around 13.4 crore shares odd. This is at a 15% discount to the current market price. But as we know, the free float in Hindustan Zinc is only around 2.2, 2.3%. And because of this low free float, that's why the price is so elevated. So on expected lines, it's, the base price is at a 15% discount, which is at around 486 rupees. For Vedanta, it's very, very good news. They'll get closer around 6,500 crores, assuming the lower end of the band. So if it's a little higher, then they'll get even more money out there. They could use this money to either pay back some part of their debt, give out a dividend, and also use it for the capex. And there's another good news that's waiting for them as well, because Hindustan Zinc will be meeting on Tuesday to give out dividend. Remember, every 100 rupees that comes out from Hindustan Zinc, Vedanta Limited gets 65 rupees out of that. So good news coming for Vedanta, and explains why the stock is up close to around 1.5% odd. Volumes are very, very high. I'm not sure whether there is some pending selling that's out there, but once that's out of the way, the promoters making the right moves, so expect a positive reaction on that one. Well, let's go across to Rima. She's here to tell us about telecom. Rima?
Thanks so much for that. So Macquarie has come out with a note on the Indian telecom sector. On Bharti, they believe it's going to be the winner in the telecom landscape. They've raised the target price on Bharti Airtel to 1630 and upgraded the rating to an outperform. They've raised the target multiple, so that's one key reason for the upgrade and the increase in target price. And secondly, their hypothesis is that the telecom tariff repair will continue. So next year, they're targeting a 15% jump in the ARPUs. The following year, 10%. And according to them, average revenue per user, the ARPU, is likely to hit 300 rupees, 290 to 300 rupees by FY27. Remember, that was a key goal that Sunil Bharti Mittal has spoken about. They also go on to say that the India business is going to start generating free cash flow, which then can be used by the company to up the dividend. So according to them, the free cash flow generated by the India business in the next, 3 years, FY26 to FY28, will be double of what they've done historically. On Industars, though, Macquarie is negative, underperform rating, target price 310. He's like, yes, the outlook on tenancies is improved post the Vodafone Idea fundraise, but there is rent erosion and change in the competitive dynamics, and those are acting as headwinds. So positive, very positive on Bharti, but negative on Industars.
Got that, Rima. Well, let's focus on RHI Magnesita as well. And after a while, post the consolidation that they've done, they've reported actually a good set of numbers. So let's run you through them. On the top line, there's a degrowth of close to around 5% because demand was subdued, domestically as well as the export market. But the encouraging part is when you have a decline on the top line because of lower volumes, yet you're seeing the EBITDA move up by 16%. So that's very good news. And the margins now have moved up to around 17.6%. And post the consolidation, post buying out high-tech as well as Dalmia, this is the highest margins that they have recorded. So the street likes that. The reasons are they executed some high margin orders as well as the product mix was favorable. The profitability as well got a leg up because the operating profit was good and the net debt number has come down on a sequential basis. The debt is down by around 130 crores. So the street will like this set of numbers. After a while, they've delivered a good set of numbers.
All right, lots to track. RHI is one of them, but, there is, so much more which the market will find attractive. Remember, it's very negative short-term sentiment meeting a global rebound today, and I think that's essentially what you're seeing. The 650-point bump on the Sensex and 190 on the Nifty. But as we always say, on most days, closing becomes more important than how the market opens. And I think today more so because for the last few sessions, we've had, the market sort of opening on occasion higher and then kind of giving up gains. And especially sectors like the Nifty Bank, which have been very weak. So the first rates will come up on the indices and then we'll get straight to individual names and stocks. What do we have? Opening bell on your screens now. We have the Nifty, which is at 25,313. You've got the Sensex, which is at 79,682. So that's a good start. 0.75% higher on both the Nifty and the Sensex. Bank Nifty is up about 0.8. 50,120. 5120 is where the Nifty Bank is at. The IT index is up about 1.25%. 1.5 now, 40,300. So that's doing very well. And look at the market breadth. Almost 3:1, actually more than 3:1 in favor of advances. So are we approaching the 200-point bump up for the Nifty? We are 192 in the first initial couple of seconds of market open. But let's get to stocks. Survi.
Absolutely. I'm just looking at broad, sectoral trends. You've got the metal index, the IT index, even PSUs, oil and gas. Lots of green pretty much across the board today. And since it's a global rally, metals are right up ahead. Hindalco 2.5% on the upside. Tata Steel 1.5% up. There's JSW Steel pushing about a 1% gain. So all of the metal stocks doing well. On the commodity side, ONGC is having another good run, 2% higher. M&M, the response to the new 5-door Thar is all green. 2.5% up on that stock. Then IT is the other strong pillar for the market. Tech Mahindra, LTI, Mindtree, these are stocks on the positive side. Among the biggies, there's also TCS, of course, which is supporting the market. Among the banking biggies, HDFC Bank, ICICI Bank on the green side, gains of about 1% on those stocks, supporting the market. Bharti Airtel up about 1% as well. Rima was just talking about that stock. Actually, on the Nifty, there are only 2 stocks on the way down. Actually, one. HDFC Life is about 1.5% lower. Apart from that, everything else is turning positive, including a power grid, which is at the flat line. So it's a very, very positive start and very, very well-rounded. I just want to look at Ola Electric as we move ahead. Yeah, 8.5%, 120. HSBC has called for a target of 140. The stock is already at 120. It's an electrifying start for this one. And Nigel, the company that you were talking about, RHI Magnesita, 7.5% up over there.
Well, that's right. RHI Magnesita, I said those numbers were good and they were very good. And it's come after a few quarters. So that's why the street likes that. Stock up close to around 8%. Volume's not very, very high, though. Sequence Scientific, I think they as well came out with that set of numbers. And that's why that stock is up close to around 8.5%. The street seems to be liking those numbers. First Source, well, we've seen measures in the last 1 year or so. They've got a new CEO on board. His past record has been with Infosys as well as Tech Mahindra. They've gone ahead and upped their guidance as well. So First Source as well, that one is flying away with a gain of close to around 7% approximately. Remember, that one has been actually an underperformer, but now the street hopes that they'll get back to their growing base. So that's why that stock is up and about. Maupin Laboratories, they raised some money last week. The stock has been in this vicinity. This morning, we highlighted that metals could participate on the upside. And that seems to be the case. Most of these metal stocks are pulling back in today's trading session. Vedanta is the one that's going to be getting good amount of money from that OFS that they're doing in Hindustan Zinc. And because of that OFS that they've announced at a 15% discount, Hindustan Zinc is one of the top losers on the downside in terms of volumes. Ola Electric, take a look at that. It started off with a gain of 8%. Now it's up close to 16%. So the street likes the commentary coming in there and the new launches as well. So big up move is what we're seeing out there. HDFC Life, though, that's down close to 1%. I have some selling pressure out there. Glenmark Pharma as well posted its numbers. I think the commentary is something the street didn't like, so it's down close to 3.5%. And Max Financial, I recall it was down close to 5-6%. in Wednesday's trading session. Then the commentary was good on the margins going ahead. The stock recovered, but today it's giving back some part of what it put on, down close to 2.5%. Prashant.
Okay, well, Ola is the big one, right? And it's by the way, the largest volume-led gainer across the board on the NSE. It's been that way. Sold stock at around 80 rupees. It's at 124, and it's traded only for about 3 or 4 days now. And today may be the fourth session in its listed life. So that's an incredible run that we're seeing from Ola Electric. Okay. What else? Hindustan Zinc is the biggest. On the flip side, Hindustan Zinc is the biggest volume-led loser right now. Stocks at about 532. Glenmark is down 3%. You've got Moil, which is down 1%. I spotted some of these life insurance companies, which are all lower. So Max Financial will come up on your screen, 2% down on Max Financial. And I think ICICI Pru is down 1.25%. HDFC Life is down 1.5%. So actually, life insurers as a pack is down at this point in time. And of course, this after, I think on Wednesday, you had the monthly numbers, which actually were pretty good across the board for life insurance companies. But stocks done well relative to the rest of the market recently. Back to tracking what is higher. Polyplex is up 6%. There is Capacite Infra, which is up 5%. Suprajit is up 7%. There are lots of these smaller mid-cap names, but they're all coming up with decent-sized volumes. Suprajit 7%. Moripun is up about 4%. Zaggle is up 5%. 369 on Zaggle. I think it did well last few sessions as well. 368, 369. Gabriel India is up 4%. High-Tech is up 4%. Powermesh is up about 4%. Inox India. Inox Green, of course, has been the big mover. But Inox India, the sort of specialty gas company, that one also is up about 5.5% right now. 1250 or so on Inox India. Zensar Tech, Madras Fertilizer, Uflex, I could go on. But volumes then, of course, start to trickle a little lower as they do at this point in the day. But it's a good-looking screen overall. Can't complain at all. 200 plus now on the Nifty, 24,350. Vineet Sambre is with us, Head of Equities at DSP Mutual Fund. Vineet, good to have you with us here. Thank you very much for your time. A small break in the upward trajectory is what we had. But to be sure, momentum started seriously flagging in many mid-caps and small caps, down 15, 20% very quickly. But what do you make of things now? The global scare, at least for now, seems to be behind us. You're kind of back to, the July kind of trading environment. More up and looking at what can go right rather than what can go wrong. So what does it mean for us here, Vineet?
So Prashant, good morning and thank you for having me on the show. So I think clearly, when we look at the Indian markets on the valuations, it's very clear that we are on a high range in terms of the valuations, and which is maybe the only risk. But as far as the fundamentals are concerned, we keep talking about the overall improving fundamentals. There could be blips in the interim, like we had this quarter which went by. We had seen some moderation, but there were reasons which we can talk about. But I think to your question, I would say that I think it is very volatile, as far as the environment is concerned globally. The news flows keep changing, and the views and the money which follows some of this news is huge. So one can change the views on a daily basis. But I would say that largely what we are thinking is as the US economy goes through cuts in the interest rate and it starts maybe recovering, that would give some kind of positive sentimental boost as far as the overall world markets are concerned. We are already trading at a high level. We should be careful. Should not sort of just maybe extrapolate the returns which one has seen over the last 2 to 3 years. Some kind of moderation we are seeing in the earnings, which is bringing some kind of caution in our minds as well from the valuations perspective.
Vineet, hi, good to have you on the show today. So I have to ask you about, I know you don't get into stock, but the theme of the day, right? Ola Electric, it's again brought a new company, a new business to the market, which has been loss-making, still is loss-making, but I think the market's willing to give it the benefit of doubt and trust the management, trust the market opportunity here. What are your own thoughts around EVs, the whole ecosystem? And I mean, if we get more listings here, a lot of the current OEMs, they're also expanding the EV portfolio, right? So what is your view around this? Would you be interested in more pure play, stand-up EV businesses?
So first of all, my congratulations to Bhavesh for a very great start on Ola. And I think the company, I mean, the stock is really pricing in the excitement around the, EV proportion as it grows. But I think that, as I understand, electric two-wheelers clearly will be will be the first beneficiaries of the electrification in the automobile segment is what I feel. At the same time, I also believe that the jury is still out in terms of who will gain what kind of market shares eventually, because we already have the existing ICE players who are deep-pocketed and they have also entered the fray. So maybe a lot of clarity will emerge over the next 3 to 4 years as to what kind of market shares these players will eventually have and who will eventually come out to be a big winner. The second important factor which you mentioned is about the profitability in the current environment. While we have seen that the volumes are growing, but still the company is yet to maybe come up to the levels of, breaking even. So I think it is important to assess at what levels will the company break even, because eventually profits is going to be the driving factor, for the valuations as we move forward. So I would say that currently what we have thought about is we are sort of looking at the neutral players which are really in the auto and space, which are serving both the ICE as well as the electric vehicles, and just participate in the growth opportunity for the overall auto category as such. So I think that is how we would like to sort of play as of now, and maybe watch the space, see the companies, see the visibility of these companies breaking even, and then maybe take a big call on such names.
The issue price, just to remind everybody, was 76 rupees. Today's price is 122, so that's already a 60% pop for whoever got the allotment and whoever was willing to ride this one.
I'll tell you one more thing.
Yeah.
If you remember, there were all these reports which were suggesting that when the IPO was being, sort of negotiations were going on, that Bhavesh wanted to value the company at about $7 billion. I mean, that was I think there was an article or two as well. Finally, the IPO came at $4 billion, right? So there was obviously a lot of back and forth, etc. Guess what the market cap today is? 6.66, almost $7 billion in 3 or 4 days. So,
that's what they say, right? You do your business, the market will give you a valuation.
Will give you, and if you leave something on the table, I mean, the market rewards you. And I think you're right back there.
Okay, all right, interesting. Well, Vineet, good morning and always good to see you. Do you expect us to be bracing on the headline index for a bit of a time-wise correction? I think you were briefly alluded to that earlier. And I think the top sector that you believe that in terms of valuation comfort and how things are poised, I think it was the Nifty Bank, the banking names. Is that still the top sector you like?
So, Nigel, I still feel that maybe we should see some kind of consolidation ahead as far as the markets are concerned. And really, what I was trying to allude towards the first quarter numbers which went by, we have seen some kind of moderation which has happened. Now, there are reasons which the corporates are assigning to maybe election quarter. We had all these freight issues which has hurt. So it will be important to maybe look at the quarters ahead if they are sort of recovering back, and which is going to be important factor and maybe the trigger for the markets to sustain the rally or the momentum. But I think till such time we should be in a range bound kind of a outlook for the markets. In terms of the segments, I think again, a lot of these data points are coming out as these companies have announced the numbers, and I see that the trends in terms of the growth could change a bit from what we had seen in the past. And I would say that some of the segments which are linked to the low income household or the mid income household, they are showing some signs of recovery. And from that perspective, all these companies into two-wheelers, agri, consumers, consumer durables, I think these are the ones where incremental money could be allocated. While we all know the valuations are not very comfortable, but I think at least the money should get aligned to where we see recovery happening or the visibility or the growth sustaining as far as the businesses are concerned. And I would imagine that these are the ones where we see the growth trends sort of improving. On the banking front, Nigel, banking is the only sector which is maybe trading at valuations which are lower than the 5 years average. And from that perspective, it makes sense just from the valuation perspective. But I also feel that incrementally what is happening in the banking sector would also mean that there are lack of catalyst for them to see strong up move. And when I say that, what I mean is that the NIMs maybe are under pressure, the delinquency is incrementally sort of rising. So I think those trends will mean that the banking stocks, while they are cheap, they will require more catalyst for them to sort of see, up move.
Vineet, Pharma, what's your view? There are some news reports, and we'll sort of go into some details with this with our colleague Ekta, who tracks the space closely. But there are some news reports which suggest that under the Inflation Control Act in the US, starting January of 2026, prices for some of the top blockbuster drugs are being brought down dramatically. Now, of course, these are sort of patented drugs by innovator companies out there in the US. But there is some concern that down the value chain, could there be an impact on generic companies as well? I don't know if you've seen some of this, but just your thoughts.
So Prashant, I've not seen this particular news, but let me say that, when, most of these economies, or I think globally, the governments are interested in bringing down the overall healthcare cost, and which are generally very high, and especially in the US markets, because the patented products there, they start at a very high price points. But I think from that perspective, we stand slightly more beneficiary because we are supplying generic drugs to them. And basically, we are also sort of supporting their cause of maybe bringing down the cost of medicine, which I think Indian companies have great strength, and they have proven themselves. And also, just coming out again from the first quarter commentaries from most of the management, I think most of them have spoken about the price decline getting arrested now as far as the generic molecules are concerned. So from that perspective, I would say that the US markets as such for our Indian companies today is standing on a good note, and maybe it sustains over the next 1 or 2 years or even years ahead. On that account, I would say the pharma sector for us looks okay. While the valuations there also have now run up, and it's not cheap as it used to be 1 year back. But maybe we are selectively looking at options in US. I think they are also looking at the act on the biosimilars and all that. So maybe that also helps some of the CDMO players, which is also one of the areas which we are focusing on.
All right, Vineet, thank you very much. Good to have you on today and get all that perspective on the market. The market, by the way, is really surging now, 240 points up on the Nifty. It's a very good-looking screen. Apart from HDFC Life, there's practically no other Nifty stock that's down. And a couple of the auto names as well as IT, they're really surging. M&M is thumping a 3% up move right now. Tata Motors has revved up in the last couple of minutes to keep it good company. The auto index there was one of the best performing indices today. And then there are other tech names, the Tech Mahindra, TCS, Wipro, all of them are getting some more sort of weight. And banks are in sync with tech. So tech and banks both firing, autos revved up. It's a real green looking morning.
Well, that's right. Good start to the trading session. But let's get focused on another management. Birla Corp. The stock has been under pressure of late. It hit a high of around 1,800 rupees, but it's seen a correction. In fact, in the last 1 month or so, the stock has lost close to around 17% of its market capitalization. To understand what's the way ahead post the weak showing in the first quarter, we have with us Mr. Aditya Sarogi, the CFO of the company. Hi, Mr. Sarogi. Good morning, and always a pleasure talking to you. Thanks a lot for speaking to us here on CNBC TV18. Well, the start to the year has been very, very subdued. Volumes are flattish. The EBITDA per ton has come in to around that 600 rupees per ton mark. What's the view for the remainder of the year? Earlier, you were talking about high single-digit growth in terms of volumes. And EBITDA per ton, you've always been guiding for around 850 to 900 rupees per ton. Post this weak start, what should we look forward to?
See, I'll give you a broad view. We are currently not making any revision to the guidance. So the broad view remains that Q2 will continue to be soft because of the seasonal effect of monsoon, and coupled with the fact that our ground check suggests that the government spend are not happening. But post Q2, we expect a meaningful recovery in the overall demand for the industry. And estimates and projections suggest that the industry should go at a rate of around 7% for the year as a whole. And we should not be different from the overall growth of the industry.
So 7% growth at the top line level for the full year, that's what you're saying. Can you, sir, also give us some sense of volumes as well? Overall, will this growth be more volume-led, or do you think that you will get some kind of a pricing lift once the monsoon period is over? And also just give us the immediate trends. Q2, what have you seen in pricing? Q1, what was the average realization?
Yeah. So in terms of growth, I meant volume only, growth in terms of volume.
Okay.
And in terms of the immediate term, because of seasonal effect, the monsoon effect, we are continue to see pricing pressure. And so far, we have seen about 2 to 3% drop in the realization. But post monsoon, beginning from somewhere September, October, we expect demand as well as the realization to pick up. And the costs continue to remain quite benign. So on cost front, all cement companies should continue to see healthy savings.
Okay, you gave us the volume target, sir. You expect to grow as much or more than the industry. So more than 7% is what we're noting down. EBITDA per ton, the lowest we've seen in multiple quarters. Where is it headed from here on? In Q2, again, it will be under pressure because you're saying pricing is down, though you have some cost levers that you're looking at. So on an average for the year, what should it be?
At this juncture, Nigel, we are not able to provide any guidance, but by the end of next quarter, we'll have better visibility because it's primarily going to be a function of the volume and more importantly, the realizations. So how the realizations shape up post the monsoon. So at the end of second quarter, we'll be in a better position to give you some guidance on the EBITDA margin for the year as a whole.
All right, sir, you know, second quarter is unlikely to be much better than the first quarter because of it's a seasonally weak quarter. So assume you do 600, 650 rupees on a per ton basis. It'll be very difficult to give an average of 850 to 900 rupees because that would mean the second half of the year you have to do more than 1000 rupees per ton. So in all probability, for the year, you could end up closer to around 800 rupees per ton, even if you do 1000 rupees in the second half of the year.
I'll not get into specific numbers, Nigel, but let me give you a perspective. Even in the previous financial year, we began at around 650 rupees a ton. Our EBITDA per ton was not much different in the second quarter, but we made up in the third and the fourth quarter. So this year could be no different.
Okay, all right. So let's see how you recover then. Also tell us about Mukudban. What is the targets for this year? I want three numbers with regard to Mukudban. One is on volumes. If you could tell us what is the difference between your remainder of your business and Mukudban on an EBITDA per ton basis, and what is the incentive you're factoring in for this year?
We are on EBITDA basis, we are not disclosing the numbers separately for Mukudban, but in terms of volumes, we expect to be at around maybe 2.7, 2.8 million tons for Mukudban this year. In terms of incentives, in this year for the company as a whole, we have baked in about 110 crores for the company as a whole, and we stand by that guidance.
Okay. Sir, let's talk about what's happening in the sector overall, right? So much consolidation, the bigger getting bigger and bigger. How do you view this? And then just tell us your own plans as well. How much capex are you putting to work in this year and maybe next year? And will you think of inorganic moves? And how will this consolidation impact you in your key markets?
Oh, in terms of capex for this year, we have guided for 800 crores. We are standing by that guidance. And in terms of slightly medium-term perspective, we have guided for increase of 5 million tons to moving up to 25 million tons by 27. And we stand by that guidance also. In terms of effect of consolidation, we feel that in the medium to long term, it's going to be a very healthy trend because as the weaker players move out of the market, and the consolidation is always seen to have a positive impact on the industry.
Okay, so just reiterating the numbers, this year you're putting 8,000 crores to work. That's your capex for this year.
800.
Sorry, 800 crores. And in the medium term, you're adding 5 million tons.
Yeah.
Okay.
All right.
Just to press on that other point, sir, about, the two giants lapping up companies left, right, center. So, and more and more as we see it, the consensus is becoming that, well, we're going to see a lot more of it. How does it change competitive dynamics for you?
In the short term, there may be some pressure, volume pressure, as they want to increase their market share. But in the medium to long term, we expect that a consolidation should be healthy only for the industry.
Yeah,
there
but
will be
don't
more
you think
discipline.
you don't participate, sir, in the consolidation?
As of now, our focus is to grow organically. Maybe in the long term, definitely, why not? If we have a good opportunity.
Because I recall when we chatted once, you said $100 per ton is okay. And these deals are happening now. I mean, I wouldn't think India Cement happened at the price that it happened, or even Penna, given the dynamics. So don't you think if you're getting something at $100 per ton, and I know plenty of assets actually, don't you think you're missing out? You would like to participate?
You're absolutely right, Nigel. But you have to look at the leverage position also. Our balance sheet leverage at current juncture does not give us that leverage or option to go for a major inorganic.
Okay. All right.
So what is the number, sir?
I think we were coming to you from a seller's perspective. Not to buy, but to sell, sir. Yeah.
Yeah. So seller, I would be. I have to weigh the assets more than the tangible assets. I have to weigh in what kind of assets I have. For example, what kind of mining mineral reserve, what kind of competitiveness I have in the market, what is my brand strength in the market. So it's a function of various parameters.
So what does that mean, sir? So you're saying, I mean, has an approach been made? I mean, have you been approached? Have you been offers been made? Nothing.
So you said that your balance sheet strength currently doesn't allow you to look at a big inorganic push. Just tell us what is the debt level? What is the thought process? Are you looking to reduce debt? Are you comfortable? What is the gearing and whether you're comfortable with it?
Our current net debt is 3,150 crores. We ended the year with a net debt to EBITDA slightly less than 2. So we are comfortable in terms of debt to EBITDA. Okay. But in absolute terms, the debt is not very low. Okay. So, and given our plans for organic expansion, we should not expect it to go down. So there will be repayment, but then we'll be raising fresh debt for the expansion.
Okay. All right. So very quickly, before we let you go, there was that Supreme Court verdict that came with regard to taxes being implied retrospectively if states go ahead and, ask for it. I understand that it shouldn't be that big an impact on cement companies, but the street still has a question mark. Your comment on that? For your company, is there any pending liability? And going ahead, do you think it'll be a big increase?
For our company, there could be some impact, but we have made full provision for whatever impact is there. So on our income statement, there's not going to be any material impact.
What is the amount?
Maybe we don't have the full calculation, but maybe around 9-10 crores or something of that sort. But we have made full provision, so there's not going to be any hit on the income statement.
Okay, Mr.
And for the sector as a whole,
Yeah, go ahead, sir. Finish that point.
For the sector as a whole, it will be a function of what kind of levies have been made by the state governments and what kind of stand has been taken by the individual companies. So if the company has gone for litigation, whether they have made full provision in the books or made any payments. So in case they have litigated the matter and not provided for in the books, only then there will be some impact.
Okay, Mr. Sarogi, appreciate you joining in. Thanks a lot. We're wishing you all the best for the remainder of this year. Things still looking like it's a bit of a flux, but you're sounding confident about the second half of the year. So we'll keep tracking that. Appreciate you joining in.
All right. Thank you very much, Mr. Sarogi. Let's move ahead. We have another company on the radar as well. eClerx reported numbers just a few days back. The first quarter was slightly muted for the company. The constant currency revenue growth came in a bit below street estimates. Margins were impacted in the first quarter due to wage hikes and senior level hires. We have with us Srinivasan Nadadhur, CFO of eClerx. Srinivasan, thank you so much for joining in. Let me start with the margin question first. So the way our team calculates margins is we don't look at other income and therefore the numbers. So your margin has dipped to around 17.2% in the first quarter versus about a level of 21%. And even if we go by, your company calculations, I think you're just below the range. You've guided for 24 to 28%. First quarter, you were at 23.3%. So just explain to us, is it only because of the hiring or are there any other sort of cost pressures? What about deal pricing as well? It's a wide range you've given, 24 to 28%. Usually companies give, like 150, 200 basis points. So what is the margin profile that you're looking at for the rest of the year?
Sure. Thank you for having me on the call. To answer your question, the 400 bips drop in margin, whether we look at our calculation or yours, is largely because of two things. One is the wage hikes, which I would assume is somewhere between 60 to 70% of that overall drop. Another 20% because of business development hires and augmenting our sales capabilities. And the remaining is because of other items like electricity, rent, and so on and so forth. And that's why sort of our margin has come below the guided range of 24 to 28. But that is typically what happens in Q1 of every year. So even if you look at the same quarter last year, I think we had dropped maybe 506 bips according to our calculation. And we think that, we will be able to recover this over the next 3 quarters because of increases in revenue, because of replacement hiring, thanks to attrition, and therefore we will be able to come back within that range that we have guided for.
We are practically, halfway down the year. The second quarter is also practically coming to an end. So the visibility that you have now, do you think you will be closer to the upper end of that guidance or the lower? Because the wage impact will be made up, as you're saying. So then it's really all about business, the pricing that you're able to get, and the deal momentum.
Yeah, so at the moment, it would be safe to assume that we will be somewhere around the middle. That's how I would look at it.
Middle of the range.
Yeah.
Got that. Srinivasan, hi, good morning. Prashant here. What about top line growth? Because I think we are at low single digits right now, right? Last time we spoke, you'd said that you'd aspire for double digit, you'd aspire for double digit growth. Could you give us would you like to reassess that? What should we expect? What should we pencil in?
Well, given the deals that we have signed in this quarter, there seems to be healthy momentum. Given the pipeline of deals that we have, which is also very healthy, we are going to stick with our original aspiration of double-digit growth. So we do think that things will improve from Q2 to Q4.
This is an aspiration, or this is you said aspiration, but you're confident you'll be able to do it?
We are reasonably confident. We are reasonably confident we'll be able to do it.
Okay.
Let's talk about double digits. So we are reasonably confident about hitting double digits.
Okay, so give us some more color on that, Srinivasan. Where do you see demand picking up in terms of verticals, in terms of geographies? What will get you to that double-digit revenue target this year? And is it going to be sustained? Because in the last couple of years also we were coming off COVID, etc. So the full year growth numbers have been very patchy, from very high levels to just dipping below the double-digit mark. So will this 10% plus be sustained? And some color on the geographies and the verticals that are firing up.
Sure. Of the three businesses, I would say our financial markets continues to show the most opportunities. So we are seeing a lot of deals thanks to regulatory pressures in our client geographies. So that's leading to a lot of work for us. Then in our customer operations, again, we see opportunities to improve in customer experience and chat, voice support. On the digital, it's a bit of a mixed bag. So we are seeing demand in some pockets in high tech, etc. But luxury and manufacturing continues to be a little bit of a, I would say, constraint. So that's the overall picture for our three businesses.
All right, Srinivasan, final question before we let you go. You're sitting on a good amount of cash, I think 1,000 crores odd. What's the utilization plans out here? Return some back to the shareholder, or is there some inorganic growth on the anvil?
Yeah, we just did a buyback in Q1. So I think that's not reflected in the Q4 cash position.
Okay, so it'll be relatively lower then, the cash in books.
That's correct.
All right, and no inorganic growth?
We are still looking, but nothing conclusive so far.
Okay, we'll wait by then for an announcement on that front. Thanks a lot, Srinivasan, for joining in and giving us all those details, how you see business shaping up. Well, time to slip into a short break, but on the other side, we'll get exclusive chat going. We'll have Rajat Rajkaria as well as Sachin Sane of Motilal Oswal Financial Services as their 20th Annual Global Investor Conference kickstarts from Monday. Stay tuned to that conversation.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta, thank you for...
Okay, welcome back. The market's given up some gains, actually not some, but quite a bit, about 100 points off the day's high for the Nifty. The Nifty is up 150 points, 24,300 is where we find ourselves at. Now, as promised, the Motilal Oswal 20th Annual Global Investor Conference kickstarts in Mumbai from Monday. To talk about this, as we always do, as we've always done, we have some of the top people with us here. Rajat Rajkaria is Managing Director and CEO at Institutional Equities at Motilal Oswal Financial Services. Sachin Sane is Head of Sales, Institutional Equities at Motilal. Gentlemen, great to have both of you here in our studios. I think it's going to be manic next few days, as it always is, but also a lot of fun at the conference. 20th. So, I mean, it's a long journey that you've seen, and it's become like really a marquee event in the financial calendar, at least here in Mumbai. Very well attended as always. Rajat, tell us a little bit about what's happening this time around. How many companies? What's the size and strength looking like?
Yeah. No. Good morning. Thank you for having us here. It's sinking in that this is the 20th year of this conference. Started in 2005. Yeah. I remember that time we used to highlight the $1 billion club market cap. today in the 20th year, we are talking about the $100 billion market cap, right? We have been, I think, both fortunate and blessed that we are in this era of this country's capital market journey, where in the last 20 years of this market, we have been well associated with bringing some of the best platforms for our investors. So this conference, which has grown in size in the last 20 years, just to share some numbers, this year, and needless to say, every year is the larger than the previous year. We have about 200 plus top Indian corporates. We have about 1100 plus investors from everywhere in the globe to every corner of the country. And plus, this time we are doing a record 15,000 plus meetings for investors over a 3-day period, right? I think two important things that I can further highlight: the diversity of the participation of the companies is the best ever, right? And that's a way how the character of this market has evolved. And secondly, the same diversity we see in the investor base also. You know, a decade back, conference used to hover more around, suppose, mutual funds and FPIs. Now you have mutual funds, FPIs, of course, they have grown in size, but then you have pension funds, insurance, family offices, HNIs, direct retail. I think this probably is at the most interesting point of the last 20-year journey that we have been hosting this
conference. You're talking about the $1 billion club. We had Ruchir Sharma with us. Shireen was talking to him on Friday. He said that over the last 2-3 years, India has seen the largest number of billionaires being created. I mean, the highest number, you know. And of course, a lot of it is to do with stocks, assets, equity assets, which have grown in value and incredibly well. What's the theme this time, and what are you really sort of bringing to the table in terms of thought leadership? Because markets have done phenomenally well. I think the regular question always is, where are we in the cycle? And I think we'll get a lot of that. So let's just start with that.
Yeah. So, you know, one very interesting theme that we are developing, if you look at globally all the investable 30-40 countries, right, you can divide half of them into size and half of them into growth. We probably are the most unique one where you have size into growth, right? Staring at 4 to 5 trillion and then growing at an annualized rate of 10 to 12%. We are rebuilding in the next 7 years what we have rebuilt in the last 78 years as a country. So I think the theme this year is that India is a destination where you have size and growth, point number one. Point number two, if you look at around the globe, you have events which are making things volatile, right? Whether it is east of us or west of us, right? Right from an US elections to the China slowdown to the Far East woes, right? I think we are again standing out as an investment destination, right? And the third thing is that till now we have always been talking about demand, right? And kudos that we have now almost 30 to 40,000 crore domestic pool coming into markets every month. But I think important is today when we stand, we see supply also building up into this market. So this market is going to be a lot more interesting going forward, because as much the demand for equities is going to grow, you're also going to see good quality supply also building up.
And that's great, right? Because that balance is so important to ensure that we don't get into some sort of a bubble where the supply-demand mismatch goes sort of beyond expectations. So actually on that, Rajat, and maybe Sachin come in here as well, because you have so many client conversations. It's a trend that has been firmly established, that it is domestic investors, retail investors, institutional investors that are ruling this market. Foreigners have been consistent sellers throughout. What chatter do you pick up in those conversations? They all say they like India. What is the issue? Is it valuations? Is it better returns in the home market? And what would you be looking forward to in terms of all the FPI conversations that will happen in the conference this year?
Yeah, so good morning and thanks for inviting. I think the point which you well mentioned, so most of the FIIs and FPIs are thinking of valuations as one of the key concerns for Indian markets. Having said that, the interest which we are seeing from FPIs in the conference is also fairly large, and as Rajat just mentioned, it becomes bigger every year. So even FI interest in India is becoming bigger, and our conference is going to showcase that.
So they're not putting the money, but they're coming.
Yeah, exactly.
They're coming for sure.
So we'll ensure they will put money also.
No, but you know, just focusing on this point, the FI ownership I think has come down to the lowest we've seen the last 12 years or so. I think one of your notes as well mentioned that 18.5% odd. Are we getting to a phase where India is too good a market for them to avoid? You know, they've been selling out is what we have seen. So your comment on that?
So I would just like to share one data point. Last quarter, China saw $15 billion of FPI outflows. That was June quarter, versus India roughly $1 billion.
Yeah.
So I'm just saying that, you know, India definitely has the opportunity to get returns from the companies in India.
Yes.
So you have to see a relative.
So it's more an emerging market basket selling that we've seen, and that's why India is seeing a smaller part of that.
Absolutely. So
over the last many years, I think both of you would agree, it always used to be FI. The balance of power was always foreigners because they had the big guns and the big firepower. That has completely changed, and how, right? I mean, last 3-4 years.
You know, every evening we used to go to bed seeing the net FI flows for the day. And every morning we used to wake up seeing how the US markets closed last night. I think that phase has kind of been left behind us. Nowadays we see how much DI is bought every day. Right.
And what domestic companies are doing.
So I think, in fact, just to add, Surabhi, to your point, a lot of institutional clients call and ask as to what is retail and HNI and family office and PMSs are doing in the markets. So it's a very interesting time which we are in.
And to be sure, we're not gloating. Right?
We're just acknowledging a change in trend.
It is a fact. It's a change in trend, and it's completely changed. What can what can cause this 30-40 billion, 1,000 crores which is coming into the market every month, Rajat, as you said? What can anything shake it? And a period of underperformance? Because as someone said, 8 out of 10 investors in the market now have come in the last 3-4 years. They've not seen a down cycle. And I think that's again something which you guys, I'm assuming, would talk about and discuss. And can anything shake this faith, your sense?
Look, I think first we need to understand why this is happening, right? It's a very natural phenomena of a per capita GDP growth that you see. When you were at $1,200, you were essentially meeting your basic demands. Today you are at 2,500. The pool of money that you can afford to, spend is growing, and just a linear growth will take this 2,500 to maybe 3,500 in the next 4 to 5 years, right? So the discretionary pool is only going to grow. That is one. Second, equity. We can look at time periods, but at any point of time, you should assume that equity as an asset class post-tax can give you 12-13% return, right? The compounding impact of that comes with higher income level. So whether this 40,000 crores becomes 70 or whether it becomes 30, I think is less of relevance today. What is important is that in line with the GDP growth, if this number keeps growing, right, that's a large pool of capital over the next 5-10 years, right? And it's a you can say it's a compounding impact where the money is going into the market is growing that money, and that is pulling in more money into this, right? Only a period where you go through a very low economic growth, where your faith in the corporate earnings slows down, can slow down this, which we are not seeing at least for some time.
So very quickly, gentlemen, last question. Rajat, what are you most excited about in terms of the corporate conversations that we'll hear in the conference? Because the last year has also seen a trend in terms of a lot of new businesses have come to the market, and you mentioned that, right? New supply. Now, whether it's an Ola or it's a Nykaa or it's a Honasa, a lot of new companies are coming in, and investors are liking the whole turnaround journey as well. Zomato, we're waiting for Swiggy to come. So what is going to be the wow factor for you in terms of the corporates?
I think there are 3 very important questions that are being raised right now, right? I think first, last 18 months we saw manufacturing as a sector come back with a bang on the capital markets, right? We need to now see the next 3-year earnings progression for them to sustain where they are. Secondly, we saw consumer and discretionary actually slowing down in many categories last 18 months. And generally investors would like to pick them at the first sign of a turnaround. Does this good monsoon and low rates in the coming future, right, help that? So that's again second question that people would want. And I think third, the most important is financials. Such a large sector in the market, not been performing well, deposit growth a challenge, right? Again, investors tend to pick the underperforming sectors at the first sign of a turnaround. At this stage of the market, while the markets have done well, you still have spaces which have underperformed. So I think people still want to make good money from a high of this market right now. That's what they are going to pick from them.
Whether the underperformers can start turning around, and that's the next.
Yeah, and how much leg the performers have to continue to carry.
So the large private sector banks should be top of mind then. Some of them haven't done much in the last couple of years.
Absolutely, because they still constitute a large part of the earnings and the market cap both.
Indeed.
Okay.
Got that. I think we've been told to
wrap.
we have a lot more questions.
We'll see you all at the conference.
Thank you very much, both of you, for joining us, Rajat and Sachin. And we'll see you guys again on Monday and over the next couple of days as the conference comes on. So that conference, Motilal Oswal Marquee Conference, kicks off this Monday, 19th. And of course runs for the next few days. We'll take a quick commercial break here. We're going to come back. Mitesh is going to be with us with some technical trading ideas. The market was up 250. It's up 150 now. So there's a bit of give back, 24,300. Stay tuned. More coming up.
I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones. People are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
करीब 25,000 युवा हर साल विदेश में मेडिकल एजुकेशन के लिए जाते हैं और ऐसे ऐसे देश में जाना पड़ रहा है.
All right, welcome back. 150 higher on the Nifty was more, as I said, about 100 off the highs. Mitesh is with us with what he'd want you to do now. Mitesh, good morning again. Thanks for joining in. What are your trades?
Yeah. Prashant, the buy on HCL Tech, and this is one stock, which is trying to break into all-time highs and open the gap up today and kind of cooled off a little bit with the market coming down, but not much. So the setup is still positive. Buy here with a stop at about 1629 and a target of around 1685 can be looked at. And the other one which I like is Dixon. It was a recommendation earlier in the week as well. still looks good. So buy here with a stop at 12,080. Look for targets of 12,600.
Okay. All right. Mitesh, thank you very much for that. With that, I think we have to just take a break, leaving the markets with a gain of about 150 points. Mid-cap index is absolutely in sync with the Nifty, at least as of now, a gain of 0.6%. We take that break, and after the other side, it's time for our special segment. It's the economy. Lata today is connecting with a bunch of guests to discuss the rising demand for bonds and whether insurance companies invest some of their long-term funds in infra projects. Stay tuned for that.
सुनता हूं तो हैरान हो जाता हूं। और इसलिए हमने तय किया है कि अगले 5 साल में मेडिकल लाइन में 75,000 नई सीटें बनाई जाएगी। We want justice! हत्यारे को फांसी दो!
It's almost more than 4 days and the strike is continuing in Arjikar and other places of government hospital. But right now let me show you the situation which shows that how the health system has been badly affected. This is the emergency of Arjikar where there is no one, there is nothing here, everything is closed and the doors are closed, and even you can see that there is lock and key. There is tala there, this is lock and key, and nobody till yesterday there were emergency people were coming, but now there is the emergency in one of the most important government hospitals in Kolkata. If this is the situation, then it is a very, very concerned area, and the patients are sitting there as you can see, but there has been no remedy for them. That is also now a growing concern, that because of this strike continuing, the emergency of this Arjikar Medical Hospital is now totally stopped. That's also very big area of concern, and this is also something which is concerning and which is putting the problem of state administration. But students are still continue because they believe their demands are still not made. $140 करोड़ मेरे परिवारजन अगर संकल्प लेकर के चल पड़ते हैं, एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं, तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students.
Welcome to Indianomics. One stark feature of India's bond market so far has been the huge borrowing by the government, which pushes up yields for corporates. This decades-old trend is about to change. For the first time, demand for bonds is rising because of an over 20% annual growth in insurance and pension fund kitties, as well as demand from foreign investors because of index inclusion, and banks who are faced with the LCR requirements. So the point is, can insurance companies therefore invest some of their longer-term funds in infrastructure projects? That's the debate we are having today, and joining me are two bond buyers. HDFC Life's Vibha Padalkar and SBI Life's Amit Jingran. And then we have an infra bond issuer, Rajkiran Rai, the Managing Director of NABFID, the National Bank for Financing Infrastructure and Development. Also joining me are two, you may call them moderators, former insurance regulator Nilesh Sathe and bankruptcy code expert Behram Vakil, partner at AZB. Gentlemen and Vibha, thank you very much indeed for your time. Well, you are the issuer and you want them to invest in infrastructure. Make the case, Mr. Rai.
Actually, if you really look at international scenario, that infrastructure is funded by bond markets and typically insurance and pension funds. And if you are looking at the foreign investment which is coming into the country also, these are typically the pension funds and the insurance funds abroad which are investing in India.
But they are not touching infrastructure in India, sir.
They are. Actually, if you look at InvIT and all the solar platforms.
InvIT, yes.
Because they are all infra assets. Actually, I am not talking of the greenfield stage.
Okay.
It is only completed operating assets which are getting financed and refinanced, and they are the biggest investors there. Now, Indian insurance and pension funds have also evolved. Today, total assets and management under insurance, pension and PF, you put it together, it is 115 lakh crores. And it is more than 50% of the scheduled bank deposits today. And they are growing almost double the speed of bank deposits. So now where they will invest? Basically, typically 97% of the assets are G-Secs and AAA rated bonds. And now the yield there is going down. Somewhere the Indian insurers also have to look outside their typical investment, which is a very, very safe investment, because I understand their priority is safety, but somewhere they have to give returns also, reasonable returns with reasonable safety. So I think they need to get into this, because why we need to give these returns to the foreign investors when we have our own assets under management, which is substantially big. So why I say this is domestically, the kind of long-term resources is very much available in India. We used to look outside earlier. Now it is available in India. So much of it is more than bank deposits. Like every year, the incremental
money is
more than bank deposits.
The point is taken. Let me get Jingran and Vibha into the conversation. Mr. Jingran, will insurance continue to grow at this pace? I mean, the first 4 months is 35%. Will your kitty grow that well?
So the kind of Indian demographics and the kind of social changes that are happening, the insurance and pension money both are slated to grow in future at much more better place. So having said so, we are, as Mr. Rajkiran Rai quoted also, the growth will come from these two sectors, and the investment, of course, insurance being totally risk averse. That is one point we have to keep in mind. Wherever we invest, we have to be very sure that the money comes back. So IRDA has also permitted around minimum 15% of infrastructure funding, and insurance industry as a whole is 9% plus. So yes, the growth will come, and we will also invest as the world over trend is.
Of that 15% that IRDA has permitted, I think 9.5% only has been allocated. This is Mr. Rai's figures. So you all still have a headroom. You all are refusing to touch InvITs to the same extent, or infrastructure to the same extent.
We are not refusing to touch. I will say that we are investing, but the proper security in the market should also be there.
Fair point. That is the point both I think Mr. Rai and I are trying to make. The amount of securities that will be available to you, Vibha, is going to reduce because the number of people buying bonds has increased. Banks, because of their HQLA, the high quality liabilities that they have to park, already 27% of deposits is going there. With the new LCR, liquidity cover ratio, 30 rupees of every 100 rupee deposit will go for bonds. That means an additional 3-4 lakh crore demand is coming. Foreign funds, because of index inclusion, are going to buy 25 billion worth of bonds. Some of it has come in. So your what is now yielding you 6.9 10-year bond will very soon be 6.75. Even then you will only chase bonds?
So let me just deconstruct your question. Yes, it is a fact that as fiscal prudence continues and government continues, and in all probability they will, the level of borrowings is also going to go down. So if you were to look at last year, given the where we were, it was about 15 trillion rupees of borrowing. Of the 15 trillion, from memory, about 50%, about 30 to 40% was above 15 years, which is what is attractive to Amit and me. Of that, 50% of the long tenured bonds are subscribed to by insurance companies.
Yes.
And that will just continue to grow. Now, to your point, yes, a scenario can come, whether it's 3 years, 4 years down the line, wherein our growth surpasses the
bank deposits.
And the long-term, the issuance of long-term bonds. Now, the only good thing is, as to your question as to will you continue to subscribe, to some extent, yes, because when we write an insurance policy, the rate is locked in. So the guarantee doesn't change. So if it is at 6.5% guarantee, then I'm searching for a bond at that time for me to have no ALM mismatch.
Yes.
Because insurance companies, first and foremost, have to, the golden rule is that you cannot have an ALM mismatch. We're not looking to, unlike maybe other financial
like
products, are looking to make that extra bit on, so that you have a yield pickup that you have. Yes, we do that on our own shareholder funds, but not on the policyholder funds. So safety becomes this because we are in fiduciary responsibility. So the way, the two can happen together has to be for some time a government backstop towards insurance companies, because ultimately these are, you and me and people out there whose long-term savings that we are custodians of, and we cannot absolutely miss a beat on that. That's what drives us.
Fair point. Mr. Sathe, this is where you come in, sir. If I, as a person who will eventually be drawing pension, I'm asked, I don't want my pension to go into an infra project which perhaps may not take off, which may perhaps become a bad loan. So I want my pension money. But at the same time, you want the country's infrastructure to benefit from this long-term money. As a regulator, or the former regulator, how will you be able to marry both and ensure security, but at the same time, a growing pool? How will you marry it to the infrastructure needs of the country?
The first is the 15% limit which is prescribed is yet not followed by many insurance companies. So there is still scope for investment in infra. This is one point. Second is, as Vibha said, insurance companies are more onto safety. So although 50% of their investable fund has to go to government securities, most of them, public sector and private sector both, insurance companies have more than 65 to 69% of their investable funds under government securities. This is second part. And the third is, now IFRS is around the corner. And in that, mark-to-market losses will have to be taken into account.
Okay.
Now, everybody is worried about this because this is going to have a dent on the balance sheets of many insurance companies. So they probably may not venture into any sort of new investment avenues unless IFRS stabilizes. This is what is my view.
Okay. Let me get Behram also into the picture, because in a way, Behram, I hold IBC the culprit. We had a hope that if IBC worked very well, then people, people who are custodians of pension funds will be willing to invest in infra. But IBC has not lived up to the promise. It's taking forever to resolve bad loans, and recovery is like next to nothing. It is almost bankruptcy value that you're getting for recoveries, except in perhaps two steel companies. So do you think there is any hope that the bankruptcy law will become a little better? Or at least a carve-out can be given to insurance investors?
No, so I think, thanks a lot, Lata. Of course, I'm biased, as you know, but I think it's a bit unfair to say that IBC has not done well. I think if you break it up into pre-COVID, the first 3 years, the recovery was about 44%. You know all these stats. It was double before. And it was about 18 months, even though billions of dollars of cases, and which was the fastest in the world. After that, no doubt there's been a slippage and things have slowed down. But we are hoping that there will be a bunch of amendments which will increase the speed and the efficiency sooner than later. Sometime this year is what the government says. So I think that should be very good for the system.
Can you just detail a little what kind of, you're expecting laws that will speed up cases? Will there also be laws that will increase the recovery for the lenders?
It's a direct correlation between time taken and the recovery.
Sure.
So if in the old days, as I say, the first 12 cases, we got close to 50%. And even if you look at the three, of course, those were financial institutions, Divan, Shrey, RCAP, etc. It took about 18 months, and I think it's not a bad recovery.
Yeah.
But I don't want to keep defending IBC, so I get your point. I think on the flip side, what all the other panelists have said, that we need the money desperately. We all know that, $5 trillion economy needs $4.5 trillion of infra. And we have these deep pools of capital. It's growing fast, but it will have to be credit enhanced.
Okay.
So whether you do it like NARCL, our bad bank, where there's a government backstop, or you do a FLDG, you create some product where at least in the beginning, because as all of us have been saying, as a pension or insurance, you are fiduciary.
Yes.
So your safety has to come first.
Okay.
Again, we know all these models, like don't do any greenfield, do brownfield. With roads, you include construction, toll rails, sab kuch ho gaya, and then you do it.
Yeah.
So, and then as the comfort comes, as the comfort comes, then you will reduce the backstop. And if it's good for CPPIB, why is it not good for our own insurance company?
Story so far, we are heading into a time when the issuance of government bonds is going to be less than the number of people who want to invest in government bonds. So will they put that long-term money in infra? As Behram says, perhaps the way out will be to have some credit enhancement, somebody guaranteeing the first loss from infrastructure projects. Well, those questions to my panel after the break. For Bazaar viewers, you will have chartbusters, but you can get to hear the entire discussion after market hours.
%38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your carbohydrate intake with all the junk food that is there, and you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein, because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
बांग्लादेश में जो कुछ भी हुआ है उसको लेकर पड़ोसी देश के नाते चिंता होना मैं इसको समझ सकता हूं। मैं आशा करता हूं कि वहां
Ola Electric zooms more than 10% as it releases its Roadster range of electric motorcycles. Brokerage's HSBC issues a buy rating even as net loss widens in the first quarter. Hindustan Zinc falls over 7% as promoter Vedanta increases the size of its offer for sale to 13.37 crore shares compared to 11 crore shares earlier. Electronic Mart shares rally but cool off from the highs of the day after a big block deal which sees over 8% equity worth 712 crore rupees change hands at 232 rupees a share. Aurobindo Pharma comes under pressure as the company receives a warning letter from the US FDA for its UGA Unit 3. And the Nifty IT index continues to be the top sectoral gainer, rallies for the fifth day in a row following cues from the tech-heavy Nasdaq's recovery as recession fears ease in the United States.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Hormuz. Well, Hormuz, it's that sort of a day yet again. The overnight queue was pretty good. We opened up gap up, but we were unable to sustain at higher levels. And early this morning, it pointed out that around the 24,350 to around 24,400, that could be a level where we could see some supply. And Pat, from those highs of the day as well, we have come off a little bit. The breadth of the market is still in favor of the number of stocks advancing. But I think, that buy the dip is going to be tested in today's trading session because we've got that dip. Let's see whether or not we can bounce off from here.
It's been the story for almost the last week or 10 days, right? The Nifty has struggled to cross that mark of 24,350. And you could see, pull up the chart that shows the fall from the highs of the day. That's the chart we are looking for. And it's been a struggle for the Nifty. We're getting to 24,350, but we have not been able to cross that. Even Wednesday was a range-bound trading session. We only managed to get to 24,200 then. And for the week, we still remain lower. 24,367 is the level that we need to focus on for the Nifty to end positive for the week. And if that does not happen, the Nifty will fall for 3 weeks in a row. And the last time that happened was between July and August of last year. So it shows the kind of market that we've been in. But so far, it's been that story. The highs just not able to sustain.
All right. Well, let's focus on a stock then. Sarda Energy and Minerals. Well, that stock has been on fire in the last few days. Now, the company's resolution plan to acquire SKS Power, well, they have got the green signal from the NCLT. To understand more on this as well as the way ahead, we're joined by Mr. Kamal Sarda, who is the Managing Director as well as the Chairman of the company. Hi, Mr. Sarda. Thanks a lot for speaking to us here on CNBC TV18. A rare interaction is what we have with you, but that's telling you the kind of news that's come in with regard to SKS. Well, give us a couple of details. Now that you've got the nod from the NCLT, is it a done deal? Or do you think some of those competitors that were vying for this asset, they can approach the Supreme Court?
Yeah, it is done deal. And whosoever trying actually to oppose it, they have to first go to INCLAD and after that Supreme Court. And when COC has voted 100% and INCLAD already actually heard us and given a good order in our favor. Also, NCLT has given favorable order. Very remote chance for others.
Okay, so you believe that it's a done deal then. So congratulations, Mr. Sarda. And this is something that the street was really waiting forward to. And that's why I think, in the matter of the last few days, The stock has moved up from around that 260, 270 rupees all the way to around 330 rupees. Let's understand further aspects about this deal. You have to pay around 1,805 crore rupees. Could you give us a few more details? How do you fund this? And what is the balance sheet of the acquired entity looking like, SKS Spa?
Actually, SKS will come as free of debt.
Okay.
And already we have arranged finance, and we'll fund actually this SKS from internal accruals and debt. That won't be more than 1550.
Okay. You're saying that from internal accruals as well as debt is what will fund it. And out of the total 1,800 crores, how much of it will be debt? I missed that number.
Say 1,800 is not correct figure. It may go up to 2,000. Okay. And 500, approximately 500 to 600 from our side, and rest will be the debt. And Sharda standalone is a debt-free company.
Correct. Got it. And this, you're considering it as 2,000 crores because there'll be some capex to get the plant up and running. Could you quantify how much is that capex you have to incur to get SKS, or all of that is included in 2,000 crores?
It is a running plant, and NTPC is managing it very well. And there won't be any cost on running the plant. Am I clear?
Yeah, no cost you'll be incurring to get the plant running because it's already a running plant, correct?
Yeah.
Okay. All right, sir. You have given us this turnover number of the plant as of last year, which is very helpful, 1,367 crores. But what kind of margins does this plant do?
Actually, it will have minimum of 30% to 40% EBITDA.
Right. Mr. Sarda, since you are planning on doubling the capacity at that plant of SKS, what is the targeted EBITDA that you are aiming for once you manage to double that capacity? Could you share a number on that, sir?
That's what I said, actually minimum 30, and it can go up to 50%.
Oh, okay.
Yeah, I don't think so. Cost of all will depend on the realization of power rate.
Okay.
Because in this configuration, actually about 30% to 50% will keep as medium-term power supply, and rest will be short-term. And for medium-term, where we have PPA, we'll get coal from Coal India at IPP rate. It's a concessional rate. And rest will be from our mine.
Okay, all right. So now at 600 megawatt, what is the total coal requirement, sir? If you could give us in million tons, what is it? And how much of that will come in? You have a mine that's only 60, 70 kilometers away. So how much you will take from your own captive mine and how much from Coal India you will require?
Say about, I will give a rough figure, about 400 tons of coal every hour at 100% capacity.
400 tons every?
400 tons per hour.
Okay. And how much? How much will it come, sir, from? How much of it will come from your own captive coal mine?
Say it will come. We'll try to give. If it is short term, we will supply from our coal mine, and we are increasing the capacity from 1.8 million ton to 5.2 million ton, and that is under process in anticipation of SKS requirement.
So we'll have to understand in further detail about how this goes. But going by what you're saying, the current 600 megawatt plant that is running will give an EBITDA on an annual basis of at least 500 to 600 crores. Is that correct?
I think so.
Okay, got it. So that's about the current.
I can confirm actually after stabilizing the plant in our.
Correct.
Right.
No, because you've given us around 1,350 crores of revenues, 30 to 50%. We are just extrapolating the number. So in the vicinity of 5 to 600 crores is as of now what things stand. Now, you're also indicated that you have the probability of going ahead and increasing the capacity by another 600 megawatt of capacity. Timeline for that and capex you'll have to incur for that.
Yeah, first we will stabilize this plant at 100%, and simultaneously, parallelly, we'll appoint some consultant, because there are possibilities that we can go for 2 into 300 or 1 into 600. And after that, actually, we'll go to our investment committee and then the board. But we will definitely, surely aiming for making it 1,200 megawatt. And normally, after taking a decision, it will take 3 years to 4 years maximum.
Okay,
with
so
all
3 to...
with all the infrastructure of 1,200, like material handling and water supply already in place, even evacuation is in place.
Correct. Just to understand, sir, when you're to go to 1,200, you will take around 3 to 4 years approximately. And capex that you'll have to incur, we missed that number.
Approximately 6 to 7 crore per megawatt.
6 to 7 crores per megawatt. So that will be roughly around 600 multiplied by 6 crores. That will be a very large number then, sir.
Which one?
To take your
capacity around 4,000 crore plus minus, say. I can give you figure actually after consulting to consulting firm.
Okay, so around 3,500 to 4,000 crores to double your capacity. Are we getting those numbers correct?
4,000 to 4,500.
4,000 to double your capacity, to go from 600 to 1,200. And at optimal levels, you'll be able to, at 1,200 megawatt, you'll be able to do at least 1,000 crores of EBITDA.
Yes.
Okay, got it.
One final question from my end, Mr. Sarda. The Supreme Court decision that came in on Wednesday about the retrospective taxation, about the state's ability to levy taxes on them. Is there any impact on Sarda Energy per se? Do you have any retrospective claims pending, sir?
No, we don't have.
All right, Mr. Sarda, we'll leave it at that. Thanks a lot for sharing with us your thoughts on the acquisition, for the favorable verdict that has gone in your favor as well. That was the management there of Sarda Energy. Time to shift focus then to our special segment where we get you a few ideas for profit from Moneycontrol Pro. Lekha Badlani of Moneycontrol.com joins us now to talk about a stock that she's tracking very closely.
The stock pick is Dhanuka Agritech. Now, talking about its recent first quarter results, its revenue grew by 34% YOY, which was driven by a volume growth of 39%, which is quite impressive. Now, its gross margin expanded by 180 basis points and EBITDA margin increased by 270 basis points to 14.5%. The company has received positive market response for its recently launched products, and it further plans to launch 2 9(4) molecules and 1 9(3) patented molecule in the next 6 months. The new Dahej plant contributed around 14 crores to the top line, but the EBITDA remained negative. However, we think there are ample opportunities from this plant with respect to captive consumption, technical exports, and contract manufacturing, thus having the potential to improve the margin profile of the company. The management expects this plant to become profitable by FY27. Also, compared to the international markets, the domestic agrochemical market remains robust, and pricing also remains healthy for specialty products. Supported by a richer product mix and the possibility of above normal monsoon, Dhanuka now expects lower double-digit revenue growth in Q2. The full year FY25 revenue growth guidance has also been revised upwards to 18 to 20%. However, it expects gross and EBITDA margin to decline by 100 basis points each, owing to the higher base of last year and negative margins of the Dahej plant. Trading at a PE of 27 times FY26 estimate, Dhanuka remains reasonably valued for a long-term buying opportunity.
Dhanuka Agritech there from Moneycontrol Pro stock also in focus because of a share buyback. Time for a short break. When we return, we'll be joined by Navneet Kumar Saraf, the CEO of Technocraft Industries, to discuss their quarter gone by. Stay tuned, back on the other side.
हालात जल्द ही सामान्य होंगे। खास करके 140 करोड़ देशवासियों की चिंता कि वहां हिंदू, वहां के अल्पसंख्यक, उस समुदाय की सुरक्षा सुनिश्चित हो। भारत हमेशा चाहता है कि हमारे पड़ोसी देश सुख और शांति के मार्ग पर चले। शांति के प्रति हमारा कमिटमेंट है, हमारे संस्कार है। हम आने वाले दिनों में बांग्लादेश की विकास यात्रा में हमेशा हमारा शुभचिंतन ही रहेगा, क्योंकि हम मानव जात की भलाई सोचने वाले लोग हैं। भारत के लिए गोल्डन एरा है। वैश्विक परिस्थितियों की तुलना में भी देखें, ये गोल्डन एरा है।
Back with us here on Chartbusters, a similar story playing out for the benchmark indices. The Nifty struggling to hold on to that mark of 24,350, but still trading with gains of 100 points, a 0.5% higher. The IT stocks are continue to lead the gains, currently 1.8% higher. The IT index is among the top sectoral gainers. The top sectoral gainer is actually the Nifty Realty Index, and that is the top sectoral gainer, trading with gains of over 2%. The broader markets are doing well for themselves, 1% higher for the small cap index, 1% higher for the mid cap index as well. So overall, the broader markets are doing well, but all eyes on the Nifty, whether it manages to stage some recovery from the lows of the day. But moving on then onto the next earnings interaction we have is Technocraft Industries. The company reported a 5.5% decline in its net profit on a year-on-year basis. The revenue, however, was up. But Navneet Kumar Saraf, the CEO of the company, is joining us now to discuss the numbers in greater detail. Mr. Saraf, good morning. Thank you so much for joining in. I'll start off with the margins straight away. They were down on a year-on-year basis. If you could elaborate what impacted the margins this time around, and they have been below that 20% mark for last few quarters now. When do you see that going back to that level of 20% and then beyond that?
Yes, good morning. Thank you for having me. So, yes, the margins compared to the first quarter of last year are a little lower this quarter. Having said that, we are better than the preceding March quarter. The main impact on the margins have been, a reduction in volumes in our scaffolding business compared to the first quarter of last year. But it's actually picked up over the last 2 quarters. We had some slowdown in the European markets and, due to the ongoing Ukraine crisis, but that's actually picking back up. The India business has also been doing well. So as a result of that, we are seeing the margins coming back. The drum closure business also has been improving on the margins front. So I think overall, while still lower compared to the first quarter last year, but on a quarter-on-quarter basis, it's been increasing.
All right.
Do you expect to end FY25 with a margin of 20% plus?
Yeah, so, there are numerous things happening in the scaffolding business. We have our new plant in Aurangabad that's getting commissioned. So we'll see some effect of that in the last 2 quarters. So I would expect we will. Yes.
Okay, all right. Hi, Mr. Navneet. Good morning and good to see you win. Just a quick question. The couple of your segments are still making losses. That's the yarn and textile business, which is smaller in comparison to the others. That moves back into the black. You'll have done some measures. You'll have taken some measures, I think, the last 6 months or so to see a turnaround. Does that go back into the black in the coming quarter?
Yes. So, that segment has been challenging for the past couple of years. However, we are seeing some improvements. We relocated the yarn plant to Amravati, where the costs were lower. The product mix was improved. We are seeing some improvement in the realizations and the market in general. So I think the ongoing quarters should be better for the textile business. While the first quarter was in the red, it was also impacted by very heavy depreciation costs on the new plant and equipment that was there. So on a cash basis, it was actually positive. So we expect better results for that also in the ongoing quarters.
So you spoke of the scaffoldings business, Mr. Saraf. That's your largest business, if I'm correct. And barring the formwork division, the volumes have risen, but the margins and the ROCE have seen a decline. Now, is there pressure on realizations within this business, Mr. Saraf? And if you could also share the kind of order book that you are sitting on for this particular business and the business overall as well.
Yeah. So there are 2 parts to the scaffolding business, the scaffolding and the formwork business. The scaffolding business is almost 100% export based. That's largely based in the US, and it's been doing very well. It's steady. We don't see much impact on margins there. The formwork business, which is the aluminium and steel formwork business, is largely domestic. There's been increase in the cost of raw material, mainly aluminium there, which has impacted the margins. The volumes, though, are pretty good, and we are sitting on strong order book on the aluminium formwork business. As of now, we're sitting on about 6 months order book on that, which is why we're also increasing our capacity, and we're also doing backward integration there by putting up our own aluminium extrusion plant.
Okay, all right. A quick question then, sir. Gradually your PAT on a quarterly basis is slowly moving to around that 100 crores mark. For this year, do you think, going by all the measures you have taken and put everything together, do you think a net profit number of close to around 500 crores is possible in this year? I recall the last time we chatted with the management of Technograph, we were flirting with the number of 250 crores for last year, that's FY24, and doubling the profitability in the coming year. So is that on the cards?
Not in FY25, because in this year we will not get the full impact of our greenfield plant in scaffolding in Aurangabad. We'll only have impact of about 4 months of that. But once that is fully commissioned, the full impact of that will be seen in FY26. That new plant will add about 450 crores on a year basis to the top line for the scaffolding segment, and about 80 crores of profit. So once that we see the full impact of that, yes, we'll certainly touch 500 crores of PBT. But that will be in FY26. FY25 will be somewhere in between.
One final question, Mr. Saraf, on the buyback, sir. It's not the first time that you have announced a buyback. You've done one in 16, 18, you did one in 22 as well. But I wanted to ask you in particular is because was this in the works earlier itself, or has this decision to undertake a buyback being done after the announcements that were made in the union budget with regards to the buyback and the taxation aspect of it?
No, so, as you've seen, we have always focused on buyback. We've done 3 buybacks before this. So buyback is something that we believe in and we would always like to do. So this was always in the works. Obviously, it's been accelerated as a result of what's happened. But I mean, it was always in the works for us to do a buyback this year.
Okay, all right. Very quickly, FY26, 500 crores. FY25, somewhere around 350 crores net profit.
Yes, we should be somewhere close to, somewhere better than that. Yes.
Appreciate you joining in, Mr. Navneet, and giving us all of those details. So 350 crores plus for this year. We'll hold you at that number. Wishing you all the best. For the time being, slip in a short break. Come back, continue to focus on markets.
ये हमारा स्वर्णिम कालखंड है। मेरे प्यारे देशवासियों, ये अवसर हमें जाने नहीं देना, ये मौका हमें जाने नहीं देना चाहिए और इसी मौके को पकड़ करके अपने सपने और संकल्पों को लेकर के चल पड़ेंगे तो हम देश की स्वर्णिम भारत की जो अपेक्षा और हमें विकसित भारत का 2047 का लक्ष्य हम पूरा करके रहेंगे।
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Today is the third day and the Resident Doctors Association protest is continuing. Remember, on the first day, FODA had in fact called for a strike in several hospitals in the national capital. Around 11 such government hospitals in the national capital were undergoing strike. Now, last night, after FODA representatives met the Union Health Minister JP Nadda, and assurance was given to them that the entire security system for the healthcare staff will be in fact boosted up and there will in fact be stepped up. Now what we are seeing is that the strike was called off by FODA, but today Pharma has decided that they will continue with their protest. So behind me are the representatives from Resident Doctor Association and also from Pharma that are continuing with their protest. And remember, the demand right now is, of course, yesterday the demand was that there should be CBI investigation after the Calcutta High Court has ordered that the matter should in fact be taken by the CBI. That demand has in fact been fulfilled, but right now the focus of these resident doctors who are standing here in solidarity and in protest is that there needs to be a Central Protection Act that needs to be implemented. So that is why this protest is in fact happening at Aramal, and this is not just the scene at Aramal Hospital, but in AIIMS and several such government hospitals in the national capital are going through the similar sort of strike. And under the strike, the elective services have been affected, whereas the emergency services is running smoothly.
Welcome back to Chartbusters. The Nifty is around 24,250. 24,367 is the level to watch on the index on a closing basis if the Nifty has to end the week on a positive and prevent a 3-week losing streak. The Nifty Bank still below 50,000, but the broader markets continue to do well. But that's a wrap on this edition of Chartbusters. From Nigel, me and the team that put this show together, thank you so much for watching. Trading Hour takes the action forward.
जो मध्यम वर्गीय परिवार है, मध्यम वर्गीय परिवार को क्वालिटी ऑफ लाइफ वो स्वाभाविक उसकी अपेक्षा रहती है। वो देश के लिए बहुत देता है, तो देश का भी दायित्व है कि उसकी जो क्वालिटी ऑफ लाइफ पे जो उसकी अपेक्षाएं हैं, सरकार की कठिनाइयों से मुक्ति की उसकी जो अपेक्षाएं हैं, उसको पूर्ण करने के लिए हम निरंतर प्रयास करते हैं। और मैंने तो सपना देखा है कि 2047 जब विकसित भारत का सपना होगा तो उसकी एक इकाई ये भी होगी कि सामान्य मानव के जीवन में सरकार की दखलें कम हो, जहां सरकार की जरूरत हो वहां अभाव न हो और जहां सरकार की बेकारण प्रभाव भी न हो, इस प्रकार की व्यवस्था पर हम प्रतिबद्ध हैं।
So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult, and the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
Global funds category, international funds which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So...
Good morning. Welcome to Trading Hour. It's a Friday morning. I'm Reema Tendulkar, with me Sonia Shenoy, and it's a strong start to this morning, but not as strong as what the early morning tick was. The Nifty high today was 24,400. Compared to that, we've given up about 150 points from the session highs. The Nifty is at 24,250, still up about 100 points. Sensex up close to about 350 points. And for the week, it's still mildly lower. In fact, the small cap index is down close to about 0.5% for this week. The CPSE index has taken a big knock, down 3% week to date. IT is the one which is batting for the bulls, not just today, but for the entire week. The Nifty IT index is a gain of over 1.5%, and this week it's up 3.5%. It's also a very strong handover that we got from the global markets. Even now, Nikkei is up 3%, Taiwan is up 2%. And by the way, I was just checking the kind of rebound Nikkei is seeing. So Nikkei is up 7-8% this week. And now it's just down 3% from that 1st of August before that crash began.
Absolutely.
So quite a remarkable recovery.
It is, and not just for our own markets, right? I mean, if you look at what's been happening across the globe, it's been 6-7 days now that the US markets have been in the green as well. And you've had a very strong handover from the US markets. So given the kind of inflation data that we got, given the kind of numbers that the US market has thrown up, it was just a matter of time before which you see, our own markets up and about. But having said that, so many stocks in focus. I think the stock of the day undoubtedly has to be Ola Electric. After the numbers, a new launch of the bike, the losses narrowing quarter on quarter. Ola Electric is now up almost 17%, and I'm sure nobody on the street really expected this kind of an up move for the stock today. So let's get straight to it then. The automotive sector is abuzz with a lot of noteworthy vehicle launches. Ola announced the company's foray into the electric motorcycle segment with the launch of the Roadster series. Ola Electric's bike portfolio under this range comprises of 3 models with prices starting from 75,000. Now, Ola founder Bhavish Agarwal says that they will have a good gross margin with motorcycles from the start and already have an installed capacity of 1 million units per year. Listen in.
Making bikes electric is a very important part of the electrification of India. The next frontier of electrification is bikes. And what we've announced today are 3 bikes, not just one, across a price band, like you mentioned, from 2.5 lakh rupees to 75,000 rupees.
Yeah.
So the Roadster Pro, the Roadster and the Roadster X.
Yeah.
Now, the important point to note for your viewers is that all these bikes will actually start from where the scooter supply chain and cost structures are already.
Yeah.
Right, because the entire platform is common.
Yeah.
And the suppliers are common, the supply chain is common. So we'll have a good gross margin from the starting point.
Okay, and it's not just Ola Electric. With the new launch, M&M too has launched its most anticipated 5-door Thar named Thar Rocks yesterday on Independence Day, which will strengthen the company's position in the sport SUV market. Now, Thar Rocks has been launched in 6 variants in both petrol and diesel options. Its price starting from 12.99 lakh, going up to nearly 19 lakh. Now, the company expects Thar Rocks to lead the 12.5+ lakh category SUV segment in the next 3 to 5 years. Speaking to CNBC TV18, Rajesh Jejurikar, MD and CEO of M&M's auto and farm business, say they think many customers will now prefer the new Thar model compared to their previous one. Listen in.
Of course, there will be some customers who are buying the Thar 3-door today who may want to buy and would want to buy this, and we're totally open to that as long as they stay within our portfolio. We don't mind if they buy Thar Rocks versus the 3-doors. Customers to choose, but there are different products. So that is for the more compact off-roader. This becomes more mainstream for going out with friends, families, even on a normal adventure trip, not necessarily off-roading. But there will be some cannibalization, and we totally are okay with that. We've set up a total capacity of 9,500, which has some reasonable amount of fungibility between how much we can make out of the 3-door and 5-door.
Finally, after such a long wait, the 5-door Thar has come out, and of course the pricing is very attractive. That's something that the street definitely is looking forward to. But finally, the iconic British motorcycle brand BSE has officially been revived in India with the launch of the all-new Gold Star 650 starting at 2.99 lakhs. This launch marks the entry of the iconic British motorcycle brand, new modern retro motorcycle assembled in India and available in 5 distinct color variants. The BSE Gold Star 650 goes head-to-head with Royal Enfield's Interceptor in this category. Classic Legends, a subsidiary of the Mahindra Group, had acquired the rights from the British custodian David Bennett. Anupam Thareja, the co-founder of Classic Legends, spoke with CNBC TV18's Rachna Dhanrajani. Listen into what he had to say on the new launch.
I think the beauty of this is that we have really put our heart behind making sure a single gives what a biker needs. You can make a bike with a lot of gizmos and a lot of lights and batteries and electronics, but sometimes you make things simple. So leave the creativity to the rider, right? So it is a bike made for riders. It's a bike where we believe will get motorcycling up, will get riders back into this category. It's a very powerful machine. It's got the highest torque in its category.
Okay, let's get into a short break on that note. We'll come back with more on the market. Stay tuned.
Best right now.
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years. If you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last year when the taxation was changed, and now it's come back into reckoning with full power and full force. And I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
भारत को किसी कोई भी हॉस्पिटैलिटी का सामर्थ्य भारत में सबसे ज्यादा है। अगर ये सिद्ध हो चुका है तो साथियों, हिंदुस्तान का सपना है कि 2036 में जो ओलंपिक होगा वो मेरे हिंदुस्तान की धरती पर हो। इसके लिए हम तैयारी कर रहे हैं, उसके लिए हम आगे बढ़ेंगे।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
मुझे गर्व इस बात का भी है कि हमारे
Welcome back to Trading Hour on CNBC TV18, where lots of stocks in focus. The market is also doing pretty well. Trend, by the way, continues to hit fresh highs. So if you're wondering if that one has stalled, no, it hasn't. 6488 on trend, 6,488 now, which is almost more than double this year. So this has been one of the strongest stocks that we've seen in 2024 already. And a couple of other names do stand out. There's Gabriel India, which is at a fresh high today. There's Colgate, which is sitting at a fresh high as well. Something like an Eris Life Sciences at a fresh 52-week high. So lots of individual stocks. Of course, Ola is your big mover. So that one continues to be up a circuit, up almost 20%. But DLF has gained on the back of positive brokerage commentary. Sonal is joining in with the details. Sonal, over to you.
Thank you for that. Well, JP Morgan, they've gone ahead and increased the target price on the stock to 1,000 rupees, and they have an overweight rating. They're quite sanguine on the cash flows and the balance sheet improvement that the company has been seeing of late. They believe that DLF will surpass the coveted $1 billion operating cash flow at group level in FY25. Now, do remember, higher debt was one of the big problems that the company was facing, and now they've actually been able to reverse that and convert it into operating cash flows. This is due to a strong sales cycle and compounding of free cash at its rental business as well. So that part of the business is contributing to stronger balance sheet. This opens up a significant strategic flexibility at group level on acquisitions that JP Morgan thinks company can go ahead and make right now. They see upside to pre-sales, margins and cash flows in FY25. Remember, Q1 was strong in terms of cash flows. They saw 100% growth on a YOY basis. They've already achieved 38% of the FY25 guidance, and that is something that makes JP Morgan very positive on the stock.
Thank you very much for that. Hindustan Zinc is under pressure after promoter Vedanta has increased the size of its offer for sale to 13.37 crore shares versus 11 crore shares earlier. Nigel joins in with the analysis. Nigel.
Well, that's right. You know, after very, very long, there's positive action coming in from the promoter entity of Vedanta Limited. Let's run you through the news. Remember, on Thursday, we were reacting to news that Vedanta is looking to sell close to 11 crore shares in Hindustan Zinc. Now, it seems demand is fairly good because they've upsized this to around 13.4 crore shares. Well, the pricing is at a 15% discount because the float in Hindustan Zinc is very, very limited. To give you a number, well, the stock trades at around 13 to 14 times EV upon EBITDA. So with this 15% discount, now it's more digestible at around 10 times EV upon EBITDA. What does Vedanta get? At the base price close on 6,500 crore rupees, they can either repay debt, use it for capex, or even pay out dividend. Talking about dividend, Hindustan Zinc, well, they'll be having a board meeting on the 20th of August, and they'll be looking to pay out some dividend. Every 100 rupees that comes out from Hindustan Zinc, Vedanta Limited gets 65 rupees of that. So positive news flow for Vedanta. For Hindustan Zinc, because of the discount, the stock is down. Back to you.
Okay, thanks a lot for that. So that is on Hindustan Zinc and Vedanta. But IT stocks are moving with quite a bit of strength this morning rather. Most IT stocks are up almost about 2-3% and getting better. And since we're talking about stocks that are doing well, stocks that are at 52-week highs, Suprajit Engineering is another one that's at a fresh 52-week high this morning. Balrampur Chini, Polyplex, Time Technoplast, Gabriel India, Uflex, Trent, Keynes Technology, Strides Pharma, stocks that are all at fresh 52-week high. And some of these stocks like Keynes and Strides Pharma have actually doubled this year. So given the kind of traction that we've had in the broader markets, it's really been phenomenal. The moves. MCX is at a fresh 52-week high as well. It's a 40% gain that MCX has seen this year already. So very, very strong traction coming in over there. A couple of other names, Info Edge, fresh 52-week high over there, Colgate, Eris Life Sciences, and some of the other names looking pretty good too. What's dragging its feet on the index today is something like an HDFC Life. Hero MotoCorp is down about 0.7%. Maruti Suzuki, SBI Life. Autos are coming in for some profit taking today. No two ways about that. And well, something like an NTPC, JSW Steel are also under a bit of pressure. Let's take a short break. We'll be joined by the management of MPS to discuss more about their numbers and the way forward.
सीईओ आज दुनिया भर के अंदर अपनी धाक जमा रहे हैं। भारत के हमारे सीईओ विश्व भर में अपनी धाक जमा रहे हैं। हमारे लिए खुशी की बात है कि एक तरफ मेरे सीईओ दुनिया भर में नाम कमा रहे हैं, भारत का नाम बढ़ा रहे हैं, तो दूसरी तरफ विमेन सेल्फ हेल्प ग्रुप से 1 करोड़ मेरी सामान्य परिवार की माताएं बहनें लखपति दीदी बनती है।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across 3 different groups. One is the physiological within the body triggers. 2 is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines, and stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens, they induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolate.
Welcome back. Global investor and author Ruchi Sharma feels that India is the last bull market of the world that is still raging. Speaking at the CNBC TV18 town hall, he lauded the strength of the Indian market. Listen in.
Let's talk about the markets, because one thing that has taken everybody by surprise is the resilience of the Indian stock market. I mean, we've gone through an election result that didn't pan out the way that the markets anticipated them to do. We've gone through budgets, we've gone through all kinds of other issues, and the market has just gone one way, and that's up. What do you make of the resilience of the Indian market?
It's baffling, really, because, as I said, that it's a very domestic story. I mean, it's not been driven by foreign investors piling into this country or in any way. It's all domestic. So, you know, the financialization that's happened out here, I think, is staggering in terms of...
Yeah, banks are now talking about the fact that they're struggling to get deposits because everybody is going to mutual funds.
Yeah, so I think that this has been one of those incredible financialization stories that's taken place. In fact, it's very, very telling. I can observe it because even I don't know what's the framework to use here as to where to call an end to this, right? Because it's already the most expensive market in the world. In terms of, it's already, in terms of, there's the returns over the last 5 years of this market in dollar terms have even exceeded the US in terms of what, you know, what it's done. There really has been no bull market in the world this decade like India. This is a unique bull market unto itself, because also of the breadth of it. Like in the US, you had a bull market taking place,
by tech.
concentrated by tech and a few companies at the top. In India's case, it's been extremely broad, like in terms of what's happened. You know, there are various sectors that have, virtually every sector has participated in this bull market. So it's a very unique bull market that we have seen in India. It's the like only bull market in the world, I would say today, literally, the true bull market. The US has, you know, started to show some cracks, are very lopsided. So I think it's a fascinating story to observe. It's the last bull market in the world standing, if not the only bull market of this decade.
And valuations clearly don't matter.
Valuations don't matter, but I've seen markets like this that at times you have to suspend reality, like Japan in the 1980s. You know, like we could, people kept calling in the mid-1980s, there was so much talk of Japan being overvalued and stuff, and yet from there it doubled in like value. So, you know, that's all like I believe, that you can use models to look at markets in a conventional way, but sometimes when those models aren't working, you suspend reality and then you sort of observe to see as to when it observes. Now, of course, as investors, we just have to, you know, we have to be very vigilant because of the fact that these momentum markets can also turn on a dime, you know, which is that something will happen and all of a sudden it'll turn on a dime.
My point is, like, go back to the budget, and everyone said, oh, you know, you've got the long-term capital gains coming in this time around, and that's going to take down the markets. And guess what? It didn't. And, you know, the markets have gone up another couple of thousand points post that.
Yeah. So as I said, that it's very difficult, you know, when the conventional models aren't working in terms of that, because at the beginning of the year, had you said that this will be the political outcome, and this is, you know, in terms of, these are the couple of other things which will happen. You mentioned budget, whatever. Most people would have said that the market will be down 10-15%. Instead, it's up that much, you know, there. So I'd say that in terms of there. But yeah, this though is also leading to its own consequences. I mean, one thing which I find very fascinating in India now is that no country has created as many billionaires as India has created this decade, right? In terms of, it's just a staggering number. The billionaire wealth in India now as a share of the overall economy today is 26%, higher than America. There's virtually no major country in the world in this zip code now. You have some small countries with small markets, like a Sweden or something like that, which may, but there is no country in the world. So this billionaire wealth creation that's happened in India, again, it's very broad, right? In terms of we focus on what's happening amongst the top, etc. It's been very broad, even in sectors like manufacturing, which have stagnated otherwise. The value creation has been such that the maximum number of new billionaires created in India this decade have in fact been in the manufacturing sector. You know, like it's a staggering disconnect between what's happening in manufacturing, in the economy, and what's happening in the market. So the market's in a totally different zip code. It's doing its own thing. But yeah, in terms of, I observe some of the excesses also. The fact that India now, the billionaire wealth as a share of the economy today.
Is it 26%?
Exactly. Is about the largest in the world of any major nation. I mean, that's really like a statement. I first came up, if you remember, in Breakout Nations with this concept of a billionaire index. At that point in time, it was jarring to me that, you know, billionaire wealth in India as a share of its economy had crossed 10%. And here we are, you know, like more than a decade later, at 26% in terms of billionaire wealth as a share of the economy. So, you know, and we have more than 200 billionaires now, I think, like in this nation. So even in terms of numbers now, it's only US or China, etc., which may be larger with economies that are multiple times our size.
Staying with the India story, what do you believe is the hidden superpower that we don't know of in the India story?
No, like in terms of, I'd say that the part I'd like to see more of in India is that and I keep saying this to India, that even in the West, I said this even during the elections and stuff like that there's so much focus on the center. It's Delhi, so much talk about just Modi and stuff like that. I'd say that in India, and as you know, we travel a lot, see India, what inspires me the maximum about India is our federalism. The fact that, you know, we have so many states which do their own thing. And I'd say that the real big potential kicker for India for here is if we move even to a more competitive federalism kind of system. You know, like I would like to see that. Less centralization, more competitive federalism.
Okay, those are... that's a very important conversation between Ruchir Sharma and Shireen Bhan at the town hall, and you'll of course hear the excerpts of that through the course of the day. But let's take a short break. On the other side of the break, market fundamentals with Anirudh Naha from PGIM India Mutual Fund. Stay tuned.
And red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone. And one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers. But you have to remember that there are 15 to 20% of patients in whom triggers may not be easy to identify.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with
Welcome back. Well, Anirudh Naha from PGIM India Mutual Fund joins us now to discuss the market fundamentals, his top sectoral picks and the way forward. Anirudh, thanks a lot for joining in. This has been a market that has been so resilient over the last many weeks and months and continues to be so despite what we are seeing across the globe. What do you think is the trajectory of the market now? Are we staring at a time-wise consolidation that this market could see, or is there some sort of a correction coming price-wise?
So, good morning and thank you for having me here. We believe, market returns are a combination of your earnings growth and where the valuations are. Earnings growth seems to be, pretty subdued. This quarter, the earnings hasn't been anything great. And the next quarter also, our belief is the earnings are going to, they could continue to remain pretty subdued in that sense. So the markets will, if not go through a price correction, will probably go through a certain amount of time correction. The valuation expansion which is happening is purely based on liquidity. And that just makes us a little bit of a little bit cautious in the near term.
Ola Electric, another 20% upper circuit on that. It started strong post the numbers and the new EV motorcycle launch, and now it's locked in an upper circuit of 20%. Take a look at even Brainbees, the company behind First Cry. That's up another 6%. Paytm is, upper circuit of about 5%. So these new age tech platform companies have gathered so much interest. Anirudh, have you analyzed, say, Ola Electric when it launched? What were your thoughts? Did you participate in it? And in this entire basket, which ones would you prefer?
So without naming anything specifically, we've looked at all of them. We believe there is a long runway for many of these companies actually. But company specific, whether it is electric EV, the electric vehicles coming through or certain other areas, our focus has always been on companies where we see certain amount of cash flows coming through. And once that happens, we usually stay away from the IPO listings. We give it about 2 quarters before taking a better view on that from a longer term perspective. So some of them will do definitely very well over a period of time. Our only sense is with a 6 months lag post listing, we will start having a look at them. There are some very interesting, new age technology companies which are generating cash flows, and we do have exposure to some of those companies out there.
Okay. So when you say companies, new age technology companies generating cash flows, is it fair to assume that you are staying away from the companies that are growing on the top line but are still net loss making? I mean, is that a good way to interpret this?
Yes, it's a very fair assumption. Our belief is, pushing top line is the easiest thing to do. finally it has to boil down to profitability and cash flows. And something that we've been following at in-house is, top line is vanity, bottom line sanity, finally cash flows are reality. And especially in these high valuations, we would want to stick to businesses where top line is getting finally converted to profitability and cash flows.
Nifty IT, that's the one which has led the up move this week with a 4% up move. Well, the earnings were fine, perhaps signaling that we're at the worst, or perhaps it's very close and soon things may be on the mend. But it's not that we're seeing a V-shaped recovery. So are you surprised by the up move that we've seen in IT over the last 2 months?
So IT has actually, from a valuation perspective, has been reasonable. It has got the cash flows to that extent. When the markets have moved up, it has actually been a laggard. Earnings have been reasonably good, more company specific. But I think the worst probably in IT is over. If someone takes the next 2 quarters to 3 quarters, this probably will give you not only safety on the downside, but will also provide you with a certain amount of returns coming through. And this is a sector where we find value across market capitalization. So to that extent, we like this sector and continue to probably buy into the dips.
Okay. What do you do with some of these sectors like, say, an auto? We've discussed Ola because that is really the one that is in the news right now. But in general, autos are, it's sort of a hit and miss right now because there is a slowdown in certain pockets like passenger vehicles. Two-wheelers are not doing that great. There is a big EV adoption that's taking place. So what does one do with these traditional IC engine auto stocks?
So our sense, Sonia, is, the conventional ICE engine companies, they have still a very long way to go. I think EV per se, we'll have to wait and see what is the final form of it. Are we going through a transition where lithium is the right, raw material for the batteries, or is it going to evolve into sodium, hydrogen, etc.? Presently, over the next probably half a decade, I think hybrid will be the technology which will be more adoptable, which has got no issues with regards to raw material availability. And as a technology, it's a clean technology. So anyone who has been able to, in the auto and auto-end space, who's been able to, migrate from pure ICE to hybrid, that would be something that we would be really excited about. We believe there is enough and more of scope within the ICE engine companies also. Also the fact that there are hybrids companies both in the OEMs as well as auto-angs. There are companies available which have got exposure to hybrids. And that is a space where we would be excited about. We like the two-wheeler space, the passenger vehicle also to a certain extent. Where we are a little cautious is the CV cycle.
Okay, thank you very much, Anirudh, for joining in. We'll slip into a very short break. On the other side, we'll get a corporate conversation going. We'll invite the management of MPS to discuss their Q1 numbers and the way forward.
Being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com. Investing.
Welcome back. Let's get a corporate conversation going. MPS is gaining after reporting a strong revenue growth in the first quarter. The company's top line went up by 36% on a year-on-year basis. That said, the margins came under pressure, down to 22.7%, and profits declined 15%. We have with us the management of MPS now joining in. Thank you very much for joining in, Rahul. The first question is on the top line. Now, you've delivered a 36-37% top line growth, but it's been aided by 2 acquisitions that you've done. Can you share what the organic revenue growth is for the current quarter and for the full year? What can you guide in terms of consolidated revenue and the organic revenue?
Thank you for having us, Reema, and happy Friday. So, yes, as you rightly pointed out, Q1, we do see a lot of contribution from both AJE and Liberate Learning, acquisitions that we did last financial year. Overall, we're expecting, 10-12% organic growth across our content business, 7-8% growth in our platform business, and north of 12% organic growth in our e-learning business. So consolidated, we'll see something like 10% organic growth. Over and above that, of course, we have the 2 acquisitions that we've already done, and we are planning an additional acquisition at the end of the year.
Okay. Rahul, hi, good afternoon, and thanks for joining in. Good morning, rather. You have projected a 25% revenue growth for the full year for FY25. Are you on track to doing that? And what is it? What are the triggers that are going to help you get there?
Yeah, so I think the 25% is not just the revenue growth, but earnings growth. We're expecting a sharp recovery on margins in Q2 itself. We are halfway into Q2, so we have good visibility. So overall, expecting about 30% revenue growth and north of 25% EBITDA growth in the year. In terms of what's really leading to that, of course, is 40% of our growth is coming from organic growth, as I pointed out, and the balance is coming from on the inorganic side. What we're seeing in the marketplace is, slowly MPS, as our scale is increasing, we are getting access to many more opportunities that we would typically not get as the supply chain is consolidating and our customers are looking to work with more with scale partners, particularly after the pandemic when the supply chain was tested.
Can you explain the margin drop to us, Rahul? I think this quarter your EBITDA margins came in at 22.7%, which compares with over 31% a year ago. And even on a quarter-on-quarter basis, we've seen a margin drop.
So a couple of reasons. Firstly, on the e-learning side of our business, we are digitally working to improve the margin profile. So we started a couple of initiatives last year, which included more automation and AI approach in the development that we do. Additionally, we started embracing outsourcing and gig workers. As a result, for the last 6 months, we've had duplicated effort as we look for the workflow and the operating model to settle in. As you'll see at the end of the quarter, our headcount has taken a significant reduction in the e-learning business. And again, we're expecting a sharp recovery in the e-learning margin profile in Q2 itself. The second aspect is, of course, as I've shared previously, the acquisition of AJE was a loss-making asset. In Q1 alone, we've eliminated over $5 million of costs in wage costs itself, and again expecting a strong recovery. So it's largely got to do with an investment to improve the e-learning margin profile in the long term, and the acquisition of AJE, which has dragged the EBITDA margin in the short term, but we are very bullish about what that margin profile looks like from Q2 onward and as well as at the end of the year.
Got that. And just to confirm, you spoke about a 30% revenue growth for the full year on a consolidated basis and 25% earnings growth, EPS growth, right?
Yes, that is correct.
Okay. You also right now just said that you're expecting a sharp recovery in the e-learning business. I think currently the e-learning business margins are 8.5%. What are the steady state margins for e-learning once all these investments, you move on to these gig workers, etc., comes into place?
So we're expecting to get to in FY25 north of 25% and north of 30% for the next financial year. At a consolidated e-learning level, we feel comfortable to project over 25% EBITDA margins for FY25.
And you have this Vision 2027 plan too. 2027, which means FY28. I think that projects 30% margins for you on a consolidated basis. What is the top line likely to be?
So again, we are aiming for north of 1,500 crores in revenue. FY25 for us is an inflection point. The management team and everyone is gunning to make sure that we hit the halfway mark in FY25 from an earnings perspective. So overall, FY28, the goal is to get to 1,500 crores at similar margins in revenue. And this year, we want to get to the halfway mark.
Okay, all right. We'll let you go on that note. Rahul, thanks a lot for joining in and all the best for the quarters to come. Well, that's the word coming in from MPS. They have a very strong projection for FY25. They expect organic revenue growth of 10 to 12%. And, the trajectory is looking good. Let's slip into a quick break. When we return, we'll discuss market technicals with Mitesh Thakkar. Also discuss their top trading bets for the day. Stay tuned.
करीब 25,000 युवा हर साल विदेश में मेडिकल एजुकेशन के लिए जाते हैं और ऐसे ऐसे देश में जाना पड़ रहा है कभी कभी जो मैं सुनता हूं तो हैरान हो जाता हूं और इसलिए हमने तय किया है कि अगले 5 साल में मेडिकल लाइन में 75,000 नई सीटें बनाई जाएगी।
We want justice. हत्यारे को फांसी दो। उसका कातिल जिंदा है। उसका कातिल जिंदा है।
It's almost more than 4 days and the
strike is continuing in Arjikar and other places of government hospital. But right now, let me show you the situation which shows that how the health system has been badly affected. This is the emergency of Arjikar, where there is no one, there is nothing here. Everything is closed and the doors are closed, and even you can see that there is lock and key. There is tala there, this is lock and key, and nobody till yesterday there were emergency people were coming, but now there is the emergency in one of the most important government hospitals in Calcutta. If this is the situation, then it is a very, very concerned area, and the patients are sitting there, as you can see, but there has been no remedy for them. That is also now a growing concern, that because of this strike continuing, the emergency of this Arjikar Medical Hospital is now totally stopped. That's also very big area of concern, and this is also something which is concerning and which is putting the problem of state administration. But students are still continue because they believe their demands are still not made.
$140 करोड़ मेरे परिवारजन अगर संकल्प लेकर के चल पड़ते हैं, एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं, तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese, and you are increasing your...
Well, still steady state for the market. Mitesh Thakkar is joining in for a quick technical check. Mitesh, hi, good morning. Do you think the market can build on to its gains from here? What's the way forward? And what are we looking at in terms of individual stocks? I think you're on mute, Mitesh.
Audible now?
Yes, go ahead.
Okay. So my understanding is that the market isn't weak, but it's very clearly not showing signs of an upward move. And hence, I think, there's some kind of tussle going on. I think IT as a pack would do well, while the rest of the market, PSUs and banks, look slightly on the weaker side. So I think that trend could play out. Though the bank Nifty is strongly up today, but the overall structure hasn't turned very positive. So I think I would still bet on IT stocks and have recommendations there. In fact, Infosys is a buy with a stop at about 1820 and a target of 1900 plus can be looked at over here. We had a buy on HCL Tech earlier. Now I think, LTTS can be looked at. That's given a very strong present volume breakout. So buy here with a stop at 5130 and a target of 5320 can be looked at.
By the way, banks are pulling their weight now. The Nifty Bank is almost back to the day's high that it hit in the morning. And from the day's low, it's been a recovery of 450 points in the Nifty Bank. Pull up an ICICI Bank, 2% gain on that. Kotak Mahindra Bank also inching up quite a bit. Mitesh, thank you very much for joining in. By the way, in the pharma space, Glenmark Pharma is also up close to about 5%. They had that conference call in the morning where the company spoke about how H2 is going to be better than H1, particularly for the US markets. US is about 26 least 4% of their sales, and the cash in the books is also 350 crore rupees, with margins the company is guiding for is about 19%. So Glenmark Pharma has also moved up. Aurobindo Pharma, on the other hand, is under pressure. There is some regulatory overhang on it. They've got a warning letter from the US FDA for its Eugia Unit 3. Ekta joins in with the details. Ekta.
Well, yes, Aurobindo is in focus because their Eugia Unit 3 has received a warning letter from the US drug regulator. Now, this particular unit, which manufactures formulations, is a part of their Eugia business, which basically houses the specialty business. Now, it was inspected in Jan 22nd of this year to Feb 2nd to be specific, and was issued 9 observations at that point in time. The unit was then eventually classified as an official action indicated status, which increases the risk of regulatory action by the US FDA in May of 2024. Now, by way of caution, the company had already stopped manufacturing it at Eugia Unit 3 post the inspection which had taken place in Feb. The company has been incurring remediation costs. For example, it incurred remediation costs in Q4, it spilled over in Q1, and they believe that it had reduced to as much as around $2 million versus $7 million earlier estimated in Q2. Now, the company, as per our interaction post the Q1 numbers, indicated that they have finished the corrective and preventive action when it comes to remediation for Unit 3, and it was speculative to say when the US FDA could come and re-inspect the facility. Now, analysts have indicated that at least around 20 plus ANDAs could be impacted because of that official action indicated status, which was issued all the way back in May of 2024. So that impact is likely to continue. One will also have to see whether there could be any incremental remediation that the company will have to undertake. Now, separately, remember that there was an other OAI which was issued to the company's Unit 2 just earlier this month, but the revenue contribution is limited at around 1%. So the street is going to have to see various factors. For example, how much will Unit 3 contribute going forward, considering there is a warning letter, and the larger picture of regulatory concern, considering that Unit 2 is also under the regulatory scanner. The company had stuck to their guidance of doing sales of around $600 million from Eugia in FY25 as a whole, and whether or not they can manage to stick to that guidance as well.
Okay, well, thanks a lot, Ekta, for that. I just wanted to, before we end the show, wanted to just talk about some stocks and the market and the way it's doing. Brigade Enterprises is in focus, some news flow coming in over there, but the stock of the moment undoubtedly is Mahindra & Mahindra. It's moving closer to the high point of trade, 2.5% higher. The new Thar ROXX has been received very well. First, because of how attractive the pricing is, the starting price at a little under 13 lakh rupees. And the second is how it is getting into this SUV space in a big way. It's already the #1 player by market share. And it is, the new Thar looks fabulous. It's a 5-door Thar, and it's come after a long wait of around, 4 or 5 years, finally in the market now. So the product is very well received. Brokerages are giving it a thumbs up. In any case, the stock is up about 70% in the last 1 year. So it's been piling on the weight. And now in this fast-growing SUV segment, its latest launch has been very, very well received. So that's one of the big movers today.
You know, Nomura in the note says that we appreciate the consistency with which M&M has come out with successful launches. With every single launch, even the facelift and the variants show a lot of effort being put in to innovate and further improve the product appeal and raise the bar. So big thumbs up from the brokerages, and don't take your eye off the mid-cap IT screen. They're on fire, the individual stocks over there, whether it's Zensar or FirstSource, L&T Technology Services, Emphasis. These are all up more than 5% in today's trading session. Well, with that, it's a wrap on Trading Hour from the entire team. Thank you for watching. Don't go anywhere. Halftime report is up next.
Take with all the junk food that is there, and you're also increasing your fat content, and all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way, you have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
बांग्लादेश में जो कुछ भी हुआ है उसको लेकर पड़ोसी देश के नाते चिंता होना, मैं इसको समझ सकता हूं। मैं आशा करता हूं कि वहां पर हालात जल्द ही सामान्य होंगे। खास करके 140 करोड़ देशवासियों की चिंता कि वहां हिंदू, वहां के अल्पसंख्यक, उस समुदाय की सुरक्षा सुनिश्चित हो। भारत हमेशा चाहता है कि हमारे पड़ोसी देश सुख और शांति के मार्ग पर चले। शांति के प्रति हमारा कमिटमेंट है, हमारे संस्कार है। हम आने वाले दिनों में बांग्लादेश की विकास यात्रा में हमेशा हमारा शुभचिंतन ही रहेगा, क्योंकि हम मानव जात की भलाई सोचने वाले लोग हैं।
Markets trade near the day's high on the back of strong global cues. The Sensex and the Nifty all up almost 1% each as IT, auto and frontline bank stocks see buying, mid-caps outperform.
Ola electrifies the street as Q1 losses narrow over Q4 and the top line grows 32% on a YOY basis. Founder Bhavesh Agrawal says the auto segment is close to break-even at the EBITDA level. The company launches its e-motorcycle Roadster with deliveries lined up from Diwali 2025. The stock surges.
Hindustan Zinc skids as Vedanta launches the OFS at a 15% discount to Wednesday's closing price. Aurobindo falls close to 3% as one of the company's formulation manufacturing facilities gets a warning letter from the US FDA.
RHI Magnesita surges 11% after posting record high EBITDA margins. Glenmark Pharma rallies 5% on improvement in margins and profitability. Spicer under pressure on weak Q1 performance. The company's auditors say accumulated losses have entirely wiped out the company's net worth and doubts remain on company's ability to continue as a going concern.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me Sonal Bhutra. Well, it's turning out to be a session which is in the green for us. So all of the indices that you can see on your screen are trading with gains. So we have the Nifty, which is up around 235 odd points. The mid-cap index, which is relatively better at this point, so up around 1.3%. And the Bank Nifty, which is up around 1% as well. So trading well at this point, the advance decline ratio in favor of the advances. A lot of stocks which are buzzing around, and that seems to be the theme of the day. Specific stocks seeing traction on the upside. Ola Electric, that stock is up around 18 odd percent. To give it get you some perspective, it's up around 40% plus in just the past week odd. So stellar listing which is coming for Ola Electric. Popular Vehicles, which is up around 6.5 odd percent. Sequence Scientific up around 5.8%. Good margins there. And Glenmark Pharma, where the commentary from the company was extremely positive post numbers, that stock up around 4 odd percent. So going strong for the markets at this point. No complaints, Sonal.
Oh yes, and it's like the long weekend feels for the market as well, right? So it's a cheer all around. Of course, we did see that dip and that has been bought into, and how markets are virtually at the day's high right now, led by the IT index, and other names are contributing too. The mid-cap index, that one is doing really well. That's an outperformer, which the advance decline ratio are largely in favor of the advances. So around 1,700 stocks on the advancing side versus declines of around 700 stocks. We have the Nifty Realty, which is doing very well as well. So it's only Nifty Pharma, which is flattish today. We wouldn't say it's falling, but that's a sector which is falling a little bit. So a lot of stock-specific news that we are covering, and definitely DLF is one of them, and we will talk about it in greater detail. But let's focus on Cello World now. Quarter one was a steady quarter for them, and management has maintained their revenue growth guidance of 15 to 17% in FY25. To discuss in detail about their quarter one performance and business outlook, Gaurav Rathod, the MD of Cello World, is joining us now. Mr. Rathod, good afternoon. Thank you so much for joining in. Well, it was a decent quarter and you have maintained your growth guidance. I wanted to understand, in this growth, have you factored in the soda lime glassware expansion that you're looking at? Also wanted to understand what is the total addressable market of this segment, and will it be margin accretive for you from this year itself?
So yes, we have factored in the soda lime plant as well, which will start giving us revenue from the second half of the year. It will of course start giving us good revenues. It might not. It of course will be still positive in terms of EBITDA. Though the depreciation in the first year will be slightly higher, but I think it will be offset by the revenue gains that we get, in an overall business synergy.
And what is that revenue addition that you're expecting, and what is the total addressable market here? Because your peers are getting into the borosilicate glass market. So wanted to understand the differential here in terms of margins as well.
So I think margins are in line with our crockery, the opalware business that we currently do. And it's not borosilicate, it is soda lime glass, which is slightly different. This is mainly used for drinking glasses and other tableware items. And this market is actually much bigger than the borosilicate market. So currently in India, according to our estimates, it's about 2,000 odd crores, which is purely space. So for us, it's import substitution more of. So I think for us, it's only a 10% market share gain that we are looking at through this capacity addition.
Okay. Well, Gaurav, what happened to your writing instrument segment? It's around 17% of your total revenues. It was down 5% year on year. What led to that downtick, and what is the demand looking like?
So it has been actually for all stationery makers, more pen than stationery. Stationery still has done decently well because we are purely a pen manufacturer. So we've seen across the board that demand was a little tepid during this quarter. But we don't see this happening. July has been much better, and so has August been till now. So I guess it's picking up steam. Also for us, we are adding a lot of stationery items also in this particular segment. So going forward, we'll be much more diversified as a portfolio. So which would limit the risk as well of such a quarter.
So when you say diversified as a portfolio, are you going to look to expand as much as, say, the DOMS of the world?
We'll slowly get there. DOMS is a more diversified portfolio in the stationery and the art deco kind of portfolio. So I think slowly we'll be entering into categories that we feel have good margins and which have good potential for growth.
So you spoke about entering into products which will see better margins and good potential for growth. Your margins have been around that 25% mark. Is that something that you would maintain? And what is the product pipeline that you're seeing? In that 15 to 17%, have you taken into consideration the newer products as well which will come in?
Yes, so 15 to 17% covers our entire product portfolio. Mainly the glass plant is a completely new segment that we are entering. Apart from that, we keep coming out with newer product lines in our existing categories. So that will continue to happen. Of course, I think our margins have been steady, and I think that's something that we really pride ourselves in, and make sure that that doesn't come in at the expense. So revenue doesn't come in at the expense of margins. So that is why you've seen a slightly tepid growth this quarter, but going forward, I think when the festive season kicks in, things are looking much better.
Okay. All right. The other segment which looked interesting was actually your molded furniture and allied products segment. It was up 16% year on year. Tell us, what exactly does it comprise of? What were the margins that you recorded within this segment vis-a-vis what you did same time last year? And what's driving growth there? And are you expecting this kind of double-digit growth to continue, considering that that's been the key driver this quarter?
So this quarter, though it's a small percentage of our entire revenue, but this quarter, we do also do coolers in this segment, and this was a fantastic season for coolers. As you know, the heat wave was pretty strong throughout India, so driven primarily by coolers, and of course, furniture also did decently well. Though our long-term perspective on this is going to be a little more in the single to just in the early teens kind of growth that we look at over the year.
Mr. Rathod, I wanted to understand what is the ad spends as a percentage of sales right now. The last numbers that I have, it's around 1.3% for you, but that compares with peers like Borosil at 7.7%, Lao Pala at 3%. I wanted to understand if you'll scale that higher because your distribution network is also quite strong. So what does that do to this number and your market share as well? What is it currently? How do you grow that?
So I think for us as a strategy, we are going to be spending about 3% of revenue over this year, and would probably continue to do that over the next 2 to 3 years. So at the scale of business that we are, that gives us a good amount of money to kind of spend on ads and other marketing activities. So I think it's important, and we realize that though we've always spent over many years and over decades to build a brand like this, but of course for the recall value, we will continue to spend.
And the market share, what is that number?
Market share for us is a very difficult segment actually, because it is so fragmented. So across our different businesses, it's different. So it's a very difficult to gauge that, because there's a lot of unorganized competition as well within a lot of our plastic and houseware categories. But approximately, it's about 10 to 12% of the overall houseware category.
Okay, this 737 crores that you raised via QIP, have the funds been deployed? What is the plan in terms of deployment, if not?
So the loan that was on the books has been paid back. So I think that's pretty much done. And of course, we are setting up a new facility for our plastic houseware and steelware products. So that deployment will happen over a year's time, year's frame. So I think pretty much that was the reason for the QIP in the first place. And I think we're on target to deploying all the funds within the next 8 to 12 months.
Okay. All right, Gaurav, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Cello World. That stock is at around 889 odd rupees. We need to take a short break, but up next we have an interesting conversation. Everstone's MD Arjun Oberoi and Head Private Equity India Panchim Mukim will join in to discuss their PE investments in the healthcare space and the overall environment. Stay tuned.
भारत के लिए गोल्डन एरा है। वैश्विक परिस्थितियों की तुलना में भी देखें, ये गोल्डन एरा है। ये हमारा स्वर्णिम कालखंड है। मेरे प्यारे देशवासियों, ये अवसर हमें जाने नहीं देना है। ये मौका हमें जाने नहीं देना चाहिए और इसी मौके को पकड़ करके अपने सपने और संकल्पों को लेकर के चल पड़ेंगे तो हम देश की स्वर्णिम भारत की जो अपेक्षा और हमें विकसित भारत का 2047 का लक्ष्य हम पूरा करके रहेंगे।
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Today is the third day and the Resident Doctors Association protest is continuing. Remember, on the first day, FORDA had in fact called for a strike in several hospitals in the national capital. Around 11 such government hospitals in the national capital were undergoing strike. Now, last night, after FORDA representatives met the Union Health Minister JP Nadda, an assurance was given to him, given to them that the entire security system for the healthcare staff will be in fact boosted up and there will in fact be stepped up. Now what we are seeing is that the strike was called off by FORDA, but today Pharma has decided that they will continue with their protest. So behind me are the representatives from Resident Doctor Association and also from Pharma that are continuing with their protest. And remember, the demand right now is, of course, yesterday the demand was that then it should be CBI investigation after the Calcutta High Court has ordered that the matter should in fact be taken by the CBI. That demand has in fact been fulfilled, but right now the focus of these resident doctors.
Welcome back. Well, Eversource Capital is a homegrown domestic private equity firm with a presence in Southeast Asia as well. Over the past 7 years, the firm, which has around 80% of its investments in IT and healthcare, has made investments of $1.3 billion in various healthcare companies. To talk more about its investments, the current environment, we have with us the company's MD, Arjun Oberoi, and Head Private Equity India, Pancham Mukim. Arjun as well as Pancham, welcome to the show. Well, Pancham, let's start this conversation with you. You've invested around $1.3 billion in various healthcare companies. None of them are listed and none of them have seen, an IPO route till now, but very different investment routes. For example, one has been within the hospital space and then we have others which are in the medical technology space. Give us a sense in terms of the key themes that Everstone is picking out when it comes to its healthcare investments.
Sure. Thanks, Ekta. Firstly, when we speak of healthcare, these are multiple segments within a segment. We have hospitals, we have diagnostics, we have pharma, and we have med devices, and then we also have nutraceuticals. And over the last 7 years, we've invested a lot of money behind multiple of these themes, right? So, and we've pretty much played every node of what we call healthcare. We've invested in a hospital business called Sayadri Hospitals. That was a big theme we have been playing. We continue to be bullish on the multi-speciality healthcare services space, given the macro is extremely favorable in the hospital industry right now. And as you've seen, the performance, even in the public markets for some of these businesses has been superlative. We've also invested in the what we call the India-US corridor, where we've bought into generic manufacturing businesses and R&D businesses with low-cost manufacturing, strong R&D and complex generic development skills, exporting products out of India into the US and European markets. We played med devices with two of our investments in Translumina and Everlife. And we've also played nutraceuticals in an investment we made in a nutra ingredient manufacturer called OmniActive. So very diverse spectrum of investments and a lot of capital deployed behind these themes. In fact, close to 45% of our last two funds have been deployed in healthcare. We haven't taken any of these businesses public. Public markets have sort of have been very, very robust over the last couple of years. But we've generally sold most of our businesses to other private equity firms and sometimes to strategics. However, having said that, we are sort of evaluating taking a couple of our portfolio positions right now to the public markets, but we'll see where that goes over the next 12 months. Something that we are working on right now.
Okay, let's get in Arjun Ubroy in the conversation as well. Arjun, as Pancham was just mentioning that hospital space, the macros are looking really good, and you're invested across segments or verticals in the healthcare segment. What is it that is looking interesting right now? Anything apart from the themes that Pancham just spoke about that could be in the pipeline going forward for Everstone?
Yeah, look, I think the way we look at investments is, the biggest issue in India and Southeast Asia is addressing infrastructure and access gaps to affordable quality healthcare. So we continue to really like the specialty, the tertiary and quaternary multi-specialty hospital space. But then again, we're also serving in the US and Europe. We're also addressing the high cost of healthcare issue, which is why CDMOs, contract development and manufacturing organizations that have specialized capabilities, either in API synthesis or in formulations. So rather than looking at bog standard oral solid dose formulation companies, of which there are a dime a dozen, we are very selective about specialized capabilities that India has to serve the US and Western markets, which is why many of the themes that we have invested in the last 6 or 7 years continue to be relevant. In India, it's largely a service play around multi-specialty hospitals, as Pancham said, and the cross-border thesis is really leveraging India's capabilities in R&D and manufacturing, specialized capabilities to serve the US pharma nutraceutical markets. One theme that has become very apparent to us also in the past decade is the emergence of the medical device sector in India. I would say a decade ago, there were very few companies of scale and quality, and much of the medical devices were imported from the US, Europe, Japan, and China. Today, a thriving medical device industry has emerged, and we have been very much at the forefront of this. Two of our largest investments in Fund 3 have been in the medtech sector, one covering clinical diagnostics and life sciences, a company called Everlife, which has now emerged as the leading laboratory solutions business across India and Southeast Asia. And the other one, a business called Translumina, which has emerged as India's leading cardiovascular stent and devices company.
Okay, Arjun,
and by the way, on the public
narrow
market story, we're thinking quite seriously about an IPO possibility for both of these assets.
Okay, Arjun, I just wanted to quickly narrow down on the hospital space because you said that you're quite interested. You have investments in Sahyadri hospitals as well. One, is there any kind of slowdown in terms of the private equity interest simply because there is this concern with regards to regulation of rates from the Supreme Court, which is still pending as an issue and could be an overhang? And two, are there as many assets available in the hospital space as much as they were, say, in 2023 and 2022?
I think it's probably best if Pancham takes this one.
Okay, sure. Pancham, over to you.
Thanks, Arjun. Look, I think there is some overhang on price controls, etc. But as we look through assets, one important theme for us has been to buy into workhorse models, right? That provides access to all. Sahyadri was an example of one such investment, right? So, as we evaluate assets, we see where pricing is versus where market is, right? So, and that can be across different specialities. There is that overhang, but our view right now is that doing something of what is being propagated around would kill private investment in the sector, right? So there will be rationality because there is criticality of the private sector to continue to play its role, especially investments going out to build capacity in tier 2, tier 3 markets, right? So unlikely, that gets hit, and we've seen the government being very rational in terms of implementing various social security schemes across the healthcare space as well. As far as the question around availability of assets, you're right. This is a space that is consolidating, and that is driven by the need for underlying real estate, right? And greenfields take a lot of time to build out. Or inorganic has been a way to play for most of the chains, especially the ones now that are listed at reasonably robust multiples. This is the way to also fuel growth. So having said that, there are a lot of regional chains around that continue to do well and scale, and our focus will be around that. Similar to what it was with Sahyadri Hospitals, which was a regional chain in Pune and Nasik. And we continue to focus on regional markets and are very catchment focused as we evaluate businesses.
All right. Well, quickly, Arjun, just wanted your thoughts on the medical devices space. You did mention that two of your biggest investments or two of your recent investments are within that space, could go down the IPO route. We still import majority of our medical devices as a country, around 60-70% odd, and that's more for the high-end medical devices. Do you think that trend is now changing? This is the next leg of growth that India could probably expect, and private equity is looking at more formidably, not only the lower-end medical devices, but maybe even high-end coming into India or indigenous manufacturing of high-end within the country?
Yeah, absolutely. We spent a huge amount of time looking at this sector over the past decade. In my previous, I used to head healthcare for Actis before I joined Everstone, where China was a significant portion of what we did. And if you look at the Chinese medical device ecosystem, they, I would say, are probably 20 years ahead of India. Right, and a lot of the import, substitution and local incentives to manufacture 25, 30 years ago have resulted in huge Chinese medtech companies across clinical diagnostics, cardiology, wound care, orthopedics, hospital consumables, etc. While India had focused largely on its homegrown pharmaceutical and domestic sectors. So, the focus, I think, has really shifted in the past 10 years. We got in very early, 6-7 years ago, as we started to profile all of the medtech subsectors within the country and looking at the capabilities at hand. And you've seen with the emergence of several companies, a burgeoning ecosystem in India today, which is attracting a lot of private equity interest. Within cardiology, a few companies sizable companies have already emerged. I mentioned Translumina, our portfolio company, which has become the market leader now domestically in this space. But you also have companies scaling up in many other subsectors, including wound care, orthopedics, hospital consumables, vascular access, and sectors such as this. So I imagine in the next 5 to 10 years, this will become one of the hottest sectors for private equity investment. And we've already seen this with the recent acquisition of Healthium by KKR.
Okay, all right. Arjun and Pancham, thank you so much for joining us today with those insights. It was a pleasure speaking with the two of you. But with that, we'll have to wrap on this interesting discussion and take a short break. We'll come back with more news and updates on the other side. Stay tuned for that.
in solidarity and in protest is that there needs to be a Central Protection Act that needs to be implemented. So that is why this protest is in fact happening at RML, and this is not just the scene at RML Hospital, but in AIIMS and several such government hospitals in the national capital are going through the similar sort of strike. And under this strike, the elective services have been affected, whereas the emergency services is running smoothly.
हमारा जो मध्यम वर्गीय परिवार है, मध्यम वर्गीय परिवार को क्वालिटी ऑफ लाइफ वो स्वाभाविक उसकी अपेक्षा रहती है, वो देश के लिए बहुत देता है, तो देश का भी दायित्व है कि उसकी जो क्वालिटी ऑफ लाइफ में जो उसकी अपेक्षाएं हैं, सरकार की कठिनाइयों से मुक्ति की उसकी जो अपेक्षाएं हैं, उसको पूर्ण करने के लिए हम निरंतर प्रयास करते हैं। और मैंने तो सपना देखा है कि 2047 जब विकसित भारत का सपना होगा तो उसकी एक इकाई ये भी होगी कि सामान्य मानव के जीवन में सरकार की दखलें कम हो, जहां सरकार की जरूरत हो वहां अभाव न हो, और जहां सरकार की बेकारण प्रभाव भी न हो, इस प्रकार की व्यवस्था पर हम प्रतिबद्ध हैं।
So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult, and the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
Global funds category, international funds which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it...
Welcome back. You're still tuned into Halftime Report. Let's talk about some stocks which are on our radar. DLF is one of them. It is gaining on the back of a positive brokerage note. That is coming from JP Morgan. The stock is high by 4%. The brokerage has gone ahead and increased the target price on the stock to 1,000 rupees. They have an overweight rating on the stock. They like the balance sheet strength and how it has been improving over the last couple of quarters. They believe DLF will surpass that $1 billion operating cash flow at group level in FY25. And this is because of the strong sales cycle that the company has been seeing, and also because of compounding of free cash flow at its rental business. Remember, that business has been growing exponentially as well. They think that because of this, it could open the significant strategic flexibility at group level on acquisitions, and they see upside to pre-sales margins and cash flows in FY25. Now remember, in Q1 already, they have achieved 38% of their pre-sales guidance. The cash flows have improved by 100% on a YOY basis, and that is something which is making JP Morgan very bullish on the stock, and that's why that 4% uptick that we are seeing on the stock right now.
Okay, so that's on DLF. That stock up around 3.5%. Some source-based information on Yes Bank, so just to watch out for that. We'll take a short break, but up next we'll be talking to the management of Yatharth. That particular hospital came out with numbers. We'll discuss the performance on the other side.
Right now.
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last year when the taxation was changed, and now it's come back into reckoning with full power and full force, and I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones, but on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
भारत को किसी कोई भी हॉस्पिटैलिटी का सामर्थ्य भारत में सबसे ज्यादा है। अगर ये सिद्ध हो चुका है तो साथियों, हिंदुस्तान का सपना है कि 2036 में जो ओलंपिक होगा वो मेरे हिंदुस्तान की धरती पर हो। इसके लिए हम तैयारी कर रहे हैं, उसके लिए हम आगे बढ़ेंगे।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
मुझे गर्व इस बात का भी है कि हमारे सीईओ आज दुनिया भर के अंदर अपनी धाक जमा रहे हैं। भारत के हमारे सीईओ विश्व भर में अपनी धाक जमा रहे हैं। हमारे लिए खुशी की बात है कि एक तरफ मेरे सीईओ दुनिया भर में नाम कमा रहे हैं, भारत का नाम बढ़ा रहे हैं, तो दूसरी तरफ विमेन सेल्फ हेल्प ग्रुप से 1 करोड़ मेरी सामान्य परिवार की माताएं बहनें लखपति दीदी बनती है।
Welcome back. Still tuned into Halftime Report on CNBC TV18. Well, it's picked up a little bit of pace for the markets, so do watch out for that. In fact, the market's at the day's high. 24,444 is currently where the Nifty is at. We have the mid-cap index, which is also leading from the front, so it's up around 1.4%. And the Bank Nifty, which is really adding weight today, so up around 1.3% currently for the Bank Nifty. The advance decline ratio remains in the green terrain, so going strong in terms of the advances. When you're talking about specific stocks, there has to be IT, which has had a fabulous week. So Wipro is up 4% on a week-to-date basis. Techem is following suit with a gain of around 4.3%. LTI Mindtree as well has done well. Along with that, coupled with banks such as ICICI Bank, that stock is up around 2% at this point. Kotak is doing well, so up around 1.6%. So it's really IT as well as banks which are adding to a lot of strength today, along with obviously autos such as M&M and Tata Motors, which are doing well. But nonetheless, let's talk about one particular company. Yatharth Hospital posted what was a steady set of Q1 numbers, with its revenue up 37%, occupancy and average revenue per bed rising as well. To discuss this, we have with us Yatharth Tyagi, the whole-time director of the hospital, joining in. Yatharth, hi, welcome to the show. Well, if you could just start by giving us what led to, this growth of 9% that you saw in your average revenue per occupied bed this quarter. Is it because the surgical part, high-end surgical part, high-end services is now increasing as it has been for most hospitals? And that's what you're seeing as a trend for your hospital, which led to this 9% rise? And what is the trend as well?
Right, so the increase in the ARPOB that you see here is primarily due to two aspects. One is the rise in oncology services. So oncology is something which we were offering earlier, but the full complete suite of oncology services is not there. So for example, radiation oncology and PET scan, as well as bone marrow transplants, is something that we have recently started. So over the course of last 1 year, we see, where oncology used to contribute just 3% in terms of our overall revenue, is now contributing to 10% of the overall revenue of the group. In fact, the Nord Extension Hospital, that's where we have the complete oncology suite. That's where oncology is now contributing 17%. So the increase in the average revenue per occupied bed is one, due to oncology. And second aspect is also the robotic surgeries. So we have 3 Da Vinci robots as well as 3 orthopedic robots. So this is something again that we have recently started, and an average robotic surgery costs more than the normal surgery. It's also good for the patients. Patients are now able to discharge much more faster from the hospital. The scar is much less and the recovery is much more. The recovery time is quicker. So robotic surgery is again one of the reasons you see an increase in the ARPOB. So oncology and robotic surgery are the key drivers. And also going forward, we feel as these share increases much more in our overall pie, ARPOB is bound to increase in the similar trend going forward.
What is the trend that you're looking at? Your ARPOB has improved to levels of 30,550 right now versus levels of around 29,000 earlier. What is the year-end target in terms of guidance? And oncology, from current 10%, how much can you scale it up to by end of this year? And what is the plan, longer-term plan for oncology?
See, oncology is a huge market. In India specifically, if you see in the last few years, the cases of cancer have been steadily rising. We feel in Delhi NCR, there's still much more advancement that is yet to be there in the field of oncology. T-cell therapy, leukemia, as well as bone marrow transplant. These are specialized areas where much more needs to be done. So we feel going forward, we expect to see similar increasing trend in our oncology. So 10% now, yes, we feel that, as I mentioned, the hospital which has the radiation line has 17% oncology. We feel that in this hospital going forward, oncology can even touch 25% in a couple of years' time. As far as ARPOB is concerned, we have grown around 10% from last year. We do expect to be growing on the similar trend in the coming year also.
Okay, so you're expecting this 9-10% growth in ARPOBs to continue in the coming quarters?
I think year on year, 10% would be a good number.
For FY25 as a whole?
No, 10% as a whole, year on year.
Okay, all right. Occupancy, that's at 61%. Do you expect that to rise? The reason I ask is that oncology also has a lot of daycare services. So while you might be making money, from oncology services, it might not reflect in your occupancies. So when it comes to occupancies, what are you guiding for?
See, if you look at our occupancy, it has also grown significantly. Last year, it was close to 51%, and now we are close to 61%. So not just oncology, the reason for the rise in our occupancy is because certain other services like neurosurgery, cardiology, these have also seen significant growth. And two of our hospitals, I would still say, are still in a maturing phase. They're still not mature hospitals, so occupancy is bound to grow there. So as we see the increase in the OPD and IPD volumes, specifically, because we've seen good increase in IPD volumes. So we feel going forward, occupancy would be steady, but it would still continue to rise.
So what's your target occupancy?
I think overall at group level, I think in a couple of years' time, 70% would be a good occupancy level.
All right. Yatharth, how much of the contribution came in from international patients this time around? You have said you've expanded the transplant program. There is radiation oncology program. How much was it right now? How much can this be improved because of these new segments?
See, the two of our hospitals are located in Greater Noida, and Noida. So Jewar Airport, the Asia's largest international airport, is supposed to start this year. And first international flight is supposed to start this year itself. So we feel in this regional areas that we are present in, we will be bound to significantly benefit from the new airport that is coming. Even our new hospital, Faridabad, it's not that far from the upcoming international airport. So we feel going forward, this whole city, this whole area is going to boom up as far as medical tourism is concerned. More ecosystem is being created for handling international patients. This is something again where we have already taken certain steps. There's new teams of international marketing that have joined. We are signing MOUs with different countries, different outstation OPDs. Our doctors are now regularly going to CSF countries, African countries, conducting OPDs there. So we're quite confident that in the coming years, international patients should be touching close to double-digit contribution in terms of our overall revenues are concerned.
Okay, all right, Yatharth, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from Yatharth Hospitals. That stock has done well, up around 3.5%. We'll take a short break. Up next, lots more stocks lined up. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across three different groups. One is the physiological within the body triggers. Two is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines, and stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens, they induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone. And one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in whom triggers may not be.
Welcome back. Well, let's talk about Glenmark now. That particular stock is in focus because it came out with what was a good set of numbers. It came out, it reacted to its set of numbers today. Besides that, it also held its conference call at 8:30 a.m. and the commentary was positive along with the numbers, which were quite steady. Revenue was up around 7 to 8%, margins at 18%. Now, in terms of the call, the company has said that they have a net cash of 359 crores on their books. They've guided for 19% margins going forward. Key drivers include the India business, the Rialtris drug, respiratory products, lower R&D expenses. They expect India to grow quite well. It was up 11.5% in the previous quarter. They're expecting 10 to 15% growth in FY25. According to them, the US remains challenging. Second half will see recovery in the US. They're looking for partnerships in certain molecules such as 1342, which is under development for them. Now, additionally, they have a meeting with the USFT in September on their Monroe facility, which has been under the regulatory scanner. They've completed remediation for their Goa plant. Now, for Glenmark on the call, interestingly, they said that the focus on the Buddy facility, which is also under the regulatory scanner, has reduced for Glenmark. Now, US is around 24% of their sales. Interestingly, Glenn Saldana pointed out that Europe could be as big as US by the end of this year. So Europe could be a huge generator in terms of sales for Glenmark going forward, and the importance for the US could probably reduce comparatively. Now, Rialtris, which is basically their respiratory drug, they've launched it in multiple markets, made around $20 million this quarter. They're expecting $80 million in FY25 from this drug. Liraglutide, which is basically a GLP-1 drug, a weight loss drug, diabetes drug, has seen a good offtake in India. Well, on that note, we'll take a short break, but more on the markets, lots of stocks on the other side.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptance.
Welcome back. Well, markets picking up pace. The Nifty is sitting with gains of almost 300 points. Remember, we did see that dip around 10:30, and now that has been completely bought into. 223 points recovery from the lows. Mid caps are powering through as well. That index is up 1.5% right now. Very strong advance decline ratio in favor of the advances right now. Couple of stocks that I would like to point out, which are at the day's high right now and contributing to the gains that we are seeing on the Nifty as well. HDFC Bank, that is the one which is at the day's high right now. That stock is up 1.3%. It did underperform a little bit last week, but it has made a comeback. GAIL is the other one. A lot of these stocks from the oil and gas space are making a comeback. Nestle from the consumption space is also at the day's high right now. We have Dabur, that also from the consumption space is doing well. Some of these banks, ICICI Bank, SBI, all of them are doing well, and of course that is something which is supporting the Nifty at those high levels as well. 24,400, that's where the Nifty is currently at. But with that, we'll wrap on halftime report for today, but Business Lunch will take all the action ahead. You have a great weekend.
We as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for a sustained, healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are two other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones, people are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you are seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we're even number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
करीब 25,000 युवा हर साल विदेश में मेडिकल एजुकेशन के लिए जाते हैं और ऐसे ऐसे देश में जाना पड़ रहा है, कभी कभी तो मैं सुनता हूं तो हैरान हो जाता हूं। और इसलिए हमने तय किया है कि अगले 5 साल में मेडिकल लाइन में 75,000 नई सीटें बनाई जाएगी।
We want justice. हत्यारे को फांसी दो। उसका कातिल जिंदा है। उसका कातिल जिंदा है।
It's almost more than 4 days and the strike is continuing in Arjikar and other places of government hospital. But right now let me show you the situation which shows that how the health system has been badly affected. This is the emergency of Arjikar where there is no one, there is nothing here, everything is closed and the doors are closed, and even you can see that there is lock and key. There is tala there, this is lock and key, and nobody till yesterday there were emergency people were coming, but now there is the emergency in one of the most important government hospitals in Kolkata. If this is the situation, then it is a very, very concerned area, and the patients are sitting there as you can see, but there has been no remedy for them. That is also now a growing concern, that because of this strike continuing, the emergency of this Arjikar Medical Hospital is now totally.
Market trades at the highest point of the day on the back of strong global cues. The Sensex and the Nifty are up over 1% each as IT, auto and frontline banking stocks see buying. The mid-caps are outperforming. Ola electrifies the street as the first quarter losses narrow over the March quarter, and top line also grows by 32% year on year. Founder Bhavish Agarwal says that the auto segment is close to a break-even at the EBITDA level. The company also launched its e-motorcycle Roadster with deliveries lined up from Diwali of 2025. The stock is up nearly 20%. Hindustan Zinc has skid in trade after Vedanta launched the offer for sale at a 15% discount to Wednesday's closing price. Aurobindo Pharma also falls close to 3% as one of the company's formulation manufacturing facility has received a warning letter from the US FDA. And shares of RHI Magnesita have surged 11% after posting record high EBITDA margins. Glenmark Pharma too is up over 5% on improvement in margins and profitability. SpiceJet is under pressure on weak first quarter performance. The company's auditors have said that accumulated losses have entirely wiped out the company's net worth, and doubts remain on the company's ability to continue as a growing concern. Hello and welcome to Business Lunch this afternoon on CNBC TV18. I am Hormis Fatakia. Let's first take a look at how the markets are faring, and it's been a very, very swift recovery from the lows of the day. We left the show of chartbusters at around 11 a.m. with the Nifty at around 24,250. Now it's at 24,450. It has crossed that mark of 24,367, which it had to cross to turn positive for the week. And yet again, if that happens, it will be yet another 2-week losing streak for the market that will come to an end today. Remember, the Nifty has not seen a 3-week losing streak since July and August of last year. So very good going for the Nifty, at least in the last couple of hours. Now 300 points higher on the index, nearly 1.5%, and heading towards that mark of 24,500 as we speak. What's leading the gains? IT is the top sectoral gainer. The IT index is now up for the 5th day in a row, and that is now up 2.5%, back above the mark of 40,000 as well is the Nifty IT index and all the IT heavyweights. But the gains also coming from the mid-cap IT end of the things, scheme of things, be it Emphasis, L&T Technologies, Zensar, Birlasoft, all of these stocks seeing very, very healthy gains in today's trading session. The mid-cap IT leading the charge in today's session. What is also doing well are the real estate stocks, media. The broader markets are also doing well for themselves. The mid-cap index is up 1.5%, as is the small-cap index. So good going all around for the markets. The Nifty Bank also is now well above the mark of 50,000, which it was struggling to cross over the last few trading sessions. So it's the bulls looking to end the week on a high, but beginning business lunch by focusing on the auto space. The automotive sector is abuzz with noteworthy vehicle launches. Ola has announced the company's foray into the electric motorcycle segment with the launch of the Roadster series. The motorcycles, the Ola Electric's bike portfolio now under this range comprises of 3 models with prices starting from 75,000. The founder, Bhavish Agrawal, says that they will have good gross margins with motorcycles from the start, and they have already have an installed capacity of 1 million units per year. Listening to what he had to say.
Making bikes electric is a very important part of the electrification of India. The next frontier of electrification is bikes. And what we've announced today are 3 bikes, not just one, across a price band, like you mentioned, from 2.5 lakh rupees to 75,000 rupees. Yeah. So the Roadster Pro, the Roadster and the Roadster X. Yeah. Now, the good important point to note for your viewers is that all these bikes will actually start from where the scooter supply chain and cost structures are already. Yeah. Right, because the entire platform is common. Yeah. And the suppliers are common, the supply chain is common. So we'll have a good gross margin from the starting point.
Bhavish Agrawal there, and it's showing up in the stock price as well of Ola Electric. Yet another 20% surge in today's trading session. Almost there, 20%, 132 now on the stock is Ola Electric. Remember, HSBC recently initiated coverage today on the stock with a buy recommendation. They have a 140 rupee price target, and the stock has already reached 132 now as we speak. Now almost 75% higher from its IPO price, which was 76 rupees a share. Pull up M&M as well and see how that is doing in today's session, and we'll get an idea of Ola's commentary as well. Mahindra & Mahindra also trading or close to 3% higher, among the top gainers on the Nifty today, trading with gains of close to 3,000. Because they're also focusing on M&M is because it has launched its most anticipated 5-door Thar, which is named Thar Rocks on Independence Day to strengthen its position in the sports SUV market. Now, Thar Rocks has been launched in 6 variants, both in petrol and diesel engine options. Now, priced between 12.99 lakh and 18.99 lakh rupees, the company expects the Thar Rocks to lead the 12.5 lakh SUV segment within the next 3 to 5 years. Now, speaking to CNBC TV18, Rajesh Jujurikar, the ED and CEO of M&M's auto and farm business, said that they think many customers will now prefer the new Thar model compared to their previous one. Listen into what he had to say.
Of course, there will be some customers who are buying the Thar 3-door today who may want to buy and would want to buy this, and we're totally open to that as long as they stay within our portfolio. We don't mind if they buy Thar Rocks versus the 3-doors. Customers to choose, but there are different products. So that is for the more compact off-roader. This becomes more mainstream for going out with friends, families, even on a normal adventure trip, not necessarily off-roading. But there will be some cannibalization, and we totally are okay with that. We've set up a total capacity of 9,500, which has some reasonable amount of fungibility between how much we can make out of the 3-door and 5-door.
More launches from the auto space. The iconic British motorcycle brand BSA has officially been revived in India with the launch of the all-new Gold Star 650. Now starting at 2.99 lakh, this launch marks the entry of the brand's new modern retro motorcycle. Assembled in India and available in 5 distinct color variants, the BSA Gold Star 650 goes head-to-head with the Royal Enfield's Interceptor in this category. Classic Legends, a subsidiary of the Mahindra Group, had acquired the rights from the British custodian David Bennett. Now Anupam Thareja, who is the co-founder of Classic Legends, spoke to CNBC TV18's Rashna Dhanrajani. Let's listen into what he had to say on this new launch.
I think the beauty of this is that we have really put our heart behind making sure a single gives what a biker needs. You can make a bike with a lot of gizmos and a lot of lights and batteries and electronics, but sometimes you make things simple. So leave the creativity to the rider, right? So it is a bike made for riders. It's a bike where we believe will get motorcycling up, will get riders back into this category. It's a very powerful machine. It's got the highest torque in its category.
And on this slew of auto launches, we take a short break here on Business Lunch. We get you more on the markets and focus on some stock-specific action on the other side. Stay tuned. We'll be right back.
Very big area of concern, and this is also something which is concerning and which is putting the problem of state administration, but students are still continue because they believe their demands are still not made.
$140 करोड़ मेरे परिवारजन अगर संकल्प लेकर के चल पड़ते हैं, एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं, तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster, because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically, if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming.
Back with us here on Business Lunch. Now, while the entire market is a green screen, the one stock that is not in the green is Hindustan Zinc, and that has seen a bit of a slide in today's session, actually quite a bit of a slide now, 8.5% lower, and that is because this promoter Vedanta has increased the size of its offer for sale to 13.3 crore shares from the 11 crore shares earlier planned. Now, Nigel is joining in with more details. Nigel, what do you have more for us?
Well, you know, Hindustan Zinc, the limited float in the market is only around 2% approximately. The government of India has roughly around 30% stake. Vedanta has 65% stake. LIC has more than 2.5% stake. So it had very, very low float. And that's why the stock in this year itself had more than doubled. Now, Vedanta has come out with a very positive move from the Vedanta shareholder perspective. They are saying that they have 65% stake in Hindustan Zinc, and they want to sell some stake over there via the OFS route. Everyone was waiting by for the government of India to go ahead and sell this stake, but Vedanta, they said, let us go first. So they are going ahead, and they earlier said that they will be selling 11 crore shares. Now it seems demand is fairly good. That's why they have upsized it to around 13.4 crore shares odd. This is great news for Vedanta because they'll be getting close to around 6,500 crores at the lower end of the price band. We'll have to see what is the ultimate price, but this is good news. That money can be used for debt repayment, for capex, as well as to pay out some dividends. For Hindustan Zinc, well, the stock is lower because the float is limited, and because of which it's priced at such a discount in comparison to the closing price as of Wednesday. At the price of around 600 rupees, well, the stock was trading at around 13 to 14 times EV upon EBITDA. So that's why it had to be priced more attractively. Not just that, the Hindustan Zinc board will be meeting on August 20th. And at that point of time, they'll be considering a dividend. Every 100 rupees that Hindustan Zinc pays out, Vedanta gets 65 rupees. So it seems that Vedanta is well placed with regard to this because they'll be getting money from the OFS and then they'll be looking forward to an additional dividend coming from Hindustan Zinc. Back to you.
There's one important thing that needs to be kept in mind that Nigel highlighted, that Hindustan Zinc has a very little float in the market, and that is also why the reactions on this stock are always on the extreme. Some flashes on your screen. Ambuja Cements has just informed the exchanges that it has completed the acquisition of Penna Cements, and therefore it has now become a subsidiary of the company effective today. Remember, they had announced this acquisition sometime last month, or in the month of June actually. Now 1% higher is Ambuja Cement completing the acquisition of Penna Cements. But moving on, the United States government has cut prices for 10 prescription drugs under the Inflation Reduction Act. Ekta is here to tell us more, and also about the impact that it could have on Indian pharma companies. Ekta, over to you.
Well, I'll start with the news first. The US government has reduced prices for 10 prescription drugs under Medicare, which is mandated by the IRA, which is the Inflation Reduction Act. Now, the list prices for all but one of these 10 medicines have been reduced by at least 50%. So, important drugs such as, say, Entresto by Novo Nordisk, which is an important heart failure drug by them, has been slashed in terms of the list price by around 53% by the US government under Medicare. Now, Medicare is one of the channels which are available to sell US drugs. For example, Medicare, which is a type of government insurance, is around 18% of US drug sales. Medicaid is another 18% of US drug sales. Other channels include commercial channels through which the drugs are sold as well. Now, what is the impact on Indian companies? Basically, we are the largest, one of the largest suppliers of generic drugs into the US. Now, the price revision of these particular 10 drugs is limited to patented drugs. That means that these drugs are already being sold under a patent and there's no generic competition in it right now. Indian generic companies will only begin selling their version of the drug once the patent expires. So as of now, there's a patent, there's no generic company which is entering the market. What has changed then is the potential market size of the generic drug. For example, Entresto. Just to illustrate this better, the drug price is slashed to $295 versus $628. So the potential starting point of a generic drug entering the market would then be $295 versus $628. But it's important to note that generic companies in any case sell their drugs at lower prices. So there's stiff price competition when genericization takes place in the market. And separately, the price cut is only limited to Medicare at this point in time. It's not to Medicaid and other channels as well. So one has to really assess that on a larger scale. I spoke to a lot of people within the industry, within the analyst community, and they're not perturbed by this news as of now.
Not perturbed by this news. Ekta, thanks a lot for that update. Moving on, global investor and author Ruchir Sharma feels that India is the last bull market of the world that is still raging. Speaking at the CNBC TV18 town hall, he lauded the strength of this Indian market. Listen into what he had to say.
There really has been no bull market in the world this decade like India. This is a unique bull market unto itself, because also of the breadth of it. Like in the US, you had a bull market
largely driven by tech,
concentrated by tech and a few companies at the top. In India's case, it's been extremely broad, like in terms of what's happened. You know, there are various sectors that have, virtually every sector has participated in this bull market. So it's a very unique bull market that we have seen in India. It's the like only bull market in the world, I would say today, literally, the true bull market. I think that this has been one of those incredible financialization stories that's taken place. In fact, it's very, very telling. I can observe it because even I don't know what's the framework to use here as to where to call an end to this, right? Because it's already the most expensive market in the world. In terms of, it's already, in terms of, there's the returns over the last 5 years of this market in dollar terms have even exceeded the US in terms of what, what it's done. There really has been no bull market in the world this decade like India.
Ruchir Sharma there at the CNBC TV18 town hall. Time for a short break. When we return, we get you all the latest updates on the Kolkata rape and murder case that has sent shockwaves across the nation. Stay tuned. Back on the other side.
And maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
बांग्लादेश में जो कुछ भी हुआ है उसको लेकर पड़ोसी देश के नाते चिंता होना, मैं इसको समझ सकता हूं। मैं आशा करता हूं कि वहां पर हालात जल्द ही सामान्य होंगे। खास करके 140 करोड़ देशवासियों की चिंता कि वहां हिंदू, वहां के अल्पसंख्यक, उस समुदाय की सुरक्षा सुनिश्चित हो। भारत हमेशा चाहता है कि हमारे पड़ोसी देश सुख और शांति के मार्ग पर चले। शांति के प्रति हमारा कमिटमेंट है, हमारे संस्कार है। हम आने वाले दिनों में बांग्लादेश की विकास यात्रा में हमेशा हमारा शुभचिंतन ही रहेगा, क्योंकि हम मानव जात की भलाई सोचने वाले लोग हैं।
Welcome back. Getting you now the latest updates on the tragic rape and murder case of a 31-year-old doctor in Kolkata. Last evening, the CBI questioned 5 officials of the medical college. Meanwhile, the IMA has called for a nationwide strike for 24 hours starting tomorrow. CNN News 18's Anshul Singh has more on this.
This heinous crime that has happened in Kolkata has raised the eyebrows of many, and that is the reason why the doctors are now demanding for a Central Protection Act to be implemented so that ample amount of security could be maintained at the hospitals and colleges so that the doctors are not threatened by anyone. There have been previous cases as well where the family members of the patients have in fact gone ahead and attacked the doctors. Now the doctors are saying that to give the best kind of attention to the patients, they need safety and security, and that should be provided to them. Over the next 24 hours, the IMA has called for a nationwide protest of all services of doctors. This protest is going to start from 6 a.m. tomorrow morning and will go ahead till 6 a.m. on Sunday. Within the next few minutes, these doctors will reach towards Nirman Bhavan, that is the health ministry, and will carry out a protest over there. Definitely, the doctors are now trying to amp up pressure on the government so that the requisite action can be taken against the accused. Justice can be delivered to the victim who lost her life in this heinous crime, and also the safety and security of doctors working round the clock to give the best facilities to the patients is also amped up. How quickly will that happen? Will the government be able to find some sort of a midway with the doctors? These are few questions that we are seeking answers to. It remains to be seen if at all any sort of headway can be made from the side of the government so that it could be made sure that these protests, these strikes that are happening, that can be brought to an end.
Anshul Singh there with the latest updates. Now, the Election Commission of India is likely to announce poll dates for Haryana, Jammu and Kashmir and Maharashtra in a press conference scheduled for 3 p.m. today. And Jammu and Kashmir will be voting for the first time since the abrogation of Article 370. Maharashtra's political landscape has seen several tectonic shifts since the 2019 elections, with the two major local parties, the Shiv Sena and the NCP, now having split. Haryana will vote after long-drawn protests against the farm laws by farmers who form a large part of the electorate in this state. The ISRO today successfully launched the small satellite launch vehicle known as the SSLV-D3. The vehicle, carrying an Earth observation satellite, was launched from the Satish Dhawan Space Center in Sriharikota this morning. The SSLV-D3 mission was the third and final developmental flight of ISRO's smallest rocket, which is now fully operational for future missions. The mission is expected to boost ISRO's commercial satellite launch operations. Now, a new Prime Minister will be taking charge in Thailand. 37-year-old Paetongtarn Shinawatra, the daughter of former Prime Minister Thaksin Shinawatra, has been appointed as the country's youngest Prime Minister ever. She was nominated by the Pheu Thai Party after Thailand's Constitutional Court disbanded the Move Forward Party's government last week. That is a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar comes up next.
भारत के लिए गोल्डन एरा है। वैश्विक परिस्थितियों की तुलना में भी देखें, ये गोल्डन एरा है। ये हमारा स्वर्णिम कालखंड है। मेरे प्यारे देशवासियों, ये अवसर हमें जाने नहीं देना है। ये मौका हमें जाने नहीं देना चाहिए। और इसी मौके को पकड़ करके अपने सपने और संकल्पों को लेकर के चल पड़ेंगे तो हम देश की स्वर्णिम भारत की जो अपेक्षा और हमें विकसित भारत का 2047 का लक्ष्य हम पूरा करके रहेंगे।
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Today is the third day and the Resident Doctors Association protest is continuing. Remember, on the first day, FORDA had in fact called for a strike in several hospitals in the national capital. Around 11 such government hospitals in the national capital were undergoing strike. Now, last night, after FORDA representatives met the Union Health Minister JP Nadda, an assurance was given to him, given to them that the entire security system for the healthcare staff will be in fact boosted up and they will in fact be stepped up. Now what we are seeing is that the strike was called off by FORDA, but today Pharma has decided that they will continue with their protest. So behind me are the representatives from Resident Doctor Association and also from Pharma that are continuing with their protest. And remember, the demand right now is, of course, yesterday the demand was that there should be CBI investigation after the Calcutta High Court has ordered that the matter should in fact be taken by the CBI. That demand has in fact been fulfilled, but right now the focus of these resident doctors who are standing here in solidarity and in protest is that there needs to be a Central Protection Act that needs to be implemented. So that is why this protest is in fact happening at RML, and this is not just the scene at RML Hospital but in AIIMS and several such government hospitals in the national capital are going through the similar sort of strike, and under this strike the elective services have been affected, whereas the emergency services is running smoothly.
हमारा जो मध्यम वर्गीय परिवार है, मध्यम वर्गीय परिवार को क्वालिटी ऑफ लाइफ वो स्वाभाविक उसकी अपेक्षा रहती है, वो देश के लिए बहुत देता है, तो देश का भी दायित्व है कि उसकी जो क्वालिटी ऑफ लाइफ में जो उसकी अपेक्षाएं हैं, सरकार की कठिनाइयों से मुक्ति की उसकी जो अपेक्षाएं हैं, उसको पूर्ण करने के लिए हम निरंतर प्रयास करते हैं। और मैंने तो सपना देखा है कि 2047
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Ekta Batra, turning out to be a fantastic Friday for the Bulls. So much action and something we'll discuss with the management conversations and stock-specific news as well, Ekta.
Hi Sonal, yes absolutely. So we have a action-packed 30-odd minutes, but first up, all of the top stories. Markets trade at the day's high on the back of strong global cues. Mid-caps outperform, realty and IT surge, mid-cap, pharma and healthcare lag.
Glenmark Pharma rallies on good Q1 numbers and commentary. Company reports improvement in margins and profitability. Stock jumps over 5%.
Polyplex surges over 7% after reporting good numbers in Q1. Revenue up 8%, EBITDA up 170% on a year-on-year basis. Other packaging film stocks like Uflex, Ester also surged between 6 to 10%.
Positive commentary from JP Morgan boosts realty firm DLF. The stock is higher in trade. The brokerage issues an overweight call and raises target to 1,000 rupees. Says the company may surpass $1 billion operating cash flow at group level in FY25. Okay, all right. Those are the top headlines that we are tracking for the markets. It's a full 300-point gain that we are seeing on the Nifty. Mid-caps are powering through. That's almost a 900 gain there. Markets are at the day's high, and it's all courtesy Nifty IT because that index has surged and how it's almost a 3% gain on Nifty IT that we are seeing right now. And across the board, there are big moves that we are seeing. All the sectoral indices, they are in the green right now. Even Nifty Pharma, which was slightly on the redder side, has come off from the lows of the day. So a lot of action, stock-specific moves, and we are done with earnings now. So it's mostly on news flows that we are getting those moves. So a lot of action there. The small cap index too is higher, 1.7% there, and a lot of action in the broader market.
Well, yes, Sona, a lot of action in the broader markets. Well, we have the mid-cap index, which has surged around 1.5%, and the advanced decline ratio, which is positive as well. You were talking about the IT index. Just look at it on a week-to-date basis. It's gained around 4% plus. And compare that to the Nifty in terms of gains on a week-to-date basis. There's a clear outperformance which has come in for the Nifty IT index. But nonetheless, we do have a lot of ground to cover when it comes to specific stocks. It's a buzzing market. This is our segment, Mid-Cap Movers. We have with us Hormuz to take us through all the mid-caps that are moving around today.
The bulls certainly want to end the week on a high, slowly but surely, and there are plenty of stocks and more that have been buzzing around in today's session and can't not start off with Ola Electric there, 20% on an upper circuit this afternoon after the earnings, the launches, HSBC initiating coverage with a 140 rupee price target. It's already at 133. Sona, BLW Precision, Piramal Enterprises, after the 10% fall that it saw on Wednesday, is seeing a bit of a recovery today, and Paytm continues to see some gains in today's session. We are done with earnings, but earnings reactions are continuing in today's session. RHI Magnesita is one of them. It's seen a significant correction from the highs of the day, but still 7.5% higher among the top gainers on the Nifty 500 today. Polyplex is the one returned to profitability this quarter, as did Madras Fertilizers, both of them seeing healthy gains in today's session. You spoke of IT and the gains majorly coming from the mid-cap end of things. First Source up 7.5%. It continues to move regardless of the market trajectory. Emphasis, Zensar, Birlasoft has been an underperformer. Even that is seeing gains of close to 6% at the highest point of the day today. Some stocks doing well on the back of very strong volumes, and they'll come up on your screen. Glenmark is an earnings reaction as well, 5% higher. Management commentary positive as well. L&T Tech, PVR, Inox, MapMy India, all of them seeing gains of anywhere between 5 to 6% on very strong volumes. And lastly, some stocks that are bucking the trend. There are few and far in between. Hindustan Zinc is one of them, 7.75% lower now. Varun Beverages and Aurobindo Pharma had a bit of a gash when the warning letter news came in, fell around 6%, but now has recovered from the lows of the day, currently trading 2% lower. Back to you guys.
Okay, all right. Thank you so much. That's a long list of movers in the broader markets. Thank you, Hormuz, for joining in. It's a good time to get a technical check on the markets as well. Himeen Kapadia of KR Choksi Securities is joining in. Himeen, good afternoon. Thank you so much for joining in. We are seeing a big comeback, 300 points higher on the Nifty. Mid-caps doing well. Do we see more legs to this rally, we'll see some consolidation? What are the charts suggesting?
A very good afternoon to you, Sonal. Thank you for having me. Sorry, the pleasure. I think two things. The VIX is cooling off. Maybe the geopolitical tension is still there in the background, but the VIX has been coming off slowly and steadily, Sonal. So that is one thing in favor of bulls. Otherwise, there have been two bearish gaps, Sonal, on the daily chart as far as the Nifty is concerned. And that gaps, both those gaps have not yet been covered up. This is the third attempt we are making, Sonal, at covering up these gaps. Now, two things. These gaps provide resistance. Until they don't get covered up, that negative overhang will remain and pressure will be omnipresent. So these gaps need to get covered up. We are making that attempt. So hopefully they get covered up. Till then, it's going to be iffy. There wouldn't be a trending bias, and it would be extremely script specific, like the IT index that you mentioned. So I would say fingers crossed. Two bearish gaps, one's a big one. So I don't think that's going to get covered up today. That looks willy-nilly impossible.
Okay, all right. But specific stocks, Himeen, what's your approach today?
Yes, Ekta. I think like Sonal mentioned, I think the IT index, high tops, high bottoms, we are in an intermediate uptrend. And even if you look at the charts, Ekta, longer term point of view, just last month, we had posted a fresh all-time high. So IT index looks good. We've had a 1.5 year correction set for further highs. And we've also had a couple of weeks of a downward movement. So a buy on HCL Tech. The logic is all the mechanical indicators are in a buy mode. It's about the 55-day exponential moving average. Higher tops, higher bottoms. We are set to make a new all-time high. So one can buy HCL Tech at around 1660, stop loss of 1630, target of 1720. And the second stock, Ekta, would be a contra buy call on Axis Bank. Well, banks have been abysmal. They've been corrective for a long time, even longer than the Nifty, and they haven't been performing. But now Axis Bank is staging a comeback. We are playing for a contra buy call. Currently, it's a recovery, not a rally. Same logic applies, high tops, high bottoms. All the mechanical indicators have given a crossover buy, some after reflecting positive divergence. Fallen off from 1340 to 1130. A short-term bottom has been made, so we are riding piggyback on this. One can buy Axis Bank at 1165, stop loss 1140, target 1215. It's a modest entry, small target, small stop loss, small target. I believe it can surprise.
All right. Okay, Himin, thank you so much for joining in with those technical picks. We'll speak to you soon again. Let's slip into a short break now. When we return, we'll be joined by the management of EPL to discuss the quarter gone by and the outlook going ahead. Stay tuned for that.
भारत का सपना होगा तो उसकी एक इकाई ये भी होगी कि सामान्य मानव के जीवन में सरकार की दखलें कम हो, जहां सरकार की जरूरत हो वहां अभाव न हो, और जहां सरकार की बेकारण प्रभाव भी न हो, इस प्रकार की व्यवस्था पर हम प्रतिबद्ध हैं।
So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering of the eyes, running nose, and they don't have trigger links too. So it is not difficult, and the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
Global funds category, international funds, which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs, and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted, and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category
Welcome back. It's time to focus on EPL. Company reported a good performance in Q1 with healthy growth in revenue and profit, and operating margins also expanded. Management says they will sustain double-digit growth in FY25 with 20% plus margins. To talk more on that and the outlook going forward, we are now joined by Anand Kripalu, MD and Global CEO at EPL. Mr. Kripalu, good afternoon. Thank you for joining in. The street seems to like the fact that you're sticking to your guidance, 20% plus margins, double-digit growth. I wanted to understand if this is achievable in FY25 itself, because you're right now at 18% margins. Will it be led by any particular geography or any product mix changes that you'll do? What is making you so confident of achieving this number?
Well, good afternoon, and thank you for having me on this program. Yes, we're actually very pleased with last quarter's numbers in terms of growth, margin, as well as PAT. And our absolute EBITDA growth also was really, really solid. Just a point, our margin last quarter was 19.1%. And the guidance that we've given is that our plan is to have sustainable double-digit growth with 20 plus margin. Now, we haven't very specifically said exactly when that will happen, but that is exactly the plan that we are working to. And we are absolutely confident that we will be able to consistently improve our margins as we look ahead towards that goal of 20%. So whether it will happen next quarter or by the end of this fiscal, I don't want to commit. But that is absolutely our guidance. And we have consistently been making progress towards the guidance that we've given.
Okay. You sound extremely positive in terms of the margins, but just wanted to understand, so, in terms of Egypt as a segment, that's been seeing some amount of currency devaluation. There's some headwinds in terms of demand. What does it mean as a segment for you all in terms of the geography and as well as the margins within that space?
So Egypt is actually a relatively small part of the business. Last year, we had to take an exceptional provision because of currency devaluation. The advantage now is that the currency is more free-floating, and therefore there is going to be no surprise in terms of currency loss. And what we're doing is trying to sweep whatever currency we have locally there and move it out of the country as fast as possible. Having said that, I just want to say that our demand and momentum in Egypt is really bouncing back, despite the fact that it's sitting at the foothills of a very troubled zone in the Middle East. Despite that, our domestic demand in terms of this volume and revenue remains very, very solid.
Okay. So, the EAP geography this time around has done well with margins of around 22%. You've seen reasonable revenue growth as well. Will this be the margin number going forward in this segment as well? What is the product profile here that margins are better? And will this lead to the growth that you're talking about in margins going forward?
So actually, as far as the overall margins for the company are concerned, I think the delta is going to come more from Europe and the Americas, okay? And that's what we've seen even in the last quarter. Now, EAP, to your point specifically, is already in the zone of margins that we're trying to operate in. And our performance in EAP is, while the large part of the business is still oral care, the contribution to growth has been very significantly coming from beauty and cosmetics. That's been innovation-led. A large part of that is to do with what we call local kings. So, local brands that that actually are doing very well in China and really test our capabilities in terms of innovation. But also importantly, as we innovate, we also get a margin uptick because it's more premium, and therefore we have better margins with those kinds of offers. So I think our ability to sustain EAP at these levels of margins, but drive growth more importantly, through accelerated beauty and cosmetics performance is really what we are aiming to do.
Okay. All right. That sounds interesting. But the other segment that, the other geography which you've seen some amount of traction from is Brazil. You've seen some amount of customer acquisitions there. You've seen some 2 new MNCs come on board. Give us a sense in terms of these kind of markets where you spoke about the personal care segment seeing a lot of growth. But Brazil as a segment, what are you, where is the growth coming from? How much is it growing? What are you anticipating?
So first of all, we're very excited about our greenfield entry into Brazil. We've been producing on the ground in Brazil for almost a year now, and we took less than a year to set up a plant in what is a very complicated country to do business in. So we're very pleased with how we've executed that project. Our anchor customer and the anchor volumes for Brazil were predominantly in the oral care segment. But what's happened is the moment we set up shop on the ground, we have actually been very pleasantly surprised with the kinds of inquiries we've had from other multinational companies beyond our anchor customer, as well as a lot of local companies. So the way we are looking at it is that, of course, this year Brazil will contribute to growth because it's not there so much in the base. But we're excited about the fact that we will continue to expand our customer base and continue to expand our business well beyond oral into hair care and other beauty and cosmetics brand, both multinational and local. So while Brazil is still relatively small to our total business, and it's becoming a meaningful contributor to our Americas region, we believe in terms of contribution to growth, it will sustain certainly for the next couple of years.
Okay, so just to follow up on that, Brazil's utilization levels were at 65 to 70%, the last known number. What does it increase to, the new plan? And the second part is the sustainable tubes. What is it as a percentage of revenues right now? In Q4, it was at 21%. Are the margins here higher for you?
Yeah, so as far as Brazil is concerned, our utilization is about 70-odd%. And I think the good thing is the civil that we've created in terms of just the structure of the factory, as well as utilities and so on, we have invested in for much more volumes in the future. So it's a modular factory. As more demand comes in, it'll take us 6 to 9 months to put in a new line and start producing more tubes. Okay, so we can operate in a very agile way there. And the moment we hit a circuit breaker of 80-85% utilization, I think we will go and start expanding. To your point on sustainability, we are actually very focused, but also very excited about our journey on sustainability. Sustainability for us is not just the tube, it's about being the most sustainable packaging company in the world. And that's why we were awarded EcoVadis Gold last year, and we're well on our journey to get to Platinum by next year, which will put us in the top 1% of companies worldwide. Now, this quarter, 29% of our tubes were fully recyclable, right? So sustainable, up from the average of 21% in FY24. So what we are seeing is now an accelerated demand from our customers, and our objective is to stay one step ahead as far as our ability to supply sustainable tubes is concerned. To a last point on margins of sustainable tubes, you always have a choice when there is a discontinuity in the marketplace. You have a choice to say, am I going to use this as a driver of growth and an opportunity to grow my share of the total tube market? Or will I be opportunistic and charge more for it? We are doing the former and not the latter. And we have actually seen in the last quarter good improvement in our wallet share, because we are more ready than others to supply sustainable tubes. So we are seeing good increase in wallet share, particularly in oral care.
All right, that point is taken, and congratulations on your sustainability efforts as well. Completely run out of time. Thanks very much for joining in and speaking with us. So that's EPL. Stock has done well, up 23% this year. We'll take a break and be back with more. Stay tuned.
Has got a huge impetus, and needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last last year when the taxation was changed, and now it's come back into reckoning with full power and full force. And I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal. I think they're accepting SIPs out there. So if someone wants to buy NASDAQ directly, I think that's a good avenue to go for.
भारत को किसी कोई भी हॉस्पिटैलिटी का सामर्थ्य भारत में सबसे ज्यादा है। अगर ये सिद्ध हो चुका है तो साथियों, हिंदुस्तान का सपना है कि 2036 में जो ओलंपिक होगा वो मेरे हिंदुस्तान की धरती पर हो। इसके लिए हम तैयारी कर रहे हैं, उसके लिए हम आगे बढ़ेंगे।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
मुझे गर्व इस बात का भी है कि हमारे सीईओ आज दुनिया भर के अंदर अपनी धाक जमा रहे हैं। भारत के हमारे सीईओ विश्व भर में अपनी धाक जमा रहे हैं। हमारे लिए खुशी की बात है कि एक तरफ मेरे सीईओ दुनिया भर में नाम कमा रहे हैं, भारत का नाम बढ़ा रहे हैं, तो दूसरी तरफ विमेन सेल्फ हेल्प ग्रुप से 1 करोड़ मेरी सामान्य परिवार की माताएं बहनें लखपति दीदी बनती है।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
140 करोड़ मेरे परिवारजन।
Welcome back. Well, for the markets holding up well, we have the Nifty, which is up around 327 odd points. We have the mid-cap index, which is up a cool over 900 odd points at this point. A lot of stocks which are buzzing around in within the entire space. So RVNL is up around 3 odd % from the broader markets. Remember that stock has already gained over 200 odd % year to date, and a couple of these pharma stocks are now seeing a bit of a comeback. But we need to wrap up on the show. Stay tuned. Your stocks will take all the action forward.
अगर संकल्प लेकर के चल पड़ते हैं, एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं, तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across three different groups. One is the physiological within the body triggers. Two is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times, you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens, they induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone. And one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a very solid session for us at this point. So, advanced decline ratio, which is in the advancing side, on the advancing side, 2,561 stocks with 1,555 stocks declining. And we have the Nifty, which is showing a gain of around 346 odd points. Sensex also above 80,230. So good going for the markets, Bank Nifty and mid caps really leading from the front. Well, to put it into perspective, we just about have around 5 stocks which are declining within the Nifty 50. Well, joining us today, we have Shaina Mukaddam as well as Ashish Kyal to take you through all of your stock queries that you might have. Shaina as well as Ashish, welcome to the show. Well, Ashish, let's just kick off the segment with you and ask you about the strong trend that we've seen in the markets, gone from strength to strength today. What is your sense? Would you be a buyer into this strength or maybe, reserve some gunpowder for later?
Absolutely. Afternoon to you and all the viewers. If you look at market, I think there is a very important time cycle which is turning back on the upside over here. And looking at that, I think this is an opportunity to buy the index on any dip. So if you can get a dip towards 24,420, that can be the ideal level to enter into the index. and maintain a stop loss of around 24,300. We can expect a target of around 24,728. That's the gain level. So overall, there is a broader participation. We can see Bank Nifty is also outperforming, up by nearly 850 points. So I'm optimistic about the index and Bank Nifty. This can be the positive reversal we are looking at, and we might eventually head towards the. It might be too soon to say that, but use any dips as a buying opportunity for the first target of 24,728 levels.
Okay, all right. Use any dips as a buying opportunity. So that's the word coming in. But we do have a lot of queries lined up in the next 30 odd minutes. Ritu first calls in from or writes to us from Nagpur. She wants to know whether this is the right time to buy LIC or whether she should wait for some correction for entering that particular counter. Well, that stock is up around 2 odd % at this point in time. Let's start with a fundamental view on this one, Shaina. First, LIC, do you think that this is a good time to enter, or would you probably wait on the sidelines?
Well, you can start entering as of now, because if you look at valuation, it's about one-time embedded value. So it is not expensive. The results also we saw in the first quarter were decent. And while we've seen some softness in margins, I mean, especially if you compare it with peers, the performance, but I think overall it was healthy. So the investor can, start buying, and then, you can add on after maybe a couple of weeks and then build your portfolio accordingly.
Okay, and technically, what's your call on LIC, Ashish?
See, LIC found a very important low near the 1,000 level yesterday, and today it is on the upside. So overall, I think it is having a very important price action.
Okay, I think there's something wrong with Ashish's internet there. We'll just try and reconnect him. Ashish, we'll come back to you about LIC, but the stock itself on a year-to-date basis has gained over 22 odd %. So that's the chart movement. And if you look at it on a one-year basis, it's given even better returns. On a one-year basis, it's up over 55 to 60 odd % for LIC. So done fabulously well. Well, we do have Shankar, who writes to us from Mumbai now. He holds 400 shares of Tata Motors, which he's bought at 680. He's sitting on a profit right now of around 1.6 lakhs. And he wants to know what to do, whether he should hold or sell this particular counter. Tata Motors is what he's asking on. Well, he's sitting on a profit at this point, Shaina. So what would you recommend one does with Tata Motors? Is it a portfolio stock that you hold on to? Do you see further upside from these current levels? Or is it important to probably shave off some profits?
No, yes, I think it is a portfolio stock, and if, for a large cap, even the valuations at current levels, though it has performed in terms of stock price, still look decent. If you look at it in price to book, it is 4 times. You look at it on EV by EBITDA, it is about 6 times. The first quarter numbers were very healthy, and we've seen a growth both in JLR volumes, we've seen CV growth, average price realizations also have moved up. On the EV front, there was some softness we saw in the first quarter because FAME 2 was actually discontinued. But now with FAME 3 likely to come in soon, that EV segment also is likely to start showing decent growth going forward. Debt is coming off, debt has been brought down despite investments going up. So I think all things put together for a large cap stock, one should continue to hold in the portfolio. Keep it for the longer term despite having made good gains in the medium term.
Okay, keep it for the longer term. Well, interestingly, it is off those highs that we've seen. The high of Tata Motors was over 1,100 odd rupees. It was 1,180 odd, which was the 52-week high. So from there, it's corrected significantly. But Shaina, just wanted to ask you in the same breath, while we're talking about Tata Motors, M&M is in focus on account of the launch of Thar ROXX. What is your view on that particular counter? Would you be a buyer on M&M? It's a product launch, but nonetheless, how would you, link it to the stock?
A very interesting launch and a very good price point, of about 12 lakhs for for Thar, which has been one of the best sellers for M&M. I think there also the M&M looks decent. It has actually moved up a lot, so valuations are slightly higher. At the same time, I believe even tractors in this year, given the good monsoon, should look better. So if you're an investor in M&M also, I think it is worthwhile to continue to hold M&M also.
Okay, worthwhile to hold M&M at this point. So that's the view coming in. But nonetheless, now we have Arunachal Balaji, who writes to us from Chennai, who holds 2,500 shares of Utkarsh Small Finance, which is bought at around 54 odd rupees. Wants to know what to do, hold or sell. Well, sitting on a loss on that particular counter, 48 odd rupees is what it's currently trading at. Shaina, on this one, Utkarsh Small Finance?
See, the stock after listing, which it had listed at a very good premium, and it was strongly oversubscribed. It was one of the very good listings that they had. At the same time, what I believe is that in terms of valuations, if you see, it is about 1.7 times price to book. Now, in terms of growth, we have seen a bit of softness given that the margins have, the NIMs have become softer because of higher costs. Because of this, the growth has come down, but the valuations are pretty high, especially if you compare it with, let us say, something like a Federal Bank, which is of course larger, much larger, because Utkarsh is a small cap, whereas Federal is a large cap bank. But Federal, both in terms of valuations, also in terms of growth, profitability, it's doing much better. So if you're a long-term investor and you don't want to really trade in stocks much on a regular basis, Utkarsh, if you hold it for the longer term, yeah, once the time correction is over, you could see a decent performance, given the fact that it has got a good hold in the the belts in which they are operating, like the northwest, Uttarakhand, those type of areas. So UP. So I think to that extent, if you're a long-term investor, you can. But in my view, if you're looking at, say, the medium term, it makes more sense to switch to some other bank, like maybe a Federal.
Okay, all right. In the medium term, one could probably look at other banks such as Federal. Ashish is back with us. Well, Ashish, we had a couple of questions with regards to Tata Motors, but first I'm going to ask you on Utkarsh Small Finance. Technically, how would you approach it? Currently at around 48 odd rupees. Do you think that there's further upside?
See, Utkarsh Small Finance Bank has continued to move down from the levels of 55 and trading around 48 or rupees. And since it's not only now, it has been since around May that the stock is in a downtrend, and we are not seeing any kind of a bullish pattern being formed there. So I would advise it's better to be out from Utkarsh Small Finance Bank, and from the NBFC space, maybe something like Bajaj Finance is something that looks much more better, or maybe LIC Housing Finance. These are the stocks where you can diversify into. Better to be out from an underperformer.
Okay, better to be out from an underperformer. Tata Motors, Ashish, I'm just going to get back to that one and ask you before we move on. It's come off from those highs of around 1,180 odd rupees. Do you think that it'll probably track back to those levels? What's your target on Tata Motors?
See, Tata Motors has been in a secular up move. We can clearly see that the stock has strongly outperformed from in a year's perspective, when it was trading around 600 and now almost nearly doubled around 1170 levels. From there, we saw some kind of a profit booking, but it has a very important price action support area near the zone of 1020. So I would advise, if there is already long positions, continue to hold on. We can again see lifetime high levels towards 1200 or possibly higher than that. The trend remains strongly positive for this stock, and it can continue to outperform.
Okay, can continue to outperform. That's on Tata Motors. Now let's get back to a couple of fresh queries that we have. We have Shashank, who writes to us from Mumbai, who has 900 shares of IDFC, which he's bought at an average price of around 72 odd rupees. So he's sitting on a profit of over 30 odd thousand there, and wants to know what to do with this particular counter. IDFC is the one that we're talking about. Ashish, go for it on this one first. The buy price is significantly lower than what the current market price is. But do you think there's further upside on this?
See, IDFC has sharply moved down from, I think, 84 levels and currently trading around 71, if I'm not wrong. And this is a very important zone where the stock is currently trading. So if from here it manages to break above that 73 resistance, which is a very immediate hurdle, then we can expect the stock to reach towards the level of 78. But expect some consolidation to happen over short term. And I would advise to be out from something like this and invest in the large cap banking space, something like an SBI or an HDFC Bank, which looks much more appealing at the current levels than IDFC first.
Okay, and Shaina, what about you on IDFC?
Yeah, I would agree. The current levels, the stock having corrected such a lot, is now sort of consolidating at these levels. First quarter numbers also were a bit disappointing because we saw provisions, going up substantially, which actually affected their profits a bit. But on the operational front, in terms of loan growth, deposit growth, they remain quite good. So I would say keep a stop loss, and you can watch. If it sustains these levels, then yes, it could bounce, and then you could relook at it. But if it corrects even from here, then maybe you should switch to some other banking stock.
Okay, all right. So that's on IDFC. Just watch out for a couple of these stocks. We have Eris Life, which is at the best levels that we've seen in 1 year. We have Fortis, which is at a fresh 52-week high. We have Glenmark as well, which is trading at a yearly high, along with GlaxoSmithKline, which is at a 52-week high as well. So a lot of these stocks within the pharmaceutical space are doing well as the healthcare space. Jamie Chemicals, which came out with numbers recently too, is at a fresh 52-week high. So all of these stocks seeing good amount of traction within the pharmaceutical space. And separately, we had Trent, which came out with, which was a very good set of numbers. The stock was 10% up post numbers, is also at a fresh 52-week high. On the other hand, VIP should come up for you as well. That stock is a bit sluggish today. I think VIP should come up for you. Just about higher by around 1.5%. We'll take a short break, but more queries on the other side. Stay tuned.
करीब 25,000 युवा हर साल विदेश में मेडिकल एजुकेशन के लिए जाते हैं और ऐसे ऐसे देश में जाना पड़ रहा है कभी कभी तो मैं सुनता हूं तो हैरान हो जाता हूं। और इसलिए हमने तय किया है कि अगले 5 साल में मेडिकल लाइन में 75,000 नई सीटें बनाई जाएगी।
Welcome back. Well, you're still with us on Your Stocks on CNBC TV18. We have with us Shaina Mukaddam and Ashish Kyal joining in to answer all of your stock queries. Well, we do have Sahil, who writes to us from Bangalore. He bought around 100 Ola Electric shares after 2 days of listing at around 102 odd rupees. He's a long-term investor, wants to know what to do, whether to hold or sell this particular stock. Well, you know, Shaina, there's not much data on the technicals, so I'm going to leave Ashish out of it. But it's just been a one-way street for Ola Electric post the listing. So what are you recommending to your clients when it comes to this particular counter? And what might your target price be on this one as well, Shaina?
See, well, even I've added a small amount of Ola to my portfolio, given the fact that it is the only EV in autos, pure EV that we have in autos as of now, two-wheelers, and they are moving operationally into profits also. They have got plans, very good plans in my view, for batteries, new high-end batteries, which I think should do well. They would start their production going forward in the next couple of quarters, and they have got good launches in the motorbike space. Of course, scooters, they have got a major market share. So all things put together, I think it's worth a while to hold on, since he's already bought it, hold on to the stock for maybe 2 to 3 years, and let's see how it pans out.
Okay, all right. Well, it's been a stellar listing for Ola Electric. But we do have Rahul now, who writes to us from Mumbai, holds 40 shares of HDFC Bank, which is bought at 1460. Long-term investor, wants to know technical levels to track from a long-term perspective. Right up your alley. Ashish, so over to you on this.
Yes, I just talked about how HDFC Bank can be a better bet compared to the IDFC First. And we can clearly see multiple price action support zone around 1580 levels from where the stock is bouncing back on the upside. I think the stock can reverse higher towards the level of 1780, and from the longer term perspective, we can start moving towards 2000 levels also. So there is a good potential on the upside for the stock. I would recommend to hold and possibly add more at these current levels if you want to, and maintain a stop loss of around 1580 on the downside over short term, expecting a target of around 1740, and eventually the stock should be headed towards 2000.
Okay, so eventually the stock should be headed towards 2000. What about you, Shaina? You know, your view with regards to HDFC, even though, you know, the query was on the technicals, but your entire fundamental perspective.
Yeah, as a long-term investor, it is quite nice to see that the valuations of HDFC are now at pretty attractive levels. It's like just around lower than 3 times price to book, which is which is a level which I would believe it makes sense for long-term investors to get in. They are going in through some small teething issues with the merger, but I think these are all temporary, and these are good times to keep adding it to your portfolio.
Okay, all right. Well, now we have another query. We have Lakshmi, who writes to us from Hyderabad, holds 4,800 shares of Vinati Organics and has been holding it since the IPO in 1992 and wants to know what to do, whether to hold for the long term or book profits. This is a fantastic query that we've got. This is actually the power of compounding and the power of holding on right in front of your screen. Well, Lakshmi is sitting on a fantastic profit. Well, at least technically, Ashish, do you think the stock has enough firepower for her to get to, say, 1 crore in terms of profits? What would your call be on this, Ashish?
See, firstly, I would like to congratulate Lakshmi, because she has been holding out right from the level 3 and riding it all the way on the upside. As you rightly pointed out, that's the power of compounding. And very few traders or investors have that gut feeling of holding on to the stock, and that to such an extent. I would recommend to continue to hold on. There is nothing wrong. The secular bull trend on the stock still looks to be, and the weekly charts are looking good. And any dip from here can be a short-term correction, but the medium to long-term view is still bullish. So I would recommend continue to hold on to the winner that has been the true multi-bagger for her. And possibly we can see the stock crossing again that 2300 mark on the upside and headed towards 2500 as well. So the overall tone remains bullish for the stock. And any short-term correction, it can move towards the level of 1950, but do not worry about the same.
Okay. All right, and what about you, Shaina? Vinati Organics, fantastic investment price there. the power of compounding just on your screen.
Yeah, with such levels of buying, if an investor doesn't need the money and doesn't want to book profits, that is great. You can continue holding on. There's no issue. But at the same time, if you want to book profits, I think this could be a good time to book some profits because valuations are extremely expensive. If you look at it from its price to book, price to, I would say turnover to market cap to turnover is about 8 times, which for a chemical stock, in my view, is high. EV to EBITDA, 25 times FY26. So given the fact that if we saw, as we saw in the first quarter numbers, revenue growth was good. It was about 21%, but we saw an impact on margins, which actually dragged down and the profits were more or less flat. I believe this is the scenario that is likely to continue over the next couple of quarters. So if you are looking to book some profits, I think this time would be a good time to book part profits. Keep the rest for long term.
Okay, all right, Shaina as well as Ashish, thanks very much for joining in and taking us through all of your queries, through all of the queries that we had on your stocks this afternoon. Wishing you a good weekend. That's all the time that we have on the show, but do remember to email us your questions. We'll address them with our experts. Stay tuned. Closing Bell will take you through the last hour of trade for the week. Dr. Deshpande, the crux of our problem is probably our diet. Statistics show that 51% of students eat junk food, 38% of adult Indians eat poorly. So what is wrong with our diet to that extent? Is it the lack of protein? Is it too much carbohydrates? Or is it the incremental amount of junk food that our diet has, turned towards in the past couple of years?
Right. So yes, you're very right. The problem is calorie excess because of abundance of food. The other problem is carbohydrate excess. And the third is protein deficiency. So all these three put together are a recipe for disaster because you are increasing your calories, which is going to make you fat and obese. And you are increasing your carbohydrate intake with all the junk food that is there. And you're also increasing your fat content. And all of this is ultimately going to lead to a lot of insulin resistance, fatty liver, and this is inviting all the metabolic diseases that are associated with obesity. So junk food is very high on processing, and processing is really bad because it can cause a lot of what we call oxidative damage.
What is a good source of vegetarian protein according to you, Dr. Deshpande, and how much protein should one consume?
Yeah, so typically if you're really very active, the formula is that you should get 1 gram per kg of your body weight. But if you're not very physically active, if you're much older, you can go to 0.8 grams per kg body weight. If you talk about vegetarian sources, there is no complete protein. So you will have to eat multiple sources of protein because all the amino acids are not contained in any single food. So vegetarian protein is basically not a complete protein. So you'll have to make a mix and match of different things like cereals, sprouts, maybe paneer, dairy, basically. So mushrooms. So these are all the ways that you can get proteins, but not one of them is a complete protein. So one has to be very vigilant. It's not a way. You have to be really careful where your protein is coming from, and maybe meet up with a dietitian to actually find out where the protein is coming from in your food. So it's not very easy to get all the protein that you need from vegetarian sources. But mushrooms, dairy, all these are very few sources are there of protein. Sprouts do have protein, but they also have a lot of carbs, which people don't understand. Everyone thinks that sprouts is full of proteins. It has protein, but it also has a lot of carbs. And ultimately, if you had to get all your protein from the natural vegetarian sources, your calorie count is going to increase exponentially. So, so that is what you have to be careful about.
बांग्लादेश में जो कुछ भी हुआ है उसको लेकर पड़ोसी देश के नाते चिंता होना मैं इसको समझ सकता हूं। मैं आशा करता हूं कि वहां पर हालात जल्द ही सामान्य होंगे। खास करके 140 करोड़ देशवासियों की चिंता कि वहां हिंदू, वहां के अल्पसंख्यक, उस समुदाय की सुरक्षा सुनिश्चित हो। भारत हमेशा चाहता है कि हमारे पड़ोसी देश सुख और शांति के मार्ग पर चले। शांति के प्रति हमारा कमिटमेंट है, हमारे संस्कार है। हम आने वाले दिनों में बांग्लादेश की विकास यात्रा में
Taiwanese index, as you can see, is up over 2%.
The immediate resistance which the Bank Nifty needs to take out is 50,830.
The key highlight is that the automotive segment is actually almost EBITDA break-even.
This becomes more mainstream for going out with friends, families, even on a normal adventure trip.
The Nifty, which is at 25,313.
We keep talking about the overall improving fundamentals. There could be blips in the interim.
Today in the 20th year, we are talking about the $100 billion market cap.
The Nifty high today was 24,400. Compared to that, we've given up about 150 points from the session highs.
The beauty of this is that we have really put our heart behind making sure a single gives what a biker needs.
Vedanta is looking to sell closer on 11 crore shares in Hindustan Zinc.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
All right, well, that's the day so far. And I think for the first time in at least a fortnight, we can say that the market is really looking robust, looking healthy. And it is, I mean, there was one nervous bout early on when the market kind of gave up 100, 150 points from the day's high. But since then, it's kind of recovered. It's moved back to the high point of the day. So it's looking really good. This is Closing Bell. We're coming to you live from the CNBC TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Surabhi here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. And looks like we're going to close this week on a positive note because now the Nifty mid-cap index are all up about 0.5% for the week. Remarkable intraday pullback.
Oh, absolutely. And I mean, it's just been up and away because the recovery was looking a little wobbly in the first half, but then the bulls have taken off. And I think we've got several engines firing. So right now it's a bit of a turbocharged street with banks, with IT and so much more going on.
Well, that's right. You know, and as we speak, we're nearly at the 20 DMA, and y'all were talking about that nervous moment earlier today. Well, that was the moment to buy the dip, right? Because from being up more than 250 points, the Nifty was up only around 80, 85 points odd. And if that dip was bought, well, it would be good times. As we speak, we're at the 20 DMA. The bulls actually would have preferred a close at 230 instead of 330 because it was, you know, we're closing bang in line at those resistance levels. So let's see how the next 60 minutes goes.
I don't know, absolutely. This is, you know, as we were discussing in the morning, really negative sentiment, near-term sentiment had really soured quite a bit. And then a complete 180 about face as far as global markets go. And this is, I mean, essentially that playing out. I think flows will be interesting to see because FIIs have been aggressive sellers, locals have been aggressive buyers. So will that start to turn a little bit? I think that'll be something to watch. I mean, locals, of course, have been buyers and perhaps they'll be buyers today as well. But what foreigners are doing on a day like this should be interesting. Now, Nifty's taken out some resistance levels on the upside. The graphics will come up. So the first resistance it's taken out is 24,472, which is the swing high on the 12th of August. That was level 1 we put out in the morning. And the second was the 20-day moving average as of yesterday's close. Day before yesterday's close was 24,490. We are above both those, actually around the second one, which is the 20-day. But, I mean, at the day's high, we were about 24,500. The next kind of the next target in that sense, if you manage to close above this and market gains momentum, is going to be the lower end of the gap area, which is 24,686. The gap area is basically nothing but that around the 2nd, 3rd of August, when global markets cratered, there was a big gap which was created, and the upper end is 24,686. So that's still about 160, 170 points away from here. Big move on the Nifty Bank, about 1.75%, but it has still not sort of come back to that August 12th swing high, and that is 58.30 on the Nifty Bank, because of course the Nifty Bank was trading practically at the lows while the Nifty has started to recover a little bit. Mid-cap and small-cap indices are higher by about 1.7, 1.8% each. Market breadth on your screen, almost 3:1 advances to decline ratio. IT as a sector is doing very well, real estate is doing very well, and private banks. These are the 3 sectoral gainers which are up the most as we get into the last hour this Friday afternoon. Rima.
Well, in frontline IT, you've got names like Wipro, Tech Mahindra up 3.5%. Then you've got an LTI, Mindtree, TCS with about a 2.5%, 3% gain. There are just 3 or 4 Nifty stocks which are in the red. And 3 of them belong to the pharmaceutical pack. So you've got a Divi's Laboratory, Dr. Reddy's and Sun Pharma. And again, the cuts are not meaningful there. The most is Divi's Lab, which is down close to about 0.6%. So the advanced decline ratio is strong at about 5 stocks gaining for 2 in the red. But frontline, large caps are all largely in the green. And it's good to see the mid-cap and banking stocks also move in step.
Banking stocks are moving high. I mean, the whole market, and look at what's happening on the mid-cap screen, right? The index is outperforming the large caps. 1.7% now up on the mid-cap index. And look at the stocks go. Ola Electric, stock of the day, 20% on Ola Electric and counting. So that's the big one. We'll just pull up Ola for you. Stocks at 133. Remember, we were discussing this in the morning. Just to remind you, the listing price or the issue price was 76 rupees. The stock is at 133 right now. We are talking IT. Some of the smaller IT companies are having such a good run. Look at Memphis, look at Zensar, look at Birlasoft. The entire mid-cap IT side of the market also is up and away. Look at a company like Uflex. The stock corrected after the numbers, and today it's up 14%. I mean, that's the nature of the rebound and the nature of buying in the mid-cap arena. Ethos, 8% higher. RHI Magnesita, Nigel's been telling us about the operating performance, which has been pretty good. That stock's been flying right from the morning. And even other names as Nippon Life, 6%, CDSL. So some of the side financials, aside from the main banks, some of the tertiary financial stocks are also having a very, very good session. So this is a weekend party. Looks like it's very much on, Nigel.
Right, and even it's the sentiment is such that even cement companies that actually have seen quite a lot of selling pressure because prices have been moved up. There is some buzz that maybe, in fact, there'll be a price increase that could possibly be pushed through. And for the time being, the street is lapping out to that. Another day, the street said it's monsoons, it's difficult to push through a price increase. But for the time being, just take a look at some of those intraday charts. You have Ramco that's moved to the high point of the day, JK Cement as well. Even if there's a price increase that's pushed through, you still have more than a month of monsoons. So, we'll have to see absorption. I'm not sure whether or not it will be absorbed. So just keep that in mind. But it's that sort of a day when any kind of good news is just being grabbed. Well, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, at the 20-day MA is what the Nifty is at. And the Nifty Bank is a couple of 100 points away from those resistance levels that we saw last week, 50,700, 50,800.
So, Nigel, 2 things. One, I think, the 50% retracement level, which is 24,485, is just marginally clear. But looking at the 1 hour chart, I think there's a good chance that we will see this extension to about 24,600, 630, which is the 61.8% retracement area. So in that sense, I think long should be maintained. I was actually, very positive on IT and worried about the banking index, but the banking index is also reversed. In the short term, I think, it's kind of managed to hold 49,700, 750 zones. Now, the first target on the upside for the Bank Nifty is about 50,775 to about 50,820. I think once this 40, 45, 50 point band is cleared, then we'll look at higher levels. So in that sense, maintain a positive bias. On the stock side, I have a buy on OFSS. That's a buy with a stop at about 10,890. Look for targets of 11,170 or thereabouts, maybe even higher levels eventually. But that's the target we'll begin with. And then Ashok Leyland is a buy with a stop at 250 for targets of 263.
Thank you very much for that. Let's talk about Glenmark Pharma, up 5%, steady Q1 performance. This stock is now up 80% since the start of the year. Ekta joins in with the numbers, the analysis, and what the management had to say in the conference call. Ekta.
Well, the revenue was up around 8% this quarter for Glenmark. Margins came in line at around 18%. India did well. US was better than estimates at $93 million as well. The call as well really set the tone for the stock because it was started pre-market. So they did say that they have a net cash of around 359 crores on the books. They've guided for 19% margins. The key driver for margins will be the India business, the drug Ryaltris, respiratory products, lower R&D expenses. They expect India to grow around 10 to 15%. US remains challenging. Second half will see a US recovery. They're looking for partnerships in certain molecules that they have. They are looking for a meeting with the US FDA when it comes to their Monroe facility, and that's likely in September. They've completed remediation for their Goa facility. The focus will also be on the Buddy site. Not as much. That's reduced for Glenmark actually, because they are saying that they could emphasize or they could be looking at Europe becoming an important market for them. US is 24% of sales. Glenn Saldana did indicate that by the end of the year, Europe could be equal to US sales for them. Ryaltris, which is the respiratory drug, they made around $20 million in the quarter. They could make around $80 million for the entire year. Liraglutide is a GLP-1 inhibitor drug, which is basically a part of the weight loss category, but you have to take the injections on a daily basis as compared to semaglutide. They've launched Liraglutide in the Indian market, and they've said that it's a good product to have in their portfolio, but eventually drugs such as semaglutide, which are not a weekly injection, it's once a week injection or thereabout, will probably take over in terms of the market.
Thank you very much for that. Prakash Diwan is now with us. Prakash, lots of buying seen in pharmaceutical names ever since the Q1 numbers. Even Q4 was strong. The Nifty Pharma index is up 31% year to date, and in that Glenmark Pharma is up 80%, and it's saying all the right things. Some recovery, hopeful of a recovery in the US in the second half, looking beyond US to Europe, etc. Which pharma stock do you like the best at current levels?
Good afternoon, Rima. So you're absolutely right. I think Pharma saw that flight to safety, if you will, sometime back, and that's kind of paid off. Here, the under ownership led to this front-ended gains in most names. If you look at Lupin, Cipla, even Sun for that matter, and of course Glenmark, we've seen a major part of that buying resulting into volume and price action. But going forward, it's going to be commentary like what Glenmark shared. That's going to be the anvil for any future allocations going up. You look at Marksons, smaller company, same kind of trend, has done well on all the promises that it made, has guided for even better kind of quarters ahead. So I think very clearly there will be opportunities there. But remember, Pharma, Rima, as a space is fairly long. The list is long, and you'll have very different companies doing different things at different points in time. And that's exactly where the market will kind of recognize opportunities on a more stock-specific basis. But I would still back Marksons Pharma from that perspective. I really like what they've been sounding out. Natco has done some amazing numbers. We've seen that turnaround that happened after almost a gap of 18 months. After 6 quarters, we actually saw there was a very clear trend in revenue and profit growth, and that could continue because there are a couple of more triggers that are still, in the works. And I would believe these smaller companies, which are available at slightly more comfortable valuation, is what I would look at. But then, as I said, there has been a bit of a run-up, which makes some of these things kind of fairly priced. But on dips, and the market's giving you ample of those, on those days, you probably add some of these names which are from a PE multiple or a EV by EBITDA multiple also fairly decently available.
Okay, all right. Hi, Prakash. Good afternoon and good to see you. And I wanted to comment on cement companies. We had Birla Corp as well today. The stock was doing well. I think a couple of months ago it was at 1,800 rupees. Today it's at around 1,250 rupees. Management said the first half of the year is going to be challenging. And now there is some buzz that maybe in South India, East India, there'll be a price increase pushed through. Would you buy into that news or would you wait by? Because there's still plenty of uncertainty, consolidation, volume push, pricing is weak. How would you approach it? Anything you like?
So, good afternoon, Nigel. I did listen into your conversation with Mr. Saraugi of Birla Corp, and it's very clear while they do talk about the entire FY25 leveling out to be a fairly decent year in terms of the EBITDA margins. It's not very imminent as yet, and it could very well happen that probably Q2 might not be as bad as what we thought, or might not be as good as what some of them are anticipating. But the entire pickup could extend beyond Q3 as well. So if that were to happen, you will probably see a lot of these companies starting to look expensive. So I think there are pockets of opportunities given the M&A wave that's kind of it's soft and underlying, but it's there. So any smaller companies, mid-sized companies are what you look at. The likes of Birla Corp probably would not fit into an acquisition, but they would probably look at some acquisition at some point. But I know he spoke about organic growth being the focus and not inorganic. But I would stay away from the cement bag. If I were to stick my neck out and buy something, it would be an Ambuja. And why I say so? Because the kind of value addition that will start happening once they've digested some of the new acquisitions, and internally the rationalization that's happening on logistics and a lot of the processes, that is something where they'll probably be able to make a difference. So you saw that happen in Ultratech in the first couple of acquisitions. I think the template is the same. It's just a matter of time before all of those things start rolling out. Ambuja does look expensive from a relative perspective from what we've seen 6 months back. But I think if it were to be available at softer valuations, I would definitely like to add something which is much more resilient.
Okay, so that's a word on some of the cement names there. By the way, DLF is surging in trade, almost 6% higher. So let's put the spotlight on this one. We've got positive brokerage comments coming in from one of the foreign brokers. I think this is a JP Morgan call, and it's a pretty optimistic one on DLF. Tell us more about it, Sonal.
Well, yes, they've gone ahead. They've increased the target price on the stock to 1,000 rupees and have an overweight rating. What they like is how the balance sheet of the company is improving, and they think it would reach that $1 billion cash flow mark at the group level in FY25 itself. And this is due to strong sales cycle that the company has been seeing, and also because of compounding of free cash flows as the rental business. The rental business has also been continuously seeing growth. This opens up significant strategic flexibility at group level on acquisition, something that the brokerage thinks companies can do going forward. They see an upside on pre-sales, margins and cash flows as well in FY25. Now do remember they've already achieved 38% of the FY25 sales guidance. Their operating cash flows were up 100% on a YY basis. This comes in after quarters of high debt the company has been facing. So this is a positive. They like the balance sheet strength and they expect that to continue going forward.
Okay, all right. Got it, Sonal. Thanks very much. Prakash, hi, good afternoon. So I don't know, do you share that level of optimism on cash flows and the road ahead for DLF? Of course, they're selling all of those houses. There are plenty of takers. But what about stock, the valuations, and what's left on the table?
Good afternoon, Sanvi. So this is very similar to the exuberance we've seen in some of the other businesses where order books start making you look, things look very promising. And that kind of sets you up for a fairly high risk vulnerability in case things don't happen. Execution is always a challenge. If you really ask me in real estate, they're going to be very, bottom-up stock selection that would pay off. I don't see as a trend anything favoring most other companies at the same point in time. So if you look at a Century Text, you probably have a very staid, resilient kind of a growth chart there. If you want to look at an NCR play or probably a Delhi play, there's a company called TARC, T-A-R-C, which is an offshoot of the erstwhile Anant Raj. They've done very well. The stock has done very well, but I think there's still lots to happen in terms of them monetizing their land bank, and which is primarily in the Delhi region. It's not Noida, it's not Gurugram, it's not some of the smaller pockets on the outskirts, but it is proper Delhi, and they've been able to convert that at rates which are fairly lucrative. So you will see these kind of one-offs happen on a bottom-up play come into the picture. But DLF, I'm not too enthused. Of course, it's done very well. The stock, in fact, you will need all this cash flows and earnings to justify the move that the stock has seen. So stay put for that. Let that have a time correction, and then probably you could look at it. Don't be in a hurry to buy.
Another one, there's Max, right? Max Estates, which has also done very, very well. But it's good to see DLF moving up because, investors in some of the other smaller sort of real estate companies in that area would look at DLF because DLF's market cap is this and this market cap is this, and you know how it works. At least at some level, you kind of sort of look at the leader and what it is trading at in terms of various matrices. So yeah, I mean DLF is doing well in terms of where it is at right now. So I mean the market's back up above 24,500, so it's looking very, very good, and it's sort of absolutely a great move. MCX is up about 6% right now. MCX is, it's a new high today, 46.50 or so on MCX coming through. Keytex went up 20% on, I think numbers came in the closing hour day before yesterday. It was up 20, it's up 15 today. So, big 35% gains in 2 sessions flat. Policy Bazaar continues to do very well. It's a new all-time high on Policy Bazaar as well, 1660, 1670 on that one. Piramal Enterprises sold off 10% on Wednesday. It is coming back about 6% right now. These are all large moves. There is AB Capital, which is up 6%. There is, Nippon India, the mutual fund company, which is up 6.5%. Some of these names that we've not highlighted. PGEL Electroplast, the EMS company, 9% their gains there. There is Barbecue Nation, which is seeing a big pop. I mean, Jubilant Food moved quite a bit day before yesterday. But today it is Barbecue, which is coming up in a pretty sort of nice fashion. And of course, there is Ola Electric, which continues to sort of, defy all our odds, 20% again now, which basically means that from the IPO price is up some 70%. So it's got to really count for an IPO that size, $4 billion company moving like this is quite, really quite something in that sense. Any thoughts, Prakash? I did ask you about Ola. I don't know if you've developed any fresh thoughts or insights into this one.
No, the only thought that would end up crystallizing with Ola is a FOMO. But then of course, I still would refrain from adding it, unless there is a very compelling proposition in terms of, the profitability getting much more visible. The incremental news flow has been fairly positive. And if nobody's coming to the market to sell off, you usually have, the float starts sticking in. And as you rightly said, for a size of this kind and a response that it got and the kind of post-IPO behavior is purely, liquidity driven, and liquidity can make things look very different, Prashant. So, I am one of those patient investors, like to sit on value, wait for it, and I don't have to do everything every day, right? So there's lots of opportunity that I'm sure we'll get once, things subside. But interestingly, what's happening is markets making a very clear, giving a very clear indication that anything that has been sold off because of the mood in the market on a particular day, which...
Yeah, I think we lost the line there. Prakash, but we got it. We got the point from you. Appreciate you joining in, and thank you very much for coming on with some of that perspective. We'll take a quick break here. First on the show, we are back with Ronak Onkar on the other side for more on markets. Stay tuned.
हमेशा हमारा शुभचिंतन ही रहेगा, क्योंकि हम मानव जात की भलाई सोचने वाले लोग हैं।
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
हमारा जो मध्यम वर्गीय परिवार है, मध्यम वर्गीय परिवार को क्वालिटी ऑफ लाइफ वो स्वाभाविक उसकी अपेक्षा रहती है। वो देश के लिए बहुत देता है, तो देश का भी दायित्व है कि उसकी जो क्वालिटी ऑफ लाइफ पे जो उसकी अपेक्षाएं हैं, सरकार की कठिनाइयों से मुक्ति की उसकी जो अपेक्षाएं हैं, उसको पूर्ण करने के लिए हम निरंतर प्रयास करते हैं। और मैंने तो सपना देखा है कि 2047 जब विकसित भारत का सपना होगा तो उसकी एक इकाई ये भी होगी कि सामान्य मानव के जीवन में सरकार की दखलें कम हो, जहां सरकार की जरूरत हो वहां अभाव न हो, और जहां सरकार की बेकारण प्रभाव भी न हो, इस प्रकार की व्यवस्था पर हम प्रतिबद्ध हैं।
So how can a patient distinguish between a migraine or any other type of headache? And there are many types of headaches, such as tension headaches or cluster headaches, or brought on by other conditions as well.
Yes, the common headaches with which migraine can get confused are what is known as tension headaches, the sinusitis-related headaches, and much rarer are what you mentioned, cluster headache and new daily persistent headaches. Now, migraine is easy to recognize if you know the features, because as you have already mentioned, these are recurrent headaches which are associated with sometimes nausea, vomiting, inability to tolerate light, sound, sometimes smells, and they are highly disabling. The patient may not be able to function for almost 24 hours or even more. And there is a positive family history of not the same severity, but some recurrent headaches. Now, as against this, when you look at the other headaches, tension headache, they are more or less what we talk about them as featureless headaches. They are not associated with nausea, vomiting, disability, and they don't have trigger links so clear-cut as in migraine. Okay. And then when you come to cluster headaches, they are more always on the same side, accompanied by watering.
All right, welcome back. 370 points higher on the Nifty. We're at about 24,500 plus, and it is looking pretty solid. Ronak Onkar is with us, co-fund manager of equity and head of research at PPFAS Mutual Fund. And of course, PPFAS Mutual Fund is are the calm guys, are the stable guys, and fantastic return guys. Ronak, I hope I didn't overstate things. I don't think I have. But what are you guys doing? I mean, it's looking once again like the storm has passed, calm has returned to markets, and we are back on a slightly upward-looking trajectory overall. Although I was still looking at the NSE 500 group of companies and seeing from the 31st of July till now, you know, what is the lay of the 500 stocks, how many are up, how many are down, and I mean, there are lots of stocks down 15-20% still. Lemon Tree is right there on the top of the list. I mean, have you found any of these sort of stocks which have fallen in this global sell-off that you found attractive?
Hi, Prashant. Thank you for inviting me. So I don't think you oversaid it, but I think the return point, which probably will have to struggle for a while, because since we spoke last time, a bit of cash has now built up in the portfolio as well. We are at about 16% cash. And your observation is correct. There are many companies in the Nifty 500 which have fallen by 15-20%, and that might seem like a substantial drop. But if you see a little bit, zoom out a little bit and see over a period of 3 years or 4 years, they have gone up 200-300%. So a 10-20% drop may not significantly change the valuation of that business, whereas the business has not grown by that multiple. So you have to be very cautious when you look at some of these falls, that they might feel like a significant drop in percentage terms on an absolute basis, but actually the business should also catch up to that level, so the valuations make sense over a period of time.
Ronak, hi. Afternoon, Rima here. Last time you told us that you're cautious in the capital markets business, they're cyclical, and you've trimmed exposure to some of these capital market plays. So in the last 2 months, can you tell us how your portfolio has changed?
So not much has changed, Rima. So we have been cautious about the capital markets businesses, and we have been trimming those positions. And we have been adding the companies where we think the valuations are reasonable, which is right now mostly in private sector banks.
Okay, you're adding positions in private sector banks. Hi, Ronak. So the look is new. It's a good new look. So the portfolio, you're saying the difference is that you're adding banks. Anything else? What else is new in the portfolio in the last 1 month?
Sadly, nothing new in the portfolio. It's been the same portfolio. The little bit of cash that is now added, which was somewhere about 15%, is now 16%.
That. I mean, I know you guys have been probably running the highest cash levels in the industry because you took a cautious view and valuations were shooting through the roof. But incrementally, what is it, apart from private sector frontline banks, where you're seeing some sensibility emerge, where perhaps you've started doing the math, started doing the homework in terms of potential ideas? Obviously, I'm not asking for stock names here, but areas where you see some meaningful value.
So I'll tell you, there are a lot of ideas that we internally discuss and the sectors that we look at. The only problem over there is most of these sectors have also been bid up in the last run-up. So even if the companies that we own, say IT services businesses or some capital market stocks or even the banks that we own, even those valuations were not as comfortable as they were earlier. So where we are adding a little bit, that does not mean that these are extremely attractive valuations, but a little bit reasonable to accumulate. But rest of the companies in the portfolio, I would say, remain in a stable valuation to a little bit overrated valuation, but it's not a sell-off valuation. You have to be cautious about the business as well. And we are seeing the business growth. So even in our international stocks, which is now about 13% of the portfolio, we have seen stable earnings growth coming back to some of these larger companies as well. So IT services, tech has been doing well. We keep track of that. We are also tracking companies in the banking side where we already own bulk of them. So it's mostly about balancing the positions in the portfolio as to how much portfolio allocation we want to do. Rest of it is looking very, very difficult to find good ideas for right now.
All right. Hi, Ronak. When you talk about international stocks, you're talking about the FANG stocks, right? Which are 13% of your total mix.
Yes.
And HDFC Bank continues to be your top-weighted stock at around 8%?
It is still the largest position that we own, followed by a couple of PSUs that we own.
All right. And PSUs would be, I think, Power Grid and Coal India are some of the top-weighted stocks, right?
Yes.
All right. So HDFC Bank continues to remain top-weighted and you continue to remain positive on PSUs like Power Grid as well as Coal India. Ronak, I wanted to ask you about the tech space. You seem to have done a bit of a reshuffle, at least as per what I have in the last disclosed numbers. OFSS, if I'm not mistaken, it's been a 3 to 4 bagger for y'all. But I think you'll have completely exited out there. You could confirm that. And what you'll have done is you'll have gone and added the big boy, Infosys, on the base that was maybe a couple of months ago. You'll have increased that position by around 80%. Tell us more how you're reading tech.
Yeah, so in IT services, the big challenge with product companies like OFSS is that the growth comes in a very lumpy manner. So for example, a company like a software product business like OFSS, if it has to grow, it has to license new customers, and suddenly you will see a spurt of profitability and spurt of revenue growth. That has actually happened in that business, whereas the valuations have been taken to a level where even the company's past valuations have not seen that kind of growth. So the business model has fundamentally changed, but the valuations have now remarkably changed for that business. On the other hand, if you see IT services companies, the large cap ones which are more stable, they have shown a little bit of change in sentiment. As we have seen, tech spending again has come back in the customer countries where they operate in. These companies are now showing a little bit of growth. But we have to also be cautious as to how much you pay for this growth. So at the time when we bought a couple of months back, some of the larger cap companies were looking reasonable. They have also now inched up in valuation since that point in time.
Ronak, speaking of technology, let's talk about that 13% part of your portfolio, which is US tech. There's a lot going on, right? You own Alphabet. That's one of your big holdings. And just, I think 2 days back, we had that Department of Justice ruling coming in. Now they're talking about breaking up Google because of antitrust issues and all of that. So I don't know, I mean, whether some of this, and this is not noise, this is actually real news now, at least the Google case, whether how you're interpreting this. And in general, tech earnings in the season gone by, we had a bit of a sell-off coming in as well. But for your portfolios, and since you're still invested, what are the trends you're forecasting and what's the earnings growth that you still think will come through?
So the earnings growth so far has been very positive, and it's actually surprising to see companies of this size can also generate that kind of earnings growth. And that's because of the nature of the business model, where it can be global, it can scale without too much of reinvestment in technology. And on the other hand, there are other segments that these companies can reinvest in through the existing cash flow of some other business. So Google, like you mentioned, can take the cash flow that they earn from the advertising business and reinvest in the growth of cloud computing. Same thing we have seen with Amazon, same thing we have seen with Microsoft as well. So that reinvestment of capital at a high rate of return is something that we find very attractive in some of these companies. But of course, not all of them are very cheap and reasonable at the moment. And we have to be cautious even in them. Regarding the Justice Department's ruling, I think we will wait for the actual result to come out. But it's actually well known that Google has a very strong competitive position across many countries that they operate in. And they are a large market share in search advertising. And it sometimes might seem like it's an anti-competitive behavior. I think we should wait for the actual ruling to happen. Regardless of the fact the business economics does not change, the cash flow generation ability of the business does not change. It just might be a different organization. But I don't want to speculate. We'll see how the results actually come out.
Got that. By the way, you own Apple as well, right? In that
we
tech
used
portfolio?
to own a few years back, but we sold too early.
Too early.
But Berkshire's also sold now, so I guess you are ahead of them. Would you want to see it that way? You're ahead of Warren Buffett and team.
Too far
ahead. Nice way to go. Okay. By the way, Ronak, I think the Election Commission press conference is starting now to announce dates for the 4 state elections, which are about to kick off later this month. I think that's the Chief Election Commissioner announcing the dates. We'll sort of have the dates flash up on your screen, and maybe we can cut to it for a bit. But Ronak, tell us what's happening with Ola. I'm sure you would have sort of met them pre-IPO rounds. I mean, I don't think you put any money in before, I mean, the anchor, or I don't think you did. But what do you make of the business? I mean, 70% on top of the issue price.
So pricing of the stock apart, I think some of these companies are very interesting to track because they might become potential competitors in the future to other companies which are doing very well today. So we are seeing a great transition in energy consumption right now from your fossil fuels to battery operated technologies. And I think that wave is very strong. And we have seen China exceed all the other countries in the world in terms of providing this manufacturing capacity or even having more number of EV vehicles on the road. That trend, if it has to materialize in India as well, we will need some strong domestic champions. So it can be this company, it can be several more companies which are coming up, or the entire value chain will come up in India. We don't know. But we are not going to invest at a time when it's like a venture-backed business. We would like to invest in more stable cash flow generating companies. And that's the style choice that we have made. It's nothing to do with the companies that are there out there today. And it's okay to miss the initial part of the rally. But it's interesting to see that there are companies who are investing capital in India to build that ecosystem of electrification, which is taking China and other parts of the world by storm right now.
All right, Ronak, we appreciate you joining in and giving us your take on various sectors, themes, stocks as well, the way you'll have reshuffled things, and still holding on to cash of around 16%. That's a large quantum. Let's see the next time we chat whether or not there is some deployment that does take place. But the markets are at the high point of the day. At the high point of the day as we speak, we're holding over the 20 DMA. It's been a good trading session. Nimesh joins us to help us out with the flows picture. Nimesh, good session, good Friday, good end to the week.
Absolutely. And today it looks like a clear risk on rally, Nigel. Backed by very large FI buying and some aggressive short covering as well. Remember, as far as flows are concerned, I've been saying for the last few days that at least one large FI desk was having a very large sellers for the last many days. Well, that has tapered off a bit. At the same time, today there is an aggressive buying at another leading FI desk, and largely that flow is into the mid-cap names. That probably explains that the mid-cap index is up almost 2% and big rally in a lot of mid-cap stocks. And also, even though it's a long weekend for us, the volumes are still pretty okay. There is not like, the DIs are not participating to that extent. So today's rally is backed by good volumes as well. So, that's a good sign to me that this is backed by very large FI buying, especially in the mid-cap stocks. From a sector point of view, IT and select financial is where you've seen aggressive short covering. But from a cash deployment, it's basically the defensive names which have seen some buying interest back. So while there is a momentum backed by flows, but the domestic mutual fund seems to be quite bullish, or maybe quite shifting towards the defensive names, whether it's Pharma, whether it's consumer names, or for that matter, even IT. So that explains the kind of move from a flow perspective. But for the first time in many days now, there is aggressive buying from the larger FIs in the broader market stocks.
Well, that's good to hear, Nimesh. So pretty good going out there. And the broader markets participating makes a lot of portfolios feeling good as well. Tell us about individual stocks. What are you picking up?
So in terms of individual names, the first stock is Electronic Marts India, EMI. There's a large block in the money. The stock is recovered from that block levels, but 8% equity got changed hands. I understand that the promoter entry was a likely seller in today's block. And in terms of buyers, a couple of domestic mutual funds and a very large long-only fund was a buyer in today's block. So the disclosures will be quite interesting in EMI today. The second name is Nestle. After a long time, some bit of interest seems to be back in Nestle as well. So there is buying interest from larger FIs. So expect high delivery volumes, and looks like some bit of buying is back in Nestle at these levels. The third stock is Safari Industries. Again, stock has been consolidating off late. I've seen a big move after the earnings. But there is a block bid been offered by an institutional holder, and looks like the clean out trade can happen very soon in Safari Industries. And the last is DLF. Sonal spoke about the JP Morgan note, but in general there are buy flows from larger FIs. So there is delivery based buying happening in DLF at these levels, and of course there was a JP Morgan upgrade as well. So I think that explains the big move in DLF today.
Nimesh, Rima was wondering, you mentioned long weekend. Are you telling us something? Monday is a... or are you off?
No. I mean, because yesterday was a holiday. There are a lot of people who are still enjoying a long weekend, not like us who are working.
I'm just pulling your leg. Nimesh, on Ola, have you picked up? I mean, where is the buying coming from? Any on the institutional side?
Well, Prashant, from a flow perspective, I do know that some large HNIs bought on the first day of the listing, which was around 85, 86. That's when they bought very aggressively, because at that price it was quoting at $3.5 billion, whereas in the private market the valuation was around $5.5 billion. With this move today, around 130, 135, it is actually crossing that level of $5.5 billion of market cap. So I'm not too sure whether there are large institutional buyers. Yes, there was an HSBC initiating report today. But from a HNI perspective, it is more about buying on the first and second of the listing and not at this price.
All right, we'll leave it there. Thank you very much, Nimesh, for that. And so that's essentially a list of stocks to watch out for and some intel on what's happening with Ola. We'll take a quick commercial break here. We are going to come back in just a bit. We'll tell you some short-term trading ideas with our technical experts. And there is, 20 minutes to go for close. Stay tuned.
Running nose, and they don't have trigger links too. So it is not difficult. And the commonest mistake which patients make on their own is to think that all recurrent headaches are due to a refractive error in the eye, and they go for an eye check to the ophthalmologist. They may have a small number, but they have to remember that if there are trigger-linked headaches, that eye problem is not the cause of their headache, and they have to seek correct medical opinion.
Okay.
भारत के लिए गोल्डन एरा है। वैश्विक परिस्थितियों के तुलना में भी देखें, ये गोल्डन एरा है। ये हमारा स्वर्णिम कालखंड है। मेरे प्यारे देशवासियों, ये अवसर हमें जाने नहीं देना है। ये मौका हमें जाने नहीं देना चाहिए। और इसी मौके को पकड़ करके अपने सपने और संकल्पों को लेकर के चल पड़ेंगे तो हम देश की स्वर्णिम भारत की जो अपेक्षा और हमें विकसित भारत का 2047 का लक्ष्य हम पूरा करके रहेंगे।
Global funds category, international funds which are investing in, whether it's US equities or maybe you even have some greater China funds and whatnot. Now here as well, this category was first taxed at our slab rate, but now it's going to be taxed at 12.5% if the holding period is 2 years or longer. So Mohit, this sounds great. But, correct me if I'm wrong, a lot of funds were not taking any fresh money because of certain limits being hit already.
Yeah.
So is it even possible to invest right now?
It is. Quite a number of funds are accepting fresh investments. Few are accepting only as SIPs and few are open for both lump sum purchases and SIPs. It depends on the contours of the fund. Funds which are purely ETF based, those are the ones where the limit has got busted and those are the ones which have stopped. But funds which are actively managing their allocations, perhaps directly investing into stocks or international stocks directly, those are the ones which are typically open. There is a whole list of funds, but I think category as a whole, Surbhi, has got a huge impetus. And needless to say, for an Indian investor, it's absolutely must to have a global diversification. Given the profile of our currency, which has been depreciating against the US dollar for almost last 20 years, if you see the track record, the depreciation has been on an annualized rate around 3 to 3.5%. If you want to counter that, if you want to have a real hedge against the country risk or the sovereign risk, or you just want to create a corpus offshore for your children's education or for anything, let's say, I think this is a great avenue available to retail investors, that you go out and invest in international funds. Again, this category got completely out of flavor last year when the taxation was changed, and now it's come back into reckoning with full power and full force. And I think all investors should definitely look at diversifying abroad.
Your favorite funds here?
Look, many. Honestly, I like the Edelweiss US Technology Fund. I like the DSP Global Innovation Fund. These are all active ones. But on the passive side, I like the NASDAQ fund of funds, which currently the open one is only Motilal, I think.
Welcome back. 24,560 on the Nifty. Now it's a 400-point rally, and the Sensex rally has extended itself to a 1,400-point gain. In terms of these platform companies, new age tech companies, PB Fintech is up 7.5%. Brainbees Solution, the company which owns FirstCry, is up another 5.5%. Paytm is seeing some buying. Zomato too is up close to about 2 to 3%. And now some PSUs are also coming into the party. So pull up, I think BEL. BEL stock has spiked up. BHEL is another big mover. But let's find out some trades that you can take in the last 10 minutes, which you can reverse on Monday. Mitesh is now with us for those calls. Mitesh.
So I have a BTST on ITC. Keep a stop at 498. Look for targets of around 512. And Nippon Asset Management India, that's NAM India. I think that's making a fresh swing high. That's a buy with a stop at 670 for targets of 720.
Thank you very much for that. Let's talk about IT. That's the big sectoral winner for this week. The IT index is now up close to about 4.5%. But remember, even NASDAQ, the mother market there, the technology stocks there, have rallied 5.5% this week. And they've reversed the fall that started from 1st of August. So now NASDAQ is flat on a month-to-date basis. Now, today I spoke to a few analysts, like what's driving the up move. They said it's largely the better than expected US economic data. The fear was recession, and therefore Indian IT stocks, which get about 70% of their revenues from US, will get affected. But now the positive economic data is suggesting that the outlook for Indian IT will also be better. But just take a look at the kind of return that we've seen in Indian IT from 1st of June. That's when the rally started. TCS up 20%, Infi up 30%, HCL Tech up 25%. Mid-cap IT names like Persistent have seen a rally of 40% in the last 2.5 months. 1st of June is when that big rush towards IT started taking place. Emphasis is up 25-30%. So the reasons for the up move in the last 3 months is, one, there was defensive buying ahead of the budget, election, etc. 2, Q1 earnings suggest that earnings may have bottomed out. 3, there are rate cut hopes in the United States. And 4th, the main segment, BFSI, has reported better than expected results in Q1. And BFSI contributes about 30% to the overall IT revenue. But the risk from now on is that IT stocks have rallied in the hope that it's bottomed out and things will recover. But it's not that in Q1 we've seen any upgrades. If at all, we've seen a few downgrades. So there haven't been any upgrades which, justify the kind of up move that we've seen in the last 3 months. 2, the expectation is that in FY26, things improve. What if it doesn't play out? That's the earnings risk. And 3rd, now Nifty IT is barely 5 to 10% away from its post-COVID peak multiple. But, at that time, IT companies were seeing a strong, high double-digit kind of revenue growth. And now we're talking about a high single-digit revenue growth. But valuations are pretty much back to where they were. And for names like Persistent, Coforge in the mid-cap IT pack, valuations are even higher than what they were post-COVID. So that's just, two bits about what's happening in IT right now. Hemang Jani is now with us on the show for the last 15 minutes. Hemang, comment on IT, what we've seen, especially mid-cap IT on fire.
Yeah, good afternoon, Rima. I think the IT sector has reported a reasonably good set of numbers, be it large cap or mid cap. Also, a couple of things that stood out was that the BFSI, there are positive data points. The hiring is back, and the sector actually did not do well for an extended period of time. Only in the last 2-3 months, we are seeing kind of a catch up. So I think, as a part of the sector rotation, you're seeing some action there. And we think that within the entire space, mid-cap IT will do much better because the numbers were better, the valuations are slightly, better. And we do think that there is a larger correlation of the mid-cap companies with the US markets. So something like a First Source, Zensar, these are the companies that we think are relatively better placed.
Okay, so that's a take on mid-cap IT. By the way, let's look at Hindustan Zinc. The stock has taken quite a knock now. It's down almost 10%, 9.5% lower. The OFS pricing seems to be a bit of a disappointment. The offer for sale from Vedanta is coming at, I think, 486 rupees, if I remember the exact figure. And that was always a discount to the market price, even, on Wednesday and then today as well. That gap remains 9.5% lower. Hemang, hi, good afternoon. What did you make of this news? The OFS coming in, instead of the government selling, it's, the promoter selling, Vedanta itself selling. And the pricing, I think, is not something the street has liked. But what's your view on the stock, the company, and what would you do?
Clearly, the fact that promoter increased the size and the overall demand was not that encouraging. The issue will sail through, but I think one will have to really see what kind of response finally do they get. I think rather than going in for Hindustan Zinc, it would be good to focus on some of the other metal companies because they have corrected. You're seeing a bit of a better data points, and even the base metal prices are showing some sort of a rebound. So I think Hindalco, Tata Steel, are the better bets. Even Vedanta, if the issue goes through, probably you will see a good amount of pop in Vedanta. So I think these are the names that you'll be more comfortable buying into at this point.
Okay. All right, Hemang, stay on. We'll have some more questions for you in just a bit. Right now, need to take a very quick break with the news that the market is soaring with the Nifty up 400 points. Back in just a bit with the last leg.
Out there, so if someone wants to buy Nasdaq directly, I think that's a good avenue to go for.
भारत को किसी कोई भी हॉस्पिटैलिटी का सामर्थ्य भारत में सबसे ज्यादा है। अगर ये सिद्ध हो चुका है तो साथियों, हिंदुस्तान का सपना है कि 2036 में जो ओलंपिक होगा वो मेरे हिंदुस्तान की धरती पर हो। इसके लिए हम तैयारी कर रहे हैं, उसके लिए हम आगे बढ़ेंगे।
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
मुझे गर्व इस बात का भी है कि हमारे सीईओ आज दुनिया भर के अंदर अपनी धाक जमा रहे हैं। भारत के हमारे सीईओ विश्व भर में अपनी धाक जमा रहे हैं। हमारे लिए खुशी की बात है कि एक तरफ मेरे सीईओ दुनिया भर में नाम कमा रहे हैं, भारत का नाम बढ़ा रहे हैं, तो दूसरी तरफ विमेन सेल्फ हेल्प ग्रुप से 1 करोड़ मेरी सामान्य परिवार की माताएं बहनें लखपति दीदी बनती है।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
140 करोड़ मेरे परिवारजन अगर संकल्प लेकर के चल पड़ते हैं,
Welcome back. So the move has been absolutely breathtaking today on the street. Hemang is still with us. Hemang, we spent a lot of time discussing Ola, but let's also talk about M&M. M&M has had another superb ride, and I think this new Thar launch, it's only invigorating investors even more. Again, valuations, that's the question. Do you still like the stock?
I definitely think so, because Surabhi, if you look at the entire auto sector in the last, let's say, about 1.5 years, if there is one company which has stood out in terms of very smart product launch and the revenue market share gain, I think Mahindra clearly has done much better job even versus Maruti or other players. And which is reflected in the way the market share movement has been there, and particularly in the automotive SUV category, they are by far the market leader in terms of market share. Also, you're seeing a bit of a revival in the tractor segment, which is a slightly better margin profile. So I think though Mahindra has done so well, I think given the way they are going about their product launch and the overall market share, I think there is some more room to go on the upside.
What about DLF? That's the big real estate stock which has moved up. Nimesh was telling us that there is some buying at the desks for DLF. There was a JP Morgan upgrade. In the real estate pack, which one do you favor?
So Rima, if you look at real estate sector, if there is one pocket which has seen the maximum price increase and where DLF has maximum presence is the NCR segment, and given the product portfolio that DLF has, both residential and the commercial, where the yields are showing a little bit of improvement with the improvement in the net debt position, I think DLF looks to be a winner. And though the stock has done well, I think if one has to be with real estate pack, DLF would be our #1 pick there.
Okay. As we're in the last, had a good week. CDSL is going home with a gain of almost 9 to 10%. And then, of course, we've been discussing mid-cap IT. Ethos is looking good. 8% up on Ethos as well. Lots of high flyers over there. On PB FinTech, Hemang, what thoughts? Do you like any of these so-called new age companies or platform companies?
Companies stood out for us. One is, of course, PB FinTech, which has done well. And in the con call, the company indicated that they are also looking to, get into the personal finance segment and lending business, which may create, additional trigger in terms of, earnings, etc. Also, delivery, which has not done so well in the last 1 year, being a platform company, I think the numbers were good, and even the presence that it has across the value chain, I think next 2 or 3 quarters the company should do well. So PB Fintech and delivery are the two platform stocks that we like at this point of time.
In mid-cap IT, particularly on First Source, it's a stock which has moved up 70% in the last 3 months. Yes, the company has gone ahead and raised the revenue forecast, but we're still talking about low double-digit kind of revenue growth. So a 70% up move?
So Rima, typically the mid-cap companies, they are high beta. So whenever you see the delta change in terms of numbers, in terms of outlook, the price reaction will be, too much, which is what we have seen across the market also. So I think it has been a laggard for a long time. So though the stock has moved up 70%, as you rightly said, in terms of valuations, it is still, looking quite attractive, about 15 to 18% discount to some of the similar size mid-cap to large-cap companies. So I think people want to have a pie of the company wherever the guidance is upgraded with slightly better margin out.
Okay. All right. Hemang, thank you very much for all the views today. Good to have you on, and you have a nice weekend. We hope to catch up again soon. We're down to the last 2 to 3 minutes of trade now. So let's wind down what has been a really spectacular session for the market. The market's now just a whisker away from reclaiming the levels where it was before we had the whole Manic Monday yen carry trade storm hit us. This is a powerful recovery, 400 points up. So let's take a look at the leaders. Technology all the way. Wipro, Tech Mahindra, TCS, HCL Tech, LTI Mindtree. So the gains are stretching anywhere between 2% to 4.5%. Beyond technology, some of the auto stocks have been really revved up today. Ola Electric, obviously, beyond the Nifty, is the stock of the day. Takes all the applause over there with that 20% move. But on the Nifty, M&M, Tata Motors, these are stocks that have had a good run. By the way, there's been some profit taking on Maruti. Maruti didn't quite hold up like some of its other peers. The other part of the market that really supported the bulls was banking. So the Bank Nifty is ending with a gain of over 1.5%. And a lot of the big constituents like ICICI Bank, HDFC Bank, all up anywhere between 1% to 1.5%, 2%. So all round green screen on the Nifty.
And a near 2% rally on the mid and the small cap index, and closing the week on a winning note. So the mid cap and the Nifty index were higher by 0.7% for the entire week. Outside of the large indices, Ola Electric is clearly the stock of the day, 20% upper circuit on that, 133 in terms of the last stick. Mid cap IT names like Birlasoft, First Source catch your attention. DLF posts the JP Morgan upgrade, zooms up 5.5%, and then you had strength in IEX, NBCC, Hindustan Copper on the way up. On the way down, Hindustan Zinc got a bit of a slamp down nearly 10%. But with that, we're going to wrap up trade for the day, for the week. Thank you very much for watching this show. Don't go anywhere. Our special editors roundtable is coming up after the short break.
एक दिशा निर्धारित करके चल पड़ते हैं, कदम से कदम मिलाकर, कंधे से कंधा मिलाकर अगर चल पड़ते हैं तो चुनौतियां कितनी भी क्यों ना हो, अभाव की मात्रा कितनी ही तीव्र क्यों ना हो, संसाधनों के लिए जूझने की नौबत हो तो भी हर चुनौती को पार करते हुए हम समृद्ध भारत बना सकते हैं। हम 2047 विकसित भारत का लक्ष्य प्राप्त कर सकते हैं।
Well, you've mentioned trigger links, and that's quite an important part of migraines, a trigger which results in a migraine. Can you just tell us what is the most common trigger that one comes across when it is when one gets a probable migraine?
The triggers are generally divided across 3 different groups. One is the physiological within the body triggers. 2 is from the environment and lifestyle. And there are some triggers which are beyond control. The commonest trigger that we see in our part of the world is related to the weather conditions, the type of temperatures we have, the heat, humidity in most of the cities for almost 6 to 8 months of the year. And then again, you have lifestyle-related triggers, which are the habit of not having breakfast on a regular basis amongst most Indians, and school children having to leave so early for school, they really rush with just a glass of milk. They don't have a proper breakfast. Skipping meals, the fasting habits across different religions in the Indian subcontinent is responsible for throwing up a lot more migraines. And stress, where stress leads to lack of sleep, poor quality of sleep, and now in modern day times, you find increased screen exposure. Computers have become an essential part of education, laptops, and the mobile phone. Mobiles are small screens. They induce a lot of stress and strain, which can be a trigger for migraine. And apart from this, certain changes in the body, for example, the fluctuating levels of estrogen, which happen during the menstrual cycle of a woman, leads to, is a trigger for more migraines in women that we encounter. So these are some of the triggers. And then you have foods which are different from the rest of the world. It is well publicized, well published all over that chocolates, cheese, and red wine are the commonest cause of trigger. But when you come to see it in practice, these are not the common items which are consumed by most Indians. Yes, of course, they are correct triggers: aging cheese, chocolates, and red wine. But we have different food items which have the fermented food items like idli, dosa, dhokla. These are items which can also give rise to migraine attacks. And then rarely you come across different triggers. Triggers are different across individuals who suffer from migraine. So they are not the same for everyone, and one has to be alert that triggers are not seen always and not easy to identify. In about 70 to 80% of patients with migraine, you can identify the triggers, but you have to remember that there are 15 to 20% of patients in
Well, a blockbuster rally on Friday lifted the sentiment on Dalal Street, helping the Sensex and the Nifty end the week in the green. But despite that, 50% of the Nifty stocks are negative for this week as the tug of war between the bulls and the bears continue. Hello and welcome to Editor's Roundtable. Today, I'm of course Sonia, and with me I have Prashant, Nimesh, Nigel, and we have a special guest with us today in the studio. Nilesh Shah of Kotak Mahindra AMC is here with us in the newsroom. Nilesh, thank you so much for being here. It's such a, it's such an interesting time, right? Interesting week for the market. With even the kitchen sink thrown at the market, this market is back, and how? I mean, that just speaks about the kind of support that we're getting from the domestic institutions.
Nilesh Bhai once told me at an event, he said, it seems like God is an Indian, right? Whatever you throw at this market,
it's just bounces back.
Yeah. Something is there for Fridays. I don't know what's happening every Friday. The way markets come back and pull back is how, we probably just be in a sideways or a negative market for the entire week till Thursday, and all of a sudden Friday, it's just like, from nowhere today's rally came, right? I mean, 400 points on the Nifty, and we've just recovered all the losses what we saw throughout.
God is Indian. He doesn't want to spoil your weekend.
and he particularly likes Friday. So, I think, but let me just take two minutes to outline what has happened, because we've had a really, I think we will remember this sort of 2 weeks, the last 2 weeks, because they've been really, I don't use the word seminal lightly, but really something for global macro markets in that sense, right? We've had Walls, for example, went to, they were crisis grade, back to 2000, 2020, 2008, 2020 level walls in many markets. And all of that has cooled off and come back to, it's almost as if nothing happened. If you went to sleep, on the 31st of July and sort of woke up now, you'd say, well, we're right there. Nice Goldilocks kind of situation, not too hot, not too cold, waiting for central banks to ease. But in between, you had a bit of a mini heart attack which has happened. I'll not go through what happened back then. I'll just outline the bounce that we've had from the recent lows. The low which was made for global markets was the 5th of August. And just some numbers will give you the idea. First of all, Nasdaq's recovery over the last couple of days basically now means that it's actually flat on the month now. I mean, it's not down 4%, 5%. At one point, it was down 9%. It's not. It's flat on the month. So that's the kind of recovery we've seen. S&P 500 has added about $4 trillion in market capitalization from the low on the 5th of August. I mean, you know, you're throwing around trillions of dollars. And there was an FT article which said, well, why is the Japanese market trading like a penny stock? But this is the S&P 500, and it's added $4 trillion from the lows. NVIDIA, one stock, added $700 billion in market cap from the lows on the 5th of August. I was looking at a particular the semiconductor space is the real leader in the US. And an ETF which tracks it closely, it's widely followed, is up 18% from that low on the 5th of August. The CBOE Wix, the wall, I mean, that's basically back to pre-jobs data, back to 15 levels. The high was 65. So, I mean, the question really is, do we go back to that same kind of looking up? Maybe the pace varies depending on who you ask, but the trajectory is up, and we've kind of put all this worry behind us. Also, Sonia, I was looking at the NSE 500 group of stocks from the 31st of July till now, because the high for that index was the 31st of July. It's a broad-based index. I could only find 60 stocks out of 500 which are down more than 10%. Still, as of today's close.
So the big question is, why is the market sort of ignoring all the negative news flow, right? And just bouncing back. Nilesh, you want to comment on that? I mean, it's been a phenomenal market, so resilient, bouncing back in every bad news, and now where we're at, right? Once again above 24,000. But do you think that there is some sort of a time-wise correction coming, or not quite?
So answer is yes and no. Yes, because there is liquidity, very strong, and there is more money waiting to invest on correction. Market is never kind to such money. It goes up, sucks everything, and then only gives the correction. Two, this money is coming with confidence. There was a question asked in one of the meetings where someone said, why are you launching funds? Isn't this expensive market? And I said, do you want to short the market for next 5 years? If yes, then I will not launch the fund. That guy kept quiet. So money is coming with confidence. They are optimistic about future. And third, between this combination of fundamentals and liquidity, our competitors are scoring self-coal. You can't go to China because of Taiwan issue and real estate worries and slowdown. Russia is right off. Brazil with communist government is gone. So effectively, we are also getting allocation because there's no other competitor. Now you put three things together, no doubt market is rising.
And the market is doing what it is doing without foreign inflows, right? I mean, so far at least.
Now imagine if they have to come and buy, what will happen?
I mean, it's just... But do you think the flows story will continue? 30, 40,000 crores now is coming into this market every month.
Prashant bhai, between FY21 to FY23, when markets delivered like 100% combined return, more money went into currency notes, double than what comes to mutual fund. So I have to just convince the person on the street कि भैया पैसा घर पे मत रखो, mutual fund में डालिए. That will ensure that my flows will double from what level I am getting. How difficult it will be for me to convince an average guy that घर में रह के currency note double नहीं होगी. It's very difficult, I believe, but I will keep trying.
I think people have understood, right? I mean, they look at the SIP data on a month-on-month, it's only going up. The domestic equity is so strong. Even X of SIP is a very strong equity cult now. Everybody, I mean, the remotes of areas is where, you're getting inflows into the equity market. So, but, the other point is so much of cash is sitting on the sidelines. Mutual funds are sitting on cash. The larger HNIs and, the family offices are sitting on cash as well. So point taken that, you can't say a very sharp correction, but from a valuation point of view, where do you stand right now? I mean, are you getting a comfort that you can deploy more money into, say, defense or those kind of sectors?
So we'll have to be very selective. In a lighter vein, this is Amar Akbar Anthony Market.
Yes, I was waiting for that, Nilesh. God is an Indian, I loved it. But Amar Akbar Anthony on a Friday evening, go for it.
So, यहाँ पे अनहोनी दिख रही है with the kind of rally. And there are stocks like Amar Bhai, upright police officer, good fundamentals, good valuation. You stick to them, you will make money.
The naughty.
Of course, there are also stocks like Anthony Bhai where fundamentals are good, but valuations are too expensive. Now Anthony Bhai has to become like Amar Bhai, which he happened in the film, and then you will make money on them.
So I have a question. Do you come up with these on your own, or do you have some research team to help you with these nuggets?
No, this is all on my own.
Nilesh Bhai is all in his own. He'll always give us some of the other headlines. So he's now got that punch of giving headlines to media. So we really like that.
Okay, but let's also focus on what happened this week, right? Mining stocks were in focus after the industry faced a major setback. The Supreme Court verdict allowing state governments to levy additional royalty retrospectively and prospectively is expected to impact many mining companies. Nigel, you've listed down the implications on various mining companies. Take it away.
Well, that's right. The Supreme Court verdict actually was a blow for the mining companies. And mining companies, yes, they were down, but they didn't get knocked out. And that was something that was encouraging, because what the Supreme Court said, that the state governments, via royalty, via taxes, they can go ahead and levy taxes both retrospectively as well as on a prospective basis. So initially, people were very, very nervous because of the retrospective part of it. And if it was on the retrospective part of it, and if it had to be paid immediately, it would be a large proportion. If you look at the contingent liability as a percentage of the EBITDA for FY24, well, it would be very, very large. But the Supreme Court's verdict gave some hope, because there were a couple of clauses that they put in. They said that the payments can be staggered over the next 12 years. They also said that the states will not impose penalties or tax for past demands, which was encouraging. So because of this 12-year clause, well, the impact didn't look that much. For Tata Steel, they already made a contingent liability of around 17,350 crores. Now they'll be paying that over the next 12 years or so. And we have Phillip Capital that's put in a number very, very marginal in comparison to what their target price was. Similar is the case with SAIL. They had marked a contingent liability of around 3,000 crores, but it has to be paid over a long time. So the impact is very, very limited on the target price. NMDC as well, they had put out a contingent liability of around 4,400 crores, but it could be passed through as well, and it will have to be paid over the next few years. So some part of that will be pushed through to its clients. In all, this number, though they were looking big initially, but in fact, if they're going to be given time, then it doesn't look very, very big. And similar is the case with regard to NALCO. So all these numbers that came out post it appeared big, but because that concession was given off around 12 years odd, the impact is not that much. On a prospective basis, what about it? Well, we already had Jharkhand post the Supreme Court verdict in July itself. They went ahead and they tinkered with the rates. They increased the rates on coal and iron ore, on bauxite as well as manganese ore. And now the state believes that the other states as well, Maharashtra and other states, they will follow the way of Jharkhand. That is, don't increase taxes by that much, because otherwise, it doesn't become very, very viable for those companies. So that's why Phillip Capital, they've quantified it. They say that at most, most of these companies will have to incur only 1 to around 3% of the total cost of production. For steel companies, it could be a little bit higher hit, 400 to around 500 rupees approximately. But for aluminium companies, it won't be that large. All in all, it appears that yes, this Supreme Court verdict that came in on the mining companies, it was a knock at them, but it wasn't a knockout. So that's why the street did buy into that news, in fact, in Friday's trading session. Nilesh, can we get your comment on this particular case? Everyone was dreading it, but it seems now that, in fact, the outcome isn't that bad, because these taxes will be levied retrospectively, but they've given them timing. And also, Jharkhand government, they have shown the way. They've increased it by marginally, 50 to around 100, 200 rupees, easily digestible. Your take?
So, Nigel, you have explained very well with numbers. But the fundamental question will be, when you go and change laws retrospectively, and you expect corporate sector to pay for it, that doesn't reflect good on the governance side. We have seen when Vodafone's retrospective tax amendment came, it did impact our valuation, our reputation in the market.
Indeed.
We are now 5th largest economy. We should be behaving like a 5th largest economy. This kind of retrospective changes are more meant for, let's say, emerging markets. We are still emerging market, but 5th largest economy, this doesn't look good.
Nilesh, actually, I was going to ask you that as a second question. First, I wanted to ask you what do you think about the impact, but you've answered it, because I was thinking it reminded you of the 2011, 2012 days, when we had these retrospective taxes, put the industry into a bit of a tizzy, a couple of sectors get hit. So let's hope that, better sense prevails. And as of now, most of these states at the center as well as the state, you have the similar government. So hopefully there is, nothing on a prospective basis that will hurt the industry as well.
The only good thing Orissa is the only state in India which has revenue surplus. With this mineral royalties, I just hope and pray that states uses them sensibly, like Orissa has been using it.
Correct, correct. So, that is, of course, the one big headline of the week. The other big headline was a new listing, right? Ola. And it's been perplexing for everyone, the way Ola has rallied. But I just wanted your thoughts on that. How does one approach it? Because the company is still loss-making. Yes, there is EV adoption happening. Yes, it's kind of a hope that things will grow. But what do you do from here?
So essentially, Ola is a leap of faith. You are taking a call on entrepreneur. Will he be able to deliver a product with supply chain management, which will eventually make money for you? There are a couple of leap of faith required. One, is EV the future? Today there are question marks on that. There is CNG motorbike, fossil fuel can continue to work for a while. The second is if not technology, the supply chain management. Will we have enough material? Will we depend upon China? Will there be consequences for the same? So when you're investing in this kind of a sector or a company, you are essentially taking a bet on the promoter that yes, he'll be able to surmount all the challenges.
Okay, well, you never know. I mean, it has come as a surprise to everyone the way the stock has moved. So now let's see from here on. But yes, all eyes will be on the new motorbike that Ola has announced. But with that, it's time for a short break on Editor's Roundtable. We continue the discussion on the other side, so stay with us.
Not be easy to identify.
The Indian markets have not just grown, they've broken several records in the last 25 years. India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and
Welcome back to Editor's Roundtable on CNBC TV18. Now, there was lots that took place this week. One thing that stood out and what we're going to talk about is PSU earnings. There have been some hits, there have been some misses this quarter. FY25, in fact, has started on a stronger note, but we've seen big rallies as well in stocks. So, Nimesh, you have some details for us?
Well, in fact, FY25 has not started on a strong footing. In fact, the hits and the misses were more in favor of misses than in terms of hits. I was looking at the Motilal report today, and they said, for FY25, there are only 64 companies where there's been an earnings upgrade of more than 3%. On the other side, there are more than 108 companies where there's been an earning downgrades of more than 3%. So, in that sense, it was not so great. I just want to add a bit on the PSUs. It's been a mixed bag for the PSUs. I'm largely saying this because there has been so much of retail interest. I thought I'll just put some data in terms of how the PSUs have done in quarter one. First, the big misses of quarter one in terms of the PSU basket. Midani was a big underperformer in this quarter. The EBITDA margins are down 780 basis points. That's the kind of miss we've seen there. All the three OMCs have also seen a big miss in terms of EBITDA. But here I'll put in a caveat that they've all have taken a hit because of the LPG subsidy, which might get reversed in the second half of this year. So not much to read into that. But RVNL, Bharat Dynamics, Reltel, BML, all have seen a bit of a mixed bag in terms of earnings. Only Reltel was a bit of an outlier as far as the EBITDA margins are concerned. Having said that, there were some outperformers as well, who've done well. Cochin Shipyard was a classic example. The EBITDA margins are up 600 basis points. So was the case with Mazgaon Dock as well. They've done relatively better in this quarter. So was HAL Hindustan Aeronautics, which was not a big disappointment. It was actually in line to slightly positive as well. But if you look at this kind of PSU stocks, on an average, where the misses have been quite higher, all the stocks have shaved off between 15 to 25% from the recent peaks. But if you look at the valuation picture, it's still very, very expensive. Look at Bharat Dynamics. It's still trading at almost 40 times, whereas the 5-year average is nearly 30-odd times. Cochin Shipyard is at 48 times even now, whereas the average has been just 14, 15 times. So is Garden Reach. It's still quoting at around 31 times versus the average of 17 times. So it's been a mixed bag, in the PSU basket. But Nilesh bhai, you've been saying about the Amar Akbar Anthony, the Anthonic part of the market. We have seen so many disasters in quarter one. Is this a bit of an eye-opener for retail investors that watch out for earnings, and now they're clearly seeing cracks in many companies now?
Undoubtedly. There are many PSUs where turnover is almost flat over 5-year period. Profits have marginally gone up, and stock prices have gone up
5x,
like a 6 hit from Rohit Sharma's bet.
Yes.
For a while, it looks like it will defy gravity and go to the sky, but finally, law of gravity applies and ball does come down.
Sure.
So same thing will apply to this PSU stocks.
Nilesh bhai, not only the PSUs, but I've seen a couple of even the private sector defense companies like Bharat Dynamics, MTA Technologies have reported very, very poor numbers in quarter one. Maybe there is a bit of seasonality as well. But the fact that they've rallied so hard, is this a bit of a warning sign that one need to be very careful? And in that context, the fact that so many mutual funds are launching new NFOs in the defense sector is a bit of a worry?
So mutual funds probably are launching these schemes with a much longer term time horizon. Second, you'll have to also adjust return expectation.
Right.
If you are having moderate return expectation with long-term time horizon, then yes, this might be the fund for you. But if you are expecting last year's performance in next 1 year, I mean, clearly stay out of it. The Ukraine war is showing us that a mighty tank can be blown with just $15,000 drone. Now, if your companies are investing in futuristic defense technology, maybe it's a buy. But if you're a dinosaur making tanks, then probably there's no future. Second, you should have capacity to make and export.
Yeah.
If you are fully booked, I mean, there are certain companies where they are booked for next 9-10 years. Yeah. I mean, how will they grow? And finally, your market can't be just domestic. You have to go to export market. Because our defense budgets are not going to grow in very high digits. It will be either high single digit or low double digit. And on top of it, there are certain things which we will have to import despite localization. So the budget available for domestic market will be fairly less, and hence go for companies which are futuristic, which are into exports, and which have capacity to deliver.
Nilesh bhai, just 2 points I wanted to address. One is politics, because given the fact that we are Teflon coated, bulletproof, and flows overcome everything. Elections are around the corner. Again, state elections. Jharkhand, Haryana, Maharashtra, J&K. Do you think in about a month and a half or so, do you think it makes a difference to the market? How closely will it be watching politics this time?
So state elections anyway don't have material impact onto the market unless until something dramatic happens. And my feeling is that as of today, market is pricing in a 5-year term for the current government, despite being a coalition government. We have seen in the past coalition government continuing to run the economy and country reasonably well. So market is pricing continuity of government and governance. If the state election results indicate otherwise, I don't. Otherwise, then certainly there could be some reaction from the market. But generally, state elections don't necessarily change the market's trend.
Okay, well, there's no point living in the future and worrying about this. We might as well just enjoy the present and
enjoy the
weekend for now, right? I mean, it's a long weekend for some, not for us. But in any case, weekend coming up. Thank you so much, Nilesh, for being here and taking the time out. As always, with that, it is a wrap on this edition of Editor's Roundtable. More news and updates continue on the other side.
On safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Dr. Mufiam, I'm going to start with you. The Lancet study says that 50% of Indian adults are unfit and not physically active. Why do you think that is the case?
Hi, Ekta. Thank you for welcoming me on the show. I think there are 2 or 3 reasons mainly. One, I would say, is urbanization and lifestyle. So urbanization, there was a 2023 study which actually showed that that's led to around 40% increase in lack of time for physical activities, only because people have adopted to motorization as transports, use lifts instead of climbing, and various other things. The next thing is in terms of cultural acceptances. So we as Indians don't believe, and there's a lack of mental awareness that exercise is regularly needed. And a 2022 study actually showed that 40% of Indians don't believe that exercise is required for sustained a healthy lifestyle. And finally, there was a 2023 study that showed high stress and long working hours. So what individuals actually said is that 45% of Indians quoted that as a reason for lack of time to exercise for having a healthier body. There are 2 other factors. One is technology. A 2022 study said that there's a 150% increase in screen time. Tablets, computers, phones. People are addicted to their Insta profiles or their Facebook, Twitter, whichever handle. All right, and people don't have time to physically exercise. And then diet, like you correctly said, Ekta. There has been a 40% increase in processed food diets that Indians have consumed over the last 10 years or so. And that, including the added predisposition to having sugar. We have so many festivals and we are so addicted to sugar that that's a deadly cocktail that the Indians can ill afford. And that's why you're seeing not only one pandemic, which I believe we have already reached. We are the number 3rd country in the world to probably have obesity, but we are number 2 in terms of diabetes. And diabesity is a bigger problem than obesity alone, because that's taking lives, affecting our loss in man hours and affecting overall growth in India.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC TV18 and CNBCTV18.com.
Hello and welcome to Business 360. I'm Shireen Pan. The headlines that we're tracking for you this evening: a blockbuster Friday rally on Dalal Street. The Sensex up 1,300 points. Nifty gains nearly 400, wiping out all the losses this week. Despite the rally, nearly 50% of the Nifty stocks end the week in the red. Election Commission announces dates for assembly elections in Jammu and Kashmir and Haryana. The voting will take place for 90 seats in J&K across 3 phases, with the first phase on the 18th of September, all 90 seats in Haryana to vote in a single phase on the 1st of October, results to be announced on the 4th of October. Shares of newly listed Ola Electric hit the upper circuit again. The launch of a new electric motorcycle and a 32% growth in the first quarter revenue lifts sentiment. The US government cuts prices of 10 patented prescription drugs by the federal health insurance scheme by up to 79%. The move will impact Indian pharma companies. Complaints over the food served in trains surged 500% in FY24, reveals an RTI data from IRCTC. In the last 3 years, nearly 13,000 people complained about the food, but only 3 contractors were punished. That's a CNBC TV18 exclusive. Doctors across India protest the rape and murder of a 31-year-old trainee doctor at a Kolkata hospital last week. The Calcutta High Court slams the TMC government after vandalism inside the hospital premises on the 9th of the 14th of August. The centre directs heads of government hospitals to file institutional FIRs within 6 hours of any incident of violence. The death toll in Palestine due to Israeli strikes crosses 40,000 according to Hamas-run Gaza Health Ministry. Israel issues fresh evacuation orders for parts of Khan Yunis, further squeezing the displaced population. Israeli settlers attack West Bank, killing 1 person and injuring dozens. Ukrainian troops advance inside Russia and claim to be in control of a border town with crucial energy infrastructure. Russia claims NATO and Western countries planned the attack on Kursk region and vow to hit back. Actor Rishabh Shetty wins the National Award for the Best Actor for Kantara. Nitya Menon and Mansi Parikh to share the Best Actress honours for Tiruchitra Balam and Kuch Express, respectively. Malayalam film Atam adjudged Best Feature Film. The winners will be felicitated by President Murmu in October. Well, let's start with the market action. It turned out to be a blockbuster rally on Friday, which wiped out all the weekly losses, helping the Sensex and the Nifty close strongly in the green. The Sensex up more than 1,300 points today, and the Nifty added almost 400, 1.5% higher. Look at the mid-cap index, 1,000 point up on the mid-cap index. The Nifty Bank up by almost 800 points. That's a gain of about 1.5%. So a late surge being seen there and a big rally across the indices for the week. For the week, both the Sensex and the Nifty have ended with gains of 1%. Prashant is standing by now to wrap up the market action for us. A strong close, Prashant.
What a turbulent fortnight we are closing. I mean, the market selling off in a dramatic fashion, actually almost a mini heart attack in the initial part of this month, and then spending the last few sessions in repair, and of course culminating with today's massive move on the upside. The Nifty ending with almost about 400 points gain, taking out some near-term sort of resistance levels like the 20-day moving average. The Nifty Bank, which of course has been the clear laggard, also posting almost about just under a 2% pop today on your screen, both the Nifty and the Bank Nifty. Mid-caps and small caps, of course, also raging higher, about 1.75% higher on both these indices. You know, it's just sort of looking much better. I mean, the sentiment here in India had turned overly negative, at least in the very short term. Indicators were pointing to that. And of course, the fact that we came out of the market holiday with good data out of the US, which showed that, you know, the growth scare perhaps was just that, a scare. And equities reacting very favorably to 2.5% overnight. I mean, I think is what was the cocktail which led to the spectacular gains here. I mean, actually, you could look at it as a recovery from the lows or, of course, fresh gains. Now, Nifty and large caps, which did well, a lot of technology, like what we had day before yesterday. Wipro, Tech Mahindra, TCS, top of the list there. But there were also